Welcome back. Thanks for staying tuned into Power Breakfast on CNBC-TV18. Now let's move on and talk about the U.S. markets. The Wall Street ended lower. This came in over concerns of bad loans seen in the banking stocks that took a hit. Investors also juggled the U.S.-China tensions along with the ongoing government shutdown. Let's go across to CNBC's Bertha Coombs, who's here to give us a wrap on what happened on Wall Street.
U.S. markets were down across the major indexes in Thursday trading, reversing earlier gains when bank stocks started to decline over fears about bad loans. The Dow falling 301 points, the S&P 500 down 42, while the tech-heavy Nasdaq slid 108 points. Regional bank stocks sent markets lower on Thursday over concerns about the health of their lending businesses. Shares of two big regional banks, Zions and Western Alliance, both falling more than 10% on the day. Zions said that it was facing a sizable charge over bad loans to a couple of borrowers, while Western Alliance alleged that one of its borrowers had committed fraud. That, along with some recent bankruptcies in the auto sector, are raising broader concerns among investors as to whether instances of bad loans might be a sign of a coming crisis. And Nestle announced Thursday that it is cutting 16,000 jobs, or roughly 6% of its workforce. The world's largest packaged foods company says that the move will help it cut costs and win back investor confidence. The maker of Kit Kat bars, Nespresso, and Perrier is trying to reverse stalling sales growth as it faces U.S. import tariffs. Shares of Nestle shot up almost 10% on the Swiss exchange after that announcement.
Thank you so much for all that, Bertha. But shifting focus, the former Federal Reserve Vice Chairman Roger Ferguson says that a majority of CEOs expect a major transformation of jobs due to AI in the next 4 to 5 years. Listen in.
For a period of time, they were appearing to expect a recession. That fortunately did not occur. So right now, I think they're mainly in the stagnation category, so call it 64% there. 25% think they will have sort of trend growth, so they're slightly more optimistic. The biggest news ultimately is something that you've been talking about, and all of us have, which is their expectations on AI. And there, a large majority expect major transformation of jobs in the next 4 or 5 years.
Meanwhile, Jefferies' David Zerver spoke about the tailwinds for the market from Fed's rate cut. Listen into what he had to say.
You had Powell this week talking pretty dovishly about his belief that those risks you just highlighted are from the Beige Book and from the Fed are weighing into the factors that are going to be moving rates over the course of the rest of this year. And certainly we're looking at least a couple more and maybe a couple more into early next year to really get the rate side moving and the tailwinds from monetary policy easing into the system relatively soon. And that's hitting the forwards, that's hitting expectations. We've got the 10-year almost below 4%, and 100 basis points lower in rate expectations since the beginning of the year. That's a pretty positive tailwind.
And now getting you the latest on Trump-related developments, we have Dia joining in with the Trump-related updates on the Trump Watch segment. Dia, over to you.
Good morning. Starting off with a fresh warning from U.S. President Donald Trump to Hamas. If it continues attacks inside Gaza, Trump said the killing violates the ceasefire agreement he helped to broker with Israel. In a post on social media, he wrote, "If Hamas continues to kill people in Gaza, which was not the deal, we will have no choice but to go in and kill them." Now, Trump has also confirmed that he will hold a second meeting with Vladimir Putin, saying that the talks will take place within 2 weeks or so. The meet is expected to happen in Budapest, and it follows a 2-hour phone call between the two leaders. And in another major move, Trump said that a deal with Germany's Merck KGaA has been set off, cutting the price of its fertility medicines in exchange for relief from threatened tariffs. The White House says it is part of Trump's broader effort to make IVF treatments more affordable. That's all for today, Vinny. Now back to you.
Thank you so much for that, Dia. But let's move on and actually sip into a very short break on that note. We're going to come back and talk about commodities, so stay tuned in for that. Welcome back to Power Breakfast on CNBC TV18. Time to focus on commodities, and that commodity that has been glittering through the year has been gold. I think it's become our routine, Manisha. Good morning. Gold, new record.
Oh, yes, before you and me say good morning, gold does that good morning for all of us. Yes, yet another record highs. We are up by 64% in this year. $43.80 an ounce is now taken with. So, the way gold is increasing, gaining every day, almost $40 to $60 an ounce, and much of that happens in Asia, does perhaps tell you a story that it is mostly Asian countries and perhaps China doing much of this buying. If you look at the silver prices, we've seen 85% of gains in this year. $54 an ounce is where we are trading. And for the Indian markets, it's trading at around 1,70,000 rupees a kg right now. So it's more than doubled in last 1 year when you look at silver prices. And it doesn't stop there because palladium is trading at a 3-year high. Platinum is trading at a 14-year highs, and we have seen some stability coming for copper as well. The thing, the commodity that has continued to decline in this year clearly has been the crude oil prices, headed for a third weekly decline. Crude is down 20% in this year. It's trading at a 23-week lows right now. And not just crude oil prices, gasoline, heating oil, natural gas, everything is trading at a multi-year lows as the markets anticipate that the supplies are going to be more going forward and the demand simply not catching up.
Okay, Manisha, thank you so much for that. Important to keep an eye out on what's happening in the world of commodities. But with that, we're absolutely out of time on this edition of Power Breakfast. Thank you so much for tuning in. Up next, a Bazaar Morning Call.
Brought to you by Candia, lifestyle jewelry from Kalyan Company. Co-powered by SBI. Best है सबको पता है.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hello and welcome to a fresh new edition of Bazaar Morning Call. We are coming to you live as always from the CNBC-TV18 Motilal Oswal studios. All of us in festive attire. It's a beautiful looking set as I'm seeing it for the first time. And right at the outset, let me wish all of you, your families, a very, very happy Dhanteras. And of course, leading up into Diwali, I mean, wealth, prosperity, and of course, most importantly, health to all of you who are with us. With me, my colleagues Reema and Nigel. Guys, hi, morning.
Hi, morning.
Hi, good morning. You know the song, it's beginning to feel a lot like Christmas. I think we need a Diwali version. Just going by this beautiful set, the price action yesterday, and you know, everyone's dressed up in office. Well, you can feel the festivities.
Well, that's right. Wealth, wisdom, and well-being, right? I mean, that's what we're looking forward to. And hopefully, you know, we're bracing ourselves for a good festive season because the run-up actually was a little bit gloomy. And now it seems to be picking pace as well, but not a bad idea, Reema. I think someone should do that.
Actually, just think about it, guys. I mean, on the eve of Dhanteras, we got a almost 3.5–4% move on gold last night, right?
Ooh.
I mean, it's getting a little...
we said that even last week. We said that the week before.
Oh,
but it's
4% in one day?
Yeah.
I mean,
that's a bit much.
That's big. And at this level.
At this level.
So anyway, let's just take it from the top.
Checking Dhanteras to Dhanteras, right? So last Dhanteras, gold was at about 77,000.
Yeah.
And now we're what, 129, 1,29,000 for 10 grams? I mean, that's the extent of the rally from in 1 year.
Absolutely. You know, let's just take it from the top then in terms of where we are at, right? And I want to just start with, of course, a little bit about Russia and Ukraine. So President Trump spoke with President Putin. We know this because President Trump put out a sort of truth on Truth Social, and he essentially said that he's spoken with President Trump. And about a variety of issues and, of course, trying to end the war between Russia and Ukraine. He said President Zelensky of Ukraine is going to be at the White House tomorrow and he's going to sort of talk to him about how his phone call with President Putin went. And then Trump said that he's going to meet Putin in Budapest at some point, location undisclosed, but that's going to happen as well. Now, yesterday evening, you know, we had a clarification. Remember, when we came in yesterday morning, actually day before yesterday morning, you know, there was that excitement that President Trump essentially had said that he's spoken, or actually this was yesterday morning, that he had spoken with, you know, India, and that India promised that they're going to reduce the purchase of Russian oil and they're going to buy more US oil. Yesterday evening, the MEA essentially said, our MEA, the Ministry of External Affairs, said that they are not aware of any call that happened between both the leaders, which is President Trump and Prime Minister Modi. But they did not sort of confirm or deny what they're going to do about the oil. So I just want to make that very, very clear in that sense. And I think it's an important point. You add to that what we are waking up to with this morning, which is President Trump saying, well, he's going to make a fresh attempt at peace between Russia and Ukraine. And I think it still remains constructive in that sense. Now, what is not constructive is everything else. So look at US equities last night, down S&P down 0.6%, NASDAQ down about 0.5%. And out of the blue, you've got the regional banking sector in the US taking a big dive. So the KRW, Regional Banking Index, fell 6%, over 6% actually. And why? Because two regional banks essentially said that they were hit by frauds. You know, without going into details, and we perhaps can later, but it basically sparked off broader credit concerns across that small banking, regional banking sector. It's not new. We've seen this earlier as well. But I mean, you know, it's new this time in that sense. Gold prices, as we were just discussing, 3% plus, actually 3.5% last night. And just an incredible move on gold coming through. The 10-year lost 6 basis points. under 4%. Oil was down. It was basically everything risk off. Data to boot was weaker as well. So you had the Philly Fed, which came in at the lowest since 2021. You also had the New York Fed services data, which was weaker than expected. And of course, I mean, there's no end in sight to this U.S. shutdown. Treasury Secretary Besant saying that the cost of the U.S. economy could be up to about $15 billion per day. And markets, in response to all of this, if you look at what Fed pricing is, they're pricing 225 basis point cuts by the end of the year. So that's the picture. I mean, I started with something slightly maybe at the margin, a silver lining positive, which is Russia, Ukraine, President Trump trying again. But everything else which rolls after that, which is market action, the regional bank stuff, and of course, the data, I mean, it's not looking all that great. Now, just to come back to where we are at, and we are in a very, very good place with the rally that we've had. Yesterday, we saw a powerful follow-on rally, and we've actually taken out many important resistances on the upside. The next stop, it's an equality level, is 25,705 for the Nifty. The support comes in. It's moved up. I mean, the big one is 25,008 as we've been putting out. But now you've got to look at track this. Trail this actually, with the 40 hourly exponential moving average is 25,300 or so, 291 to be precise. Nifty Bank, by the way, is almost back at all-time highs, right? I mean, that is 57,628. So I'm not going to put out upside levels beyond this now. Let's see. Support is again the 40 hourly exponential moving average, which has been dragged up along with the index, which stands at about 56,692 or so. So, I mean, pretty good place, pretty good position. You've got this sort of, another push for peace by President Trump. There's this meeting tomorrow. So maybe when we come back on Monday, perhaps there will be headlines, etc. We don't know. So, we just sort of go into this weekend with all of this stuff. GIFT Nifty will come up. It'll give you a quick sense of how we're likely to start. We'll pick it up from there. 50 points lower, 25,600 or so is the implied open. The F&O positioning, the F&O data, Nigel has walked across with exactly that. Nigel, over to you.
Well, the festive season is definitely here, as the Nifty yesterday closed at a multi-month highs, and things have been looking good. But I'll tell you what, we talk about shorts being in the system and why that's a blessing in disguise. Well, the perfect example has been this series itself, because from the start of the series till now, we're up close to around 1,000 points, and the FIs that were aggressively net short at around 94%, well, they have covered their shorts to around 86% or thereabouts. So the power of short covering has been on display. Well, let's tell you about the FI data first up. Now they're showing us some money. They were underweight the Indian markets. Even if you compare it with, India's weightage in the MSCI Emerging Market Index, FI weightage actually is much lower out there. And now it seems gradually, the hope is gradually that money can gradually come back. And that's why we saw in the cash market, they bought close to around 1,000 crores. And in the F&O market, just take a look at index futures. The covering was to the extent of close to around 26,000 contracts, because they added 12,000 long contracts and they covered close to around 13,000 short contracts. So that's the kind of short covering bounce that we saw in yesterday's trading session. Keep in mind that they are still net short, 1.63 lakh contracts on the short side, as well as, in terms of positioning, close to 86% of their positions continue to be on the short side. But we keep focusing on the FIs. Well, let's focus on the other big participant, the clients. They have got this spot on. Remember, they have been building their long positions. It went to around 1.35 lakh contracts, and gradually, as the markets have bounced, they have unbound some of those long positions, so they continue to remain net long on the index. On the options side, the FIs wrote more puts than calls in yesterday's trading session. And because of the aggressive put writing, now the PCR has moved back towards the higher end of the range. Higher end of the range is around 1.65 or thereabouts. In yesterday's trading session, the PCR went to that range of around 1.4 odd. And two strikes were active. 25,500 put, extremely active in trade yesterday. 25,600 put as well, fairly active in trade yesterday. So let's get the levels up for you on the screen. The near-term support, going by the options data, is around this 25,400 odd mark. And yesterday you had a perfect trend there. That's the market ended at the high point of the day. The key support, though, comes in at around 25,000 odd, because that's the level closer on the 20-day MA. So till that level holds out, you'll be fancying your chances. The market wants to move towards this all-time high of around 26,300 or thereabouts. So the journey has started. If you're an adventurous trader, then you'll say, let's trail our stop loss, at around 25,000 and play for a higher upside. Otherwise, some part of your portfolio could be take some money off the table on the index itself, because you've already had a good run. The Nifty Bank's in focus. Support is the recent resistance, which is around that 56,800 odd, and we're just 250 points away from the fresh all-time highs, which could very, very well be here today itself. But it's going to be a very, very big earnings day. because from the Nifty itself, more than 35% of the index will be reacting to numbers. Infosys and Wipro, the stocks are expected to open up in the red. I will be interested to see what happens from there, whether the street wants to look ahead. The other couple of names later today that will be reporting their numbers. Reliance Industries, for me, that's the joker in the pack. That's what could take the Nifty closer to around that fresh all-time highs. And finally, over the weekend, banking stocks will be in focus. A lot of those big banks will be delivering numbers, and big boy Ultratech Cement as well. So the trend seems to be up, but maybe some kind of taking some money off the table in the near term may not be such a bad idea.
9 banks report numbers on Saturday, and the big ones, of course, are HDFC Bank and ICICI Bank. Let's get in some equity market opinion now. Mahesh Nandarkar of Jefferies says that within the consumption theme, it's the premiumization trend that offers higher long-term growth visibility, as evident over the last decade. He says it's not just across goods, but also services. And the simultaneous GST and income tax cuts are the triggers for FY26. The Pay Commission can further provide impetus over FY27, FY28. Their preferred premiumization plays are Eicher Motors, Interglobe, GMR, Amber Enterprises, Lodha, Radico Khaitan, and M&M. All right, let's get back to the U.S. markets and a global picture. Richard Yetsenga, the Group Chief Economist at ANZ Research, is now joining in on the show. Richard, thank you very much for that. Season's greeting from everyone here in everyone here in India. We're celebrating Diwali, so thank you very much for joining in. Lots happening, right, on the U.S. economy front. Rate cut expectations, the U.S. 10-year yield slipping below the 4% mark for the first time in April. The labor data has been weak. Gold has been on a tear. Tell us how you're seeing the markets now.
Well, I mean, in all of that mix, the good news is the data has been broadly fine. I mean, obviously, we didn't have the last payrolls number, but in aggregate, roughly as many misses, there have been kind of hits the other way. And so even though there's a lot of noise and a lot of things we need to keep track of, the economy seems to be pretty constant. I mean, in some ways, that's disappointing some of the previous expectations for a lot of Fed rate cuts. But it certainly makes me take things in my stride when markets move around a lot like they are, and we've got headlines about potential cockroaches and other sorts of infestations. If I go back to basics, the US looks like it's still handling what's going on in reasonably good shape.
So those cockroaches that you're talking about, you're referring to the regional banks and the slide that we had? Because it just seemed, if it is linked to that, there were only 2 cases. What got reported overnight, and it seemed a little more idiosyncratic, linked to those banks, specific borrowers, rather than a broader systemic issue with regional banks.
Look, I'm probably referring to the comment that where you find 1 or 2 cockroaches, there's normally a few more hiding, if not in plain sight, at least where people should have seen them. So, look, after the run we've had in credit, generally globally, given the narrow level of credit spreads, I don't think anyone should be surprised by some idiosyncratic problems. The real macro question is, and obviously those idiosyncratic problems matter if you're directly exposed, but the real macro question is, is there the tinder there for those idiosyncratic problems to start a brush fire that becomes a much bigger issue? And on that point, I'm still reasonably sanguine. I think in general balance sheets, private sector balance sheets at least, are in good enough shape actually that what we're seeing is likely to remain idiosyncratic and contained, rather than become general.
The cockroaches is the Jamie Dimon comment. When he
Correct.
said that you can see 1, 2, but when you see 1, 2, there are probably more, and that's the time when your antennas need to go up.
All right. Hi, Richard. Good to speak to you. I recall, Richard, our last chat, right, when you were telling us that ratings, well, it's good, but you'll be looking at some kind of reform measures that need to come about for the Indian economy. And we've got a couple of them, right? We have got some kind of action on the monetary front. We've got GST 2.0, that is a bit of a rejig in terms of our taxation policy here. And the hope is that the second half of this fiscal, the Indian economy actually does find its footing, and from there on, just look upward. Your reading of the Indian economy, as well as our markets, the FIs, they've deserted us for the last year or year and a half or thereabouts. But there are mild signs they're actually coming back. So your comment on both.
Yeah, some good points there. And certainly when you look at what India has done on GST reform, India might be the leading economy in tax reform at the moment, certainly of the economies I follow. If you think about where there are kind of structural fiscal problems, and in the advanced world, the UK, France, Japan, the US. India is way ahead, even in terms of advanced economies that don't have such pressing fiscal issues, but where there's a future problem really emerging in the tax system, and Australia is a good example of that. India is doing a lot more on tax reform than those economies, so definitely a big tick for the Indian story there. I think the other thing in favour of some kind of cyclical outperformance from India is the fact that there has been some credit tightness in the market, driven at least partly through some kind of some regulatory efforts to slow lending in some of the consumer sectors. I mean, they obviously impact the economy through the credit mechanism, but then those effects pass, and the things like the positive signals from the equity market, I think, are going to have more fertile ground to feed into. So, look, 2026 feels like a better year for the Indian economy than parts of 2025.
Richard, morning. Just a brief last question. Gold, this unstoppable rally, 4% in one day, 10% in a week. I mean, there's, of course, there's chase, which is on. But is it showing, should we read something deeper into it and connect it to, bad stuff, or not necessarily?
Look, bad stuff is probably quite a good description because it's hard to define. I don't know anyone that's got a good valuation metric for gold that pinpoints, even within a reasonable order of magnitude, why the price is where it is. And if it was $2,500 an ounce a year ago and it's over $4,000 an ounce now, and of course the daily momentum indicators still look very, very strong, who's to say what the right price is? We've already, actually, Jamie Dimon's name's come up once in this conversation. I mean, the view he expressed on gold was, and I'm summarising, look, for a long time, it's hard to find a reason not to own gold. There seem to be a lot of potential pockets of problem in the global economy, and so it does recommend itself as an asset class. But he said, I wouldn't own it because the transaction costs are too high, they're 4%. I mean, maybe the upshot of that is buy some gold jewelry and wear it and use it and enjoy it and convince yourself it's an investment, because I do agree that gold is telling us something. And what's most likely is it's not telling us about France or the UK or Japan, all of which have pressing fiscal issues, because the historical flight from those kind of problems would usually be the US dollar, but the dollar's down. So I think it's telling us about the dollar.
I don't know, Richard, you've ever interacted with Willem Buter. He was this chief market economist at Citi. He wrote an article in the FT essentially urging central banks to sell their gold. I mean, not all of it, but basically his point was that, it's just too much concentration. But as he says, he calls gold a 6,000-year-old bubble. So he's been wrong for a long time. He accepts it. It's interesting.
Well, 6,000 years is a long time to be wrong. You might want to reevaluate your investment thesis, I would suspect.
Yeah, I told him that. And that interview will air later. But anyway, it was an interesting sort of, other side of the view. We'll air that interview later. Thanks very much for joining us, Richard. Really appreciate your time and good speaking with you. We'll take a quick commercial break here. Lots coming up, lots of stock-specific action that we need to get by, lots of earnings as well. Top 10 segment up next. So LTI, Mindtree, Cyan, Vikram Solar, Vari Energy, Suntec Realty, Kalpataru, Metro Brands are stocks on the back of positive news flow. Wipro, Infosys, JSW Infra are stocks on the radar that are likely to open in the red, but likely is the key word. We'll take a break. We're back with our research team.
Welcome back. Our entire research team is now standing by with CNBC-TV18's list of top stocks for the day. And let me take it, guys, because I've got Infosys and Wipro to talk about this morning, both reacting to their earnings. Now, to begin with, Infi's ADR was down 2.5%, 2.2% to be precise. So that gives you an indication of the overall market rate. Now, the question is, why perhaps are the investors disappointed? That is because the upper end of the guidance on revenue is not changed. The earlier guidance was 1 to 3%. The company changed it to 2 to 3%. So the lower end of the revenue guidance increased from 1 to 2%, but the upper end of the guidance remains unchanged. And the question is that after a strong H1, where in Q1 you did 2.6%, you did 2.2% in Q2, why do you not have the confidence to raise the upper end of the guidance? And also, if you just do the math behind it, if the company has to do a 3% revenue growth for the full year, upper end of the guidance, it basically means no growth in Q3 and Q4. Yes, there are seasonal follows which happen in the December quarter, but I think the street is a bit disappointed. The question is the management being conservative, or is there something in the macro environment? Per se, Q2 was fine. Revenues ahead of expectations at 2.2%, while margin performance slightly short of street expectations at 21%, lower than consensus, but it is still an expansion of about 20 basis points. The other one is Wipro. And here again, the ADR sold off yesterday, down close to about 2.5%. Now, Q2 was in line with estimates, but the encouraging bit is that the Q3 guidance implies an improvement versus the current quarter. Q3 revenue guidance for Wipro stands at minus 0.5 to plus 1.5%. At the midpoint, the company is guiding for 0.5% growth, which is better than the 0.3% growth that they did in Q2. Q2 was largely okay, revenue growth of about 0.3%. EBIT margins got impacted on account of a client bankruptcy, so they came in at 16.7%. If you strip that out, adjusted margins are similar to the prior quarter. But I think the takeaway is that both, just by the price action, then while numbers are better than muted expectation, it's still an industry which is not growing, right? Yeah. For Infi, it's still a 3% revenue growth. So, give or take a minor 10, 20 basis points beat here or there, it doesn't change the overall picture. The growth is absent, and there is nothing in the commentary which suggests that growth is coming back.
Okay, all right, Rima, thanks for explaining that to us. In fact, we'll connect with the top management of Wipro at around 8:30 a.m., just in a few minutes from here on. Well, let's turn our attention away from tech. Vivek joins us to tell us about JSW Infra. Hey, Vivek, good morning.
Well, good morning. JSW Infra, slightly soft quarter, in the context of how the company has grown so far. Revenue is higher by 26.5% on a year-on-year basis. Number one, aided by the logistics segment that's done quite well. However, when you're talking about the port segment, volumes higher by just around 3%. So that is coming slightly muted. EBITDA higher by 17.1%. The EBITDA margin, however, on a year-on-year basis has softened on the back of the fact that the Navkar acquisition is at a slightly lower EBITDA margin base. So 48.2% versus 52% on a year-on-year basis. Profitability largely unchanged, largely flat on a year-on-year basis. So the cargo handle volume this time around just up around 3%. Segmental revenue, now look at that, because port operations up 10%, logistics revenues is what has actually gone ahead and aided the top line growth. Now, key takeaway as far as the management commentary in the con call was concerned, at the end of Q1, they were hopeful of a 10% volume growth guidance. This time around, they appear to have softened the aspirations. It's now at 8 to 10%. What aided the performance? Strong performance at the Southwest Port, Jaigarh Port at Dharamtar Port. However, weak iron ore volumes at Paradeep is something that went ahead and offset the strong performance at other ports.
All right, JSW Infra in focus there. Now let's focus on LTI Mindtree and Cyient, and we are back to the lady in the middle here. Back to you.
Well, yeah. So LTI is actually a pretty good showing this time. The company's delivered a revenue growth of 2.4%. Constant currency margins have come in ahead of expectations, expanding by 160 basis points. HSBC says the company offers strong growth, pick up at reasonable valuations. They have a buy call, while Nomura has a neutral call, but they too have raised the EPS estimate. So all in all, LTI Mindtree is a good performance, a beat on revenue and margins. Talking about Cyient, now here we're looking at the DET, the digital engineering business, which is majority of the company's growth. And after struggling for a long time, this time you are seeing signs of a recovery. So Cyient's top line growth has gone up by 0.5%, and EBIT margins too have improved by 20 basis points. And the company in the conference call also spoke about scaling up the semiconductor subsidiary. They gave a lot of numbers, which we could get to in a bit, but overall not a bad showing from Cyient.
Okay, all right, Rima, got that. Going back to Vivek. Vivek, Waaree Energies as well as Vikram Solar, good numbers?
Well, that's right. So solar module manufacturers are expected to be very, very strong set of numbers. They haven't disappointed at all. First, let's start with Vikram Solar. The company just delivered its Q1 results a few days back. Q2 is out on a year-on-year basis, extremely strong. On a sequential basis, on account of monsoon, there appears to be some softness. But looking at the numbers on a year-on-year basis, the revenue is almost doubling. EBITDA up 3.2 times on a year-on-year basis. EBITDA margins are almost doubling, actually 21.6% versus 12.6%. Profitability higher by 17.5 times, aided by some one-off factors as well. Order book quite steady, over 11 gigawatts. Module sales this time around at 784 megawatt versus 271 megawatt on a year-on-year basis. Now coming to Waaree Energy, again, against the limited street estimates that we have, it's a beat that the company has delivered. Revenues higher by close to 70%. EBITDA, again, more than doubling, almost 2.7 times higher. EBITDA margins at 23% versus 14.7%, and profitability too more than doubling. The important point as far as the company's takeaway is concerned, EBITDA margin guidance, EBITDA guidance is at 5,500 to 6,000 crore. That is something that they've maintained. Order book of 24 gigawatt valued at close to 47,000 crore.
Okay, all right. Thanks for that, Vivek. And going across to Sonal, who's here to tell us about a couple of real estate names. Sonal, first of all, happy Dhanteras to you, and a special one for you. You got little Vani at home, and don't miss out on the opportunity. Go and pick up some gold for Altel Mangalam as well later. But tell us about the companies you're tracking.
Thank you so much for that. Well, I'll do the gold buying myself. But Nigel, talking about real estate companies, let's start with Sunteck Realty. It was their Q2 results. A good update that came by. Pre-sales up 34%, collections up 24%. The net operating cash flow is up 35%. So balance sheet also has improved. The other one is Kalpataru, which is a recent listing. There they gave Q2 business update. On the residential part, it's a good update. They've seen pre-sales growth of 19%, collections up 37%. So good update coming in from both these companies.
Okay, all right, Sonal, thanks a lot for that. And let's wind this down with Mangalam then. Mangalam, you know what you have to do, but tell us about Metro Brands.
I bought Zomato gold yesterday, Nigel, if that counts as gold. But, let's talk about Metro Brands. Good performance coming in, 11% revenue growth. The EBITDA grew by about 22%. There was a marginal expansion in the margins as well. The net profit was slightly muted, but that was because of higher depreciation because the company opened 42 stores. The second quarter is a transitory quarter, was impacted by rains and the GST transition. The festive season, extremely crucial. So expect some green on the stock and more thereafter, largely on account of expectations of a better performance in the second half.
Okay, all right, Mangalam, thanks very much for that. Now, Wipro posted an inline second quarter earnings, beating expectations. Dollar revenue has risen about 0.7% on a quarter-on-quarter basis. The management has also raised their guidance for the third quarter. Rima caught up with the management and began by asking them about their third quarter guidance. So this is the Wipro top management in conversation post the numbers which were put out. So not just the numbers for the quarter, but the guidance and the outlook as well. Listen in.
If you look at the previous quarter, we talked about three of the SMUs showing revenue growth sequentially. And we also had Capco growing sequentially as well as year on year. Second, we had a very strong bookings, 4.7 billion, where we have won 2 mega deals as part of that, which are of course renewal, but helps us to grow with the client in different areas. For the first half of the year, we have almost done $9.5 billion in booking, which is totally four mega deals. And of course, rest are all large deals and smaller deals included. So the momentum that we have in bookings, some of it will convert that into quarter three and into quarter four. And our guidance bakes in the bookings that we have made in quarter one and quarter two, and some of the what I would call as a transition and steady state that would happen in quarter three for us with those clients in those programs.
Has the demand environment changed, Srini?
Not significantly, Rima. I think if I look at our pipeline, I can reflect that way. In spite of that $9.5 billion booking in first half, we still have a very robust pipeline across the 4 strategic market units and of course across the industries. But it varies from industry to industry. But the broader theme of the pipeline that I would say is the vendor consolidation and also of course cost optimization as part of that. Second, we also see infusion of AI into some of this run and operate for our clients, which help them be more productive, bring in efficiency and velocity. And the last part, which is very important, is the new piece of business that we get purely from AI, whether it's AI advisory or helping the clients with the data architecture or managing the models for them or run and operating their models and so on and so forth. So that's a kind of deal pipeline that we see in this quarter, Rima.
Aparna, when we last spoke to you, you said all these large deal wins will have a cost associated with it, and therefore margins will come under pressure. Can you explain what happened at the EBIT line for you? There's that one-time client bankruptcy impact, there's rupee depreciation plus the cost. Can you break it up for us? And what can you guide going ahead?
So the insolvency impact that we took in our financials is 50 basis points. Adjusted for that, our operating margins that we reported was 17.2%. This had two parts. One is certainly, we did have rupee depreciation and the dollar weakness even versus the crosses help us. That came in as a positive. Our utilization has improved. The profitability in our fixed price programs has also aided. So both operational and Forex have been an upside. And obviously some of the investments that I've spoken to you about in terms of some of the large deals that we've managed to secure, they were almost completely offset. We were in a very narrow band. Q1 we reported 17.3% and it's 17.2% for Q2.
And going ahead, Aparna, for Q3, Q4, does it stay in the 17.5% band? Or do you think in the absence of any Forex tailwind, the upfront costs associated with the large deals will put pressure on the margins, like you told us last time?
Yeah, I don't think we're really, the Forex, we are not in a position to project. Obviously, the rupee has been quite volatile. We'll have to monitor that closely. We have a good foreign exchange risk management policy that governs it. We're quite confident we'll be able to manage the volatility in the near term. As far as we are concerned, there are several actions in place. Srini spoke about infusing AI in all our programs, especially in our application maintenance services, infrastructure services, and across, BPS. There are efforts that are there ongoing in order to drive AI infusion and drive that productivity. That will be a big lever. This is also a quarter with furloughs, which has played into our guidance range as well. Right, so that is a headwind that we'll have to watch out for and see how that lands. So there are some headwinds as we start the quarter, both in terms of large deal ramp-ups, which are typically lower profitability, furloughs, and we have enough and more levers to try and offset some of them. And our endeavor would be to keep it in a narrow band. Outside of Forex, we don't know what the rupee volatility does.
Saurabh, your headcount increased by 2,260, and this is the highest that we've seen, at least in the last 3 years, I think. What is the full-year fresher addition plan? When do you plan to give wage hikes? And if you can tell us the H-1B visa hike impact.
Yes, I'll answer all these. Let me start by saying, if you look at the entire people supply chain ecosystem, there's been a quarter of lower attrition, higher utilization. We onboarded about 2,900 campus hires and an overall net headcount going up. We will continue to add people based on demand requirement. We have, as you see, we had a robust bookings in the first half, 9.5 billion. So as we execute to revenue on that, we will definitely keep on hiring, both at the fresher as well as laterals. So that is the way we move forward. From a attrition perspective, we feel that given the overall macro environment and the sentiment, we see that this will continue in a very narrow band, and we are confident it will not go up in the near term. Coming to wage hikes, again, given the uncertain macro environment, the intent, we haven't decided when to give the wage hike, and as and when we decide, we will announce that. very uncertain environment continues. Third, on H1B, very limited impact. 80% of our US-based employees are locals. We have been adding about 250 to 300 H1Bs every year. We are very confident that even with the change of the law in the US, it will not impact from a supply side as demand moves up. Near term, long term, we will look at increasing our presence from our delivery centers in the US, look at a campus hiring there. But we are very comfortable and we see minimal impact from an H1B standpoint.
Would you look to bring down this 250, 300 people that you typically send on H1B visa and maybe look to increase your local hiring?
We will increase local hiring and we'll have to see how things pan out because when the next cycle, before the next cycle come, I hope clearly some unanswered question, there'll be more clarity on the policy changes and then accordingly we will take a call in terms of what needs to be done.
The Wipro HR head saying that so far the company has not taken a call on their wage hikes on account of the macro uncertainty. The last wage hike given to the employees was 1st of September, so about a year back. So 1 year is gone, and so far at least, the company has not decided on a wage hike. Even for TCS, the wage hike cycle, this time was about 17 months. Instead of giving it on 1st April, they gave it on 1st of September. But that's Wipro for you. And as you can see on the screen, there is a money control stock score just above the line graph. This is a score assigned to each stock based on Money Control's multi-factor algorithm. It is calculated by analyzing over 40 parameters, including both current historical financial statements, price charts, technical indicators for each stock, each of the individual parameters considered for the calculation of the 4 factors, and they're assigned to the score, which is then aggregated to arrive at an overall Q factor, G factor, V factor, and T factor score. Remember, this is not a buy or a sell recommendation. Any investor viewer is advised to carry out necessary diligence in their own through a certified, registered financial advisor or for their investment decisions. Get into a break. On the other side, we'll connect with Siddharth Khemka, Head of Research, Wealth Management, and Motilal Oswal Financial Services.
Okay, welcome back. There's 20 minutes to go for the market open, the pre-open session to kick off. Manisha is now joining in with a roundup of everything which is happening from the world of commodities. Manisha, what is going on?
We are trading at a 1,30,000 rupees for 10 grams. I mean, this is a huge run up. And, interestingly, You also have the sovereign gold bond redemption coming into the markets for people who bought it in 2016, 2017. The buying level at that point in time was at around 2,860 rupees. They are redeeming it at 12,600 rupees. That's a 340% of an absolute return that these people have seen. So huge gains is what we are looking at in gold. Same goes for the case of silver as well. We've seen 85% of a gain till time, another all-time high coming in for silver as well. And that seems to be spilling over into other precious metals, because when you look at palladium prices, they are trading at a 3-year highs. More gains coming in for this one. Platinum is trading at a 14-year highs. We've seen a 92% of gain in platinum in this year itself. So very strong gains continuing. Of course, there are those credit concerns now coming in from U.S. The U.S. government shutdown just about continues. The central bank buying has been very, very strong. The U.S.-China conversations, the kind of rhetoric that we see coming from both countries is also on. There's no reason really to sell, go short, or go for profit taking. There are more highs that the markets are anticipating here.
Thank you, Manisha, for that. Siddharth Khemka, Head of Research, Wealth Management, and Motilal Oswal is now joining in. Siddharth, what's the view that you all are taking on the frenzied rise that we've seen in gold prices? And some of these gold financiers have had a good run. So Manapura, Muthoot are both up 50% this year, while some of these gold jewelry companies, whether it's a Titan, Kalyan, Senco, no such luck. So what's the best way to play it? And then the view on gold from here.
Good morning, Rima. First of all, wishing you and the entire CNBC-TV18 team a very happy and prosperous Diwali. Wishing the same for all the viewers of CNBC-TV18. So I think we remain constructive on gold. We believe that there's a structural shift that central banks across globally are taking a step of the de-dollarization where gold fits in well. And I think the buying continuously happening on the central banks in delinquencies comes down, the asset quality improves. But for the newer growth as well, with the same gold volumes or the quantity, now you can lend much more. So the lending propensity that increases. So overall, very positive from gold financing companies. Another way to play is, and I think that will continue to do a positive effect on MCX as well.
Okay, Sid, we'll take a quick break here. We'll come right back and we've got more questions for you. So let's do that. Stay with us.
Welcome back. You're tuned into Bazaar Morning Call. It's that part of the show where Hormuz joins in to tell us about all the big movers in trade with heavy volumes. Hey, Hormuz, morning.
Morning, Nigel. Interesting list of stocks yesterday. BLS International tops that list, and the stock was up 16% in yesterday's trading session. Interestingly, receiving an order from the MEA, and as a result of which a 16.5% up move. It snapped a 6-day losing streak in yesterday's session. And when the stock fell, when that announcement came from the order department, the stock fell 11% on the 13th of October. In comparison to that, yesterday's volumes were 3x of those levels. We had almost 6.5 crore shares that were traded yesterday compared to a 20-day average of just over 31 lakh shares. And out of those 6.5 crore, only 50 lakh shares were marked for delivery. You take that 20-day average, it comes up to around 8.5 lakh. The Share India Securities was the top gainer on the small cap index yesterday, a 20% upper circuit on the stock. It snapped a 3-day losing streak as well in yesterday's session. And in comparison to Wednesday's volumes, the volumes on Thursday were 6x of those. And we had more than a crore shares that were traded yesterday. The 20-day average comes up to only 4.5 lakh. And out of those crore shares, 35 lakh were marked for delivery. And in comparison to the 20-day average, which is just over 2 lakh. The stock has broken above some of its key levels. It's broken 100 DMA of 163. The next level to watch is the 200 DMA, which comes up to around 183. And lastly, a stock has been in focus ever since the GST reforms kicked in, Parag Milk Foods. That stock saw an up move yesterday of around close to 9% as well. And it snapped a 3-day losing streak. But out of the last 20 odd trading sessions, the stock has gained only in 6 of them. And Thursday's volumes were the highest in a month. We had close to 34 lakh shares that changed hands. The 20-day average is 11 lakhs, so 3x of the 20-day average. And on the volumes front as well, delivery front, 9.5 lakh shares for delivery compared to a 20-day average of just over 4 lakh shares.
Okay, all right. Thanks a lot for that, Hormuz. Well, let's go back to Sid Kemka. Hey, Sid, good morning. Festivities are here. Bulls are feeling good. What about Eternal? Yesterday it had massive volumes in the last 40 minutes or so as we dissected those numbers. For a longer-term investor, they would like the trajectory that they've laid out. The problem is in the near term, there's going to be a lot of focus on growth, which in turn could delay profitability. What's your take on the stock at around 340 rupees?
Good morning, Nigel. Yeah, I have festive seasons here, so wishing you and the entire CNBC-TV18 team happy Diwali. Eternal, I think, still in the investment phase. I think results were mixed in some sense. Revenue were far ahead of our expectations, but the food delivery order value, that was a big miss. If you see the food delivery, the growth remains soft as muted discretionary demand. That kind of impacted. I think what we're seeing is that post the GST rate cut, the demand has definitely picked up. So Q3 could see some acceleration in terms of growth. Good part about the results, margins, EBITDA margins, so adjusted EBITDA margins that improved by 5 to 5.3%, and the long-term GOV growth target of about 20%. But for FY26, it is expected to be closer to about 15%. So I think net-net, the quick commerce expansion that continues aggressively. So the medium-term margins that will be a little bit more under pressure, but that tailwind is expected to start kicking in FY27. So the platform fee hike that supports margin improvement growth. I think from Q3 that will see some improvement. So I think overall near term, driven by the higher investments, the stock could remain a bit softer given the run up that it has already seen. But the long-term growth story that continues to remain intact. We have a buy rating and a target price of 410 on Eternal.
Okay, actually, why not revisit the Eternal numbers, Nestle as well, which of course is the brokerage call of the day. Mangalam is back with us. Mangalam, take it away.
Well, if you look at Eternal's numbers, there was a slight disappointment on the EBITDA front. The street was positively surprised by the revenue as well, and that's exactly what the brokerages are saying as well. CLSA, for instance, they have a high conviction outperform rating with a target price of 450 rupees. They're saying it was much stronger than expected net order value for Blinkit and a higher contribution for the food business as well. Blinkit adjusted EBITDA was lower than their expectations, that largely because the pace of consumer acquisitions. HSBC too has a buy rating, a target price of 390 rupees. They're saying that quick commerce margins disappointed due to heightened marketing and expansion costs, but valuations aren't very undemanding right now, though strong quick commerce industry tailwinds and superior execution drives buy rating. Nomura has a buy rating. They call it a mixed bag, where food delivery was marginally below expectations, and the net order value growth is what they expected to be 15% in FY26 and 20% in medium to long term. Let's see whether that comes about or not. On Nestle, it was a very strong set of numbers, and the stock price told you that as well. HSBC, however, has a hold rating. They're saying that the second quarter performance was impressive, a key surprise coming in from the revenue growth, and more importantly, cost inflation is moderating from here on as well. Macquarie neutral, they have a target price of 1200. They're saying stronger than expected double-digit domestic sales have actually offset the gross margin miss, so they have upped their estimates by about 1%. And Goldman Sachs has said that double-digit top-line growth is fairly strong, and they believe margins are likely to improve from here on as key inputs have softened. But remember, for all these positive comments, most of the brokerages have either a hold or a neutral rating on Nestle. So let's see where that goes from here.
Okay, got that. Siddharth, just moving on to another sector, Jio Financial. I believe you were listening in to the conference call, and it's also, I mean, the company has hit an inflection point in its business where now the business income is more than the treasury income. I mean, what were your takeaways from the numbers, and what does it mean for the stock?
Yeah, so I think if you look at overall, we tried and listen to the Jio financial numbers before the Reliance numbers coming in. So the company has been focused on setting up the newer segments and nurturing them and gradually expanding over the past 2 years. They have strong foundation that has been built. In terms of financial performance, I think there is a good growth that we are seeing. Total income grew about 44%. The pre-operating profit was a bit flattish because of the higher costs. The company, we believe, is reaching at an inflection point where the business income is now higher than the treasury income, given that they have a large treasury of Reliance shares, and that is the core income that they are getting. So I think gradually the core business, that is of the lending on the other operating businesses, that is definitely picking up well, and we believe that the company, given it's well capitalized, they also issued recently the preferential issues to the promoters. So well capitalized for the growth. Businesses are setting, so see strong growth for Jio Financial going forward.
Okay, Sid, we had to take another quick commercial break here. 4 minutes to go for the market pre-open session to kick off. We'll come back more with Siddharth on the other side. I think we should have our pre-open rates as well. IT, of course, continues to be in focus, and we have who else but Bhavin Shah, founder, CIO, CEO at Samiksha Capital, to talk about the performance of the IT services space. He's a veteran IT analyst, but of course runs his own fund now. Stay tuned, coming up.
Co-powered by SBI. बेस्ट है सबको पता है। Co-presented by Bank of Maharashtra, Ek Parivar, Ek Bank. Co-powered by National Stock Exchange. Soch kar, samajh kar, invest kar.
Okay, welcome back. Just about a minute to go for the pre-open session to kick off. Srikanth and Siddharth Rai are with us with their technical trading ideas. Gentlemen, great to have both of you here. Wish both of you a very happy Dhanteras and of course Diwali as well to you, your loved ones. Appreciate your time. Srikanth, you go first. How are things looking? What's the setup? Nifty Bank almost at new highs yesterday. Nifty's done pretty well in terms of breaking out of these. Some of the important resistance levels yesterday, headed higher in an uninterrupted way or maybe a bit of a pullback?
Good morning, Prashant. Good morning, everyone. And first of all, let me wish each one of you a very happy and prosperous Diwali. For markets, yes, there also we are seeing good amount of activity. It's a broad-based activity that we are witnessing. BFSI as well as metals and a few other indices, especially we can see, we are seeing activity in capital markets as well as new age technology stocks. Yes, Bank Nifty has broken all its important levels and now it is very close to its all-time highest level of 657,500 sort of level. So there, the Bank Nifty is having next leg of important resistance. Above 57,600, the next level to watch out for would be 58,000, 58,500. But broadly, I am of the view that the Bank Nifty is heading for 58,500 and any correction from current levels close to 57,000 will be an opportunity. For Nifty also, the view is similar. Already it has broken 25,500, which is something really positive. And today, in case if we see the market is dropping to 25,500 sort of levels, then there we should look for adding long positions. There also we are expecting 26,000 very soon.
Siddharth, good morning. What about you?
Good morning, Prashant. Thanks for having me on the show, first of all. And again, wishing you and the entire CNBC-TV18 team very happy and prosperous Dhanteras and Diwali. See, if we talk about Nifty, Prashant, the momentum that has built up in the past two sessions has been very meaningful. We discussed this just a couple of days ago that once Nifty manages to go and sustain above 25,300, we can expect a full-blown up move, and that's exactly what has happened in Nifty. And again, also not just this, in the past two sessions, Prashant, the support for Nifty has shifted upwards from 25,200 to 25,500 now, which is a very strong bull case scenario. So now, from here on, we can definitely see some bit of consolidation and maybe some volatility because of the earnings season. But overall, Nifty will be able to absorb any dips if they are there. But as long as we are above 25,500, it is a very big positive for the market, and we must expect 25,800 and 25,850 to be hit just when the market is able to take out the previous multi-month high of around 25,670. So this is a very strong market, and right now the momentum is very good, and we must stay with the momentum.
Okay, all right, stay with the momentum. Good morning, gentlemen. Sid, you go first then. Tell us about individual stocks as well. A lot of trading ideas, so give us a couple.
Yeah, sure, Nigel. Hi. See, there are two stocks, both of them we have to buy. The first one is United Spirits. See, the stock has been in a consolidation for about 3 months now. For the past 2 days, there is a very strong up move from the lows, and also the stock is nearing a very good level from which a fresh momentum can be seen building up. So United Spirits can be bought in spot right now. The price is around 1360-ish. The stop loss will be at 1345, and our targets being first target 1395 and the second target being 1415. The second stock is Dabur. See, there was a very deep correction from its highs for about 1 month, but for the past 1 week there has been an attempt for a turnaround, and the stock is trying to come back above 500. In fact, it just came back above 500 yesterday. So here again we can see a good momentum building up. FMCG is also coming in favor for the past few days. So Dabur can be bought here right now. The price is just around 500. Our stop loss will be at 493, and targets being first target 519 and the second target being 525.
Okay, all right. Let's go across to Srikanth. Srikanth, what about you? You've got a couple of picks as well.
Yeah, Nigel. See, metal stocks, they are doing really well. And in that specifically, most of these stocks are very close to their important support levels after correcting for last 3-4 days. Hindustan Copper, Hindustan Zinc, as well as if we consider GMDC and Hindalco. But in that particular basket, Hindalco is showing a lot of momentum. From here, the stock can move towards the levels of 800, 810. We can keep stop loss around 770 for the same. There we are expecting further more activity. So we are bullish on Hindalco. We also like Reliance Industries as we are expecting market to move towards 26,000. Reliance Industries should participate in this particular up move. That's my view. Currently, the stock is forming some rounding bottom sort of formation and it has broken its important resistance level at 1390. So from here, the stock can move towards 1440 or 1450. It's a buy at current levels with a stop loss close to 1370.
Okay, all right. Thanks a lot for that, gentlemen. We'll come back to you all for another call in the next few minutes or so. But let's welcome Bhavin Shah, founder, CIO and CEO at Samiksha Capital, who joins us on the show. Hi, Bhavin. First of all, festive greetings from all of us here at CNBC TV18 to you, your family, and the entire team as well. It's been a while since we spoke, but good to have you on the show. Well, all right, Bhavin, we want to understand your reading of the tech space. There's an equally bullish and bearish argument as well. Now, post the results, the kind of feedback you get is maybe the downside is limited. The problem is the upside as well. I mean, there's nothing really to go in there, rush in there and buy the stocks. Which side of the fence are you on? And what is your reading of the recent results?
So I think, as you said, the expectations have been reset to far lower levels, both in terms of profitability and more important in terms of growth. And I think against that, the results are coming in as sort of expected. And I would say that, on the margin, slightly better. I would say, there has been some slight improvement in guidance as well, and so on. And I think I would say is that, yes, there is that big deflationary impact of Gen AI boosting significantly the productivity, and as a result, the effort required is going down for the same. Not expecting huge returns, but pretty safe, say 10 to 12% returns. The opportunities may be starting to emerge in the sector with respect to companies available at 5 to 6% free cash flow yield. Probably delivering you sort of mid to high single digit, even closer to maybe high single digit cash flow growth in coming years. So I think it's not a bad place to be actually compared to where we were for last 6 months.
This is the most optimistic, Bhavin, I've heard you sound on the technology space. On the margin, things are improving. Perhaps the industry is heading towards a high single-digit kind of a growth rate, and coupled with the free cash flow yield, you could hope for a 10-12% kind of return. So what have you been buying?
Well, I think we in the large cap space, we have been buying Infosys, which I feel is has been a bit more consistent in terms of what they've been delivering, and I think yes, the valuation is attractive, and the order book is also reasonable. So don't have very high expectations, but as I say, something like 10 to 12% return. I think there can be space in the portfolio for something like that, especially when you look at the large cap space overall, where there isn't too many names that give you much higher returns than that.
Okay, but on Infosys, since you've been buying it, are you a bit disappointed that the company didn't raise the upper end of the revenue guidance? Considering that the first half of the year, the company has shown good momentum. The execution's been strong. There is no change in the overall demand environment. I mean, you would have listened into the call. What was your read from that?
I would think one can be somewhat disappointed by that, but at the same time, given there is fair bit of uncertainty still out there, I think the US related issues continue to pop up. Maybe they want to walk a cautious path in that regard. But I think, if there is a potential for slight upside surprise from that, that's one can live with that rather than having a number that later on gets revised down. That's how I would look at it.
Bhavin, hi, morning. Greetings to you on Dhanteras and Diwali. And how many Diwalis now, Bhavin, running Samiksha?
10.
I used to, time flies, right?
Yes.
IT is the sole sort of, work that you used to do. And of course, now of course, your fund has done so well. So congratulations to you and your team for that as well. I think in the small cap space, I think, Bhavin, Sonata has been a name that you've owned for a while. You still own it?
No, we don't own it right now.
Okay.
We could revisit it. I mean, I think in the small cap space, we own Mastech.
Okay.
Stock hasn't done well recently, but I think, we think that there is, the top leadership of the company is is where we feel, they will deliver the goods. And I think the opportunity to deliver growth in small cap continues to be reasonably good. And so that's where we are, and then we also have other opportunity. I mean, we look at other names related to IT. Reddington is one that we have owned for a while, and we continue to like the prospects for that kind of business.
Okay, Mastech, Reddington. Just a slightly philosophical question, but since it's 9:10, 5 minutes to market open, maybe a brief response to this, and we can chat about this later. As a veteran IT analyst who watched these companies from their infancy, what would you tell them in terms of what can they, so one of the companies disclosed there was AI revenues recently, but the point is, unless this is taking away growth from somewhere else and overall growth remains the same, I mean, will that really matter in that sense? In terms of their communication, or actually even what they should do here in this new environment, what would you tell them, Bhavin?
So, my observation is that, and this is the same thing that happened when the whole cloud and the platform solution revolution came about, that we saw Accenture a fair bit ahead compared to the leaders in the Indian IT space. And I think the same thing is repeating, where we can see that Accenture had a reasonably strong commentary given the circumstances, and also the investments in the, in retooling, retraining their engineers for AI has been a bit ahead of the Indian IT companies. So I think that continues to be that, that Indian IT companies tend to be quick followers. I mean, I think in a way it is okay because the customer relationships are very sticky, and so you don't lose customers just because you are not the leading edge. But I think maybe some more investments in understanding the next big trend and investing a little bit ahead of time. I'm not saying go and invest in, say, the product opportunities and so on and so forth, if that's not sort of the core DNA, but at least grabbing the new technology shifts a bit early and having the right set of people for that, I think that is important. And I think maybe that's where they will have to work on in the future.
Okay, Bhavin, we'll leave it there, but we'll have you back for a longer chat. Good luck to you as you continue to execute well with Samiksha. Thanks very much for joining us on IT services right now. Nimesh is here with the standout brokerage report of the day. Nimesh, good morning.
Hi, Mani Prashant. So today's standout is on Max Healthcare. UBS has been bullish on the stock, but they further raised the target price on Max Healthcare to 1550 versus 1350 earlier. UBS believes Max is a super compounder, and it's a best position in terms of delivering capacity as well as earnings. So the CGHS price hike is a meaningful tailwind for the entire sector, and that will benefit Max Healthcare as well. So UBS is estimating an 18% CAGR in bed additions between FY25 to FY28, and that would mean that Max can deliver an EBITDA and EPS CAGR of over 30% in that period between FY25 to FY28. So that's the reason why they believe that premium valuation is justified, and they further raised the target price on Max Healthcare now to 1550 versus 1350 earlier.
Okay, all right. Thank you very much for that. So keep an eye out on those stocks as we open up. We want to also highlight Reliance Industries and the Investec note, the Investec view, which is coming in this morning. So over to you.
So ahead of Reliance earnings, Investec has come out with a note initiating coverage on the stock with a buy call and target has given is of rupees 1890 per share. It says amongst all the sectors, energy should rebound on back of constructive refining margin, new petrochem capacity and stable upstream earnings. It believes that it offers a compelling blend of cyclical recovery and structural growth, and even group EBITDA should double by FY27.
All right, right on time. So thank you very much for that. So that's Reliance for you. Maybe just take a quick look at some of these stocks as they are opening up. I don't know if you have time for it. And, you know, Infi, Wipro, etc. I think we've already highlighted. Maybe look at something like a Gokuldas, right? I mean, Gokuldas Exports has kind of become this one stock to read the temperature on India-US. Was up 8% yesterday, 816 now. Put up BSC, which was up, I think, yesterday, 3-5%. We'll look at some of this. I think there's a Bloomberg story on this, on what SEBI plans to do on HFTs and deepening cash markets, etc. So in a bit, we've got Nifty, which is 25,500, about 0.18% lower. Nifty Bank is ticking slightly down, but nothing very much, about 0.25% down there. The Sensex is down about 0.25%. Small cap index is absolutely unchanged, nothing on it. You've got the mid cap index, which is unchanged as well, 60 points lower, 59,190 is where we are starting. So this is a bit of a flattish start after what has been a furious move yesterday, of course, especially yesterday, but even over the last many trading sessions. 20 points lower. The Nifty heat map up on your screen, it's more down than up, but not by very much. Asian Paints on one end, Nestle, Max is something which Nimesh was highlighting. It's there up there amongst the gainers. And on the downside, as Rima has been saying, you've got IT, Infi, Wipro, and there's HCL Tech as well. Rima.
Well, as you pointed out, it's IT on the way down. The Nifty IT index has slipped more than about 0.5%. Wipro is the big casualty today. Stock down 4% at open. It slipped below the 50-day moving average. Wipro now down down to levels of 243. Year to date, it's lower by 20%. HCL Tech under pressure. Tech Mahindra, Infosys also weak in trade, and TCS is losing ground in sympathy. If you track the performance of IT so far this week, broadly lower. This is the week where we got all the big numbers from the IT majors. Week to date, Infosys down 4%. TCS is down 2.5% and Wipro down over 2%. So despite a slightly better showing versus expectation, IT continues to remain under pressure and still a bit unloved. Eternal is also losing ground. Eternal is down close to about 1.2%, but this comes on the back of the stock being virtually at record levels 2 days back. And since yesterday, even yesterday, once the numbers came out and the street digested that the jump in numbers was an account of the change in the business reporting. They've moved to an inventory-led model versus a marketplace model, and that explained. Otherwise, the numbers were okay, but the stock is seeing profit booking 1.9% lower on Eternal, but the brokerage view remains quite bullish. CLSA has a high conviction outperform, target price 450. HSBC has set the target price at 390. Adani Ports, Ultratech Cement, ONGC are some of the other drags in the large cap space, but on the way up, it's consumption all the way. Nestle, big mover yesterday, 4.5%. It's followed it up with another 2.5% gain, so continues to be bid up. Asian Paints is rising. HUL is gaining, and Reliance Industries also seeing buying ahead of numbers later today.
Well, that's right, Rima. You know, a limited point with regard to Eternal. The stock was very volatile yesterday, but I think one comment that came in for the management, that break even is not even a milestone at this juncture, implies that they're focusing more at growth. And maybe the near-term investor may not be too happy about that, and that explains why the stock is down close to around 3.5%. Mind you, longer-term story looks good. They're guiding for very, very good growth, good turnaround in terms of profitability, but that explains why that stock is under pressure in today's trading session. Moving to a few more names. Rallis from the broader markets, that's catching your attention. So that's a positive earnings reaction that we've got out there. Stock up close to around 4%. Add to the list, I think, we should get a couple of these other names. Vikram Sola, yes, that's the other one that I was looking at. That as well is higher in today's trading session, reacting to a positive set of numbers. Vare actually opened with gains and then that got sold in two. So that's the other stock, in fact, that's now flattened out after opening gap up with a gain of around 2%. What else is giving Wipro as well as Eternal Company on the downside? JSW Infra, well, that stock is down close to around 3%. Z Entertainment as well, they were guiding for very, very good times ahead. However, just going by what they've done at the half-year mark, doesn't seem like that guidance could be achieved. So for the time being, after the stock dancing away to around 145 earlier this year, the stock has come in for some selling pressure.
Well, I think, Nigel, you got slightly sideways kind of start, right? So neither here nor there. So can't really put this as a bad start, neither, of course, not a good start. So somewhere in between. IT, I think the Nifty IT index should come up, and I think there will be some pressure. Coforge, for example, which is still not reported, but which is widely expected to report something like a 5-6% kind of growth, is down 2%. But it's, Wipro, HCL, etc., which are taking a bigger bite out of prices. Swiggy is down 2.25% as well. So that's another one, which I just want to highlight. Ather is down 1.5%. Z, of course, results 3% lower. JSW Infra 3% lower. That's results. Tata Com has had a very, very sharp move. In about 5-6 days, it's moved from 1600 to 1950. So Tata Com is taking just a breather. That's it. I mean, the top volume-led stock, or not stock, but, a ticker is silver.
Yeah.
Silver Bs are up 4%. And that's by far the biggest volume-led gain. And we have it. It'll come up on your screen, Silver Bs, if we can. So there's a breathless rally in precious metals, on and goes. 4% on gold. Silver, of course, on the coattails of what gold prices are doing, and so on and so forth. Look at Share India. My God. Oh, boy. Share India, 194 rupees. It's a broker, basically. But the stock will come up. I think we have the stock. 2 days back, stock was $130. It's 190, 195. And volumes yesterday were some of the highest we've had in Share India in a long time. And today as well, it's by the way, the third biggest. I'm just mentioning it because it's the third largest volume-led gainer on the NSE. Never comes up with this much volume at this point in the day, but it is. So just thought I'll make a quick mention of it before we move forward. So that's what's coming on. Well, Hiren Ved is with us. He's Director and Chief Investment Officer at Alchemy Capital Management. Hiren, good morning. Happy Dhanteras, happy Diwali. Great to have you with us here.
Season's greetings to everybody.
Yeah, I should ask you, how's the traffic? I mean, I got out yesterday.
No, today was very easy.
Yeah?
Yeah,
I think the evenings it gets a
evenings is a little tough. Yeah. I guess
unless people have started the Diwali holiday already.
Diwali kids out of Bombay. In Bombay.
Out of Bombay.
I think people are visiting, and it's just that festive mood, right?
Yeah.
And it's still raining. Yesterday in the evening, it was raining in some parts.
Oh, is it?
Yeah. I mean, how is the market looking, Dhiren? What's the? Actually, let me ask you straight up. क्या लिया? ये अब तो दिवाली है, है, तो कुछ बताइए.
Well, we were all fully invested, so but I think broadly we've stayed with the same themes that we've been carrying on for many years. But I think incrementally the only thing we've done is added a little bit of autos.
Yeah.
Because I think there it looks like that the cycle is now, after a very long time, the cycle is turning. So, combination of interest rate cuts, easy liquidity, GST cuts, finally is getting the mojo back.
But two-wheelers?
Both, two-wheelers, four-wheelers. I think...
Some dealers we were talking to, they were kind of saying that with four-wheelers especially, is that GST boost durable? I mean, or by November, by December, again, you're going to get into that inventory build-up kind of situation. Two-wheelers maybe, because the impact is more.
I think two-wheelers definitely has got off to a very good start. Four-wheelers, at least for now, looks like that things have started to move. I think after a long time, we are seeing, we even read that small cars, which were not doing well, are starting to do well. So clearly at the lower price point, things are beginning to, improve. But I think overall, auto should do okay. Typically the cycle takes a long time to kickstart. Once it kickstarts, it at least lasts for some period of time.
Hiren, good to have you in the studio and to welcome and festive greetings to you, your team and everyone at home as well. Interestingly, you spoke about autos. People will be saying last year wasn't a good year. For you all, it was a very good year. One of the top picks, I think, was Force Motors.
Yeah.
Out of nowhere, that stock is up 100%. And now you're talking about the lower end. But I think the Force Motors play was on premiumization, use across, tourism or various other verticals as well. Any comment out there? Because that's had a great run. The auto index is catching up in 2 months. This one in the last 1 year, I think it's up 150%.
Yeah, I think it was more of a bottom-up pick rather than a pick on auto as such for us. It was a stock which was long forgotten by most investors, they don't talk to anybody, etc. But I think if you look at the kind of products they have, the new Urbania is phenomenal, right? And our dealer checks suggest that there's a lot of demand, both from tourism, whether it is from the healthcare ambulance sector, and more recently from the GCCs that are being set up, right? So that's a nice little van which carries 10 to 12 people.
I've used it. It's fabulous.
It's fabulous.
Yeah.
I think the other less understood aspect of Force is that they also make engines for BMW and Mercedes.
Yes,
right?
So it's a play.
So that's a great way to play premiumization in the car business, right? So, and then they have a joint venture with Rolls-Royce to make engines for exports. So I think it's a great engineering company. So you could play both premiumization plus, Gurkha, the four-wheeler.
Defense orders also.
Has found some place in defense. So it's a very interesting pick. It was, it was kind of out of the woodworks. Nobody was looking at it. Numbers have improved. So yeah, I mean, that's played
Still
out
positive
quite
out there.
Yeah, I mean, typically we take a fairly long view on many of these companies. But again, a clear disclosure that we and our clients, we do own Force in our portfolios.
I think you've spoken, when we last spoke to you, you spoke about NetWeb.
Yeah.
I think that's a stock. But this time, just wanted to get your broader thoughts on IT. I mean, are you getting some signs that, after being unloved, after underperforming so much, do you think the tide is turning? We were just chatting with Bhavin Shah, and he said that, maybe growth can now move from low single digits to mid to high single digits. Plus, you throw in the free cash flow yield, and maybe you can make a case for a 10-12% kind of a return in IT stocks.
Yeah, I think anyway, expectations were very low, right? And I think while absolute growth is nothing great, but compared to expectations, I think things have been better. So whether you look at LTIM numbers, Persistent, for example, has done relatively better. So it looks like that the sector may be bottoming out, right? We still believe the large cap stocks can probably give you late single digit, early teens kind of returns.
Okay.
Right? But yeah, I mean, there is safety, there's cash flow. But it looks like that the sector looks like bottoming out now.
So do you want to quickly tell us the IT stocks, the services plays that you have?
So I think for the longest time, we've owned KPIT. So we continue to own that. We continue to like the company. I think we had a soft patch in the first half of this year and all of last year. But looks like that hopefully this quarter should be the last of the soft quarters, right? And I think things from there should actually bounce back. And the other one is that, we have an exposure to a company called Latent View, which actually is a derivative play of, AI and machine learning. They do a lot of data analytics work. We think which is a precursor. I mean, as AI spending moves from the infrastructure layer to the software application layer, I think a company like Latent should do phenomenally well. But again, we own both these companies, so full disclosure.
KPIT and Latent View.
Yeah.
What's the new thing? Yeah, I'll leave it at that. I have a few questions, but I'll leave it.
Nothing really new. I mean, I think broadly, as I said, that we had our areas where we're clearly growth investors, so we look to in whichever sector, wherever we think that we have quality companies with above average growth potential over the long run is where we are positioned, right? So we are not necessarily trying to do any stuff which is very contrarian, at least from our point of view.
IPOs, anything interesting, which have come recently listed, some have listed below the issue and then they've gone on to do well, that kind of stuff, anything which comes?
No, I think the last we participated a little bit was in a very small company, but we like it, is a company called Pratik, right?
Okay.
So in the building materials space.
Okay.
We think that's quite interesting. I think LG was very interesting, but it's kind of opened with a
50%.
bang.
Yeah.
So I think many of these companies, I think Urban Company and LG were good IPOs. But I guess there's a lot of optimism right now immediately after listing. So we'll kind of let it simmer for a while. And at some point in time, when we get a good entry point, we'll certainly look at some of those.
All right. Hiren, what about gold? What's the view on gold, first of all? Do you think it's running a little too quick? If you're allocating fresh money, what would be the split, between gold as well as equity as of now? And do you think there's another way of playing gold, maybe the financiers or the likes? I'm not sure if you want to give us a view out there.
So, again, I'm not an expert on precious metals, right? But I think gold's done phenomenally well. I mean, we all have discussed there are several reasons, geopolitical,
central bank.
So on and so, central banks buying. I think the way we've played the precious metals and commodities is by investing in MCX.
Oh, okay.
I think for us that was a more interesting way of...
in a very profitable way.
And a very profitable way. It's a platform, an exchange is like once your fixed costs are done, as volumes grow, everything flows to the bottom line.
Yeah, I think the MCX rally really started a couple of years back when they introduced options, right? I mean,
correct.
That's the...
So I think until recently and even today, like a lot of the volumes were all futures.
Correct.
And it's really when options started is when the volume started to improve dramatically, right? And today you have the three most traded commodities where they are a clear market leader, right? Crude oil, gold and silver. I think there are a lot of interesting products that they are planning to launch. Like if in today's day and age, if they can launch a 1 kg silver contract, I think that would be a big hit, right? So there are a lot of products which are at the approval stage. I think as and when they get approvals, I think we should see a fantastic...
And unlike stock exchanges, NSE, BSE, MCX is no second in that sense, so far, right? I mean, no real...
Very difficult, once you build a leadership position. I mean, NCDX tried a lot, but they just couldn't do anything. I think MCX has now created that ecosystem. Very difficult to disrupt an ecosystem like that once you have buyers and sellers on both sides, right?
What about capital market plays? Everyone's talking about us having this long runway. Stocks ran ahead of themselves. Some of them cooled off. Interested in that theme? A few of these themes I wanted to ask you about. Capital market plays, EMS as a space, and maybe the platform themes. Among the three, since all of them
We like all three of them.
All three of them, okay.
Yeah,
you want to name a couple of stocks, will be great. Let's go for it here. It's Diwali.
No, I think I think in capital markets, as I said, we own exchange.
Yeah.
Clearly MCX is a great play there. We do own some asset managers and wealth managers, right? So we like the entire theme. We do believe that there is a structural long-term play. And that's also led to valuations getting re-rated in that area. So, our sense is that we like the business models because all of them have great operating leverage. So whether it's a asset manager, wealth manager, or an exchange.
They'll do well.
Right. So I think they will do well. So we have spread our exposure across all three. Right. You mentioned platforms.
Yes.
Clearly, I mean, I think you have to be selective there, but we do have exposure to Paytm and Eternal, right? I think those are the two platforms that have demonstrated that they can not only scale but also achieve profitability.
Yes.
Right. But I think they're still, they're still on their way to achieving greater profitability. I think they have to strike a balance between growth and profitability. So I guess if you want dominance, then you have to focus on growth first, and eventually I think profitability will also come in.
All right, and EMS?
Again, it's a sector we like. Obviously, valuations are quite challenging now. And it's a sector we've been owning for quite a while now. It's not now. I think it's been a couple of years since we've been having an exposure there.
Okay.
Again, we have the whole range there. We have an exposure to Dixon. We have an exposure to, to Keynes, as well as recently, we do have exposure to some other names as well, like Sirma.
Okay, all right, Hiren. Good to have you in the studio. Thanks a lot for coming down.
Thank you.
And giving us a few ideas, few themes as well. Wishing you, family, team, all of them a very, very happy Diwali. And we look forward to catch up rather soon.
Same to all of you and to the viewers of CNBC-TV18.
Thank you. Thank you very
Bye-bye.
much for joining in. Getting back to stock-specific action, it's Eternal in the spotlight. Mangalam joins in with a brokerage view.
Well, there was a mixed quarter that came in from Eternal this time around. There was good strength in the Blinkit NOV, but more importantly, there was some moderation in the food business NOV. Even though the revenue was higher on account of better take rates, the margins expanded a lot lesser than what the street and the company, both of them, anticipated. And that's what brokerages are, summarizing as well. While they are positive still on the prospects, CLSA still maintains their high conviction outperform and a target price of 450 rupees. They believe that much stronger than expected, net order value for Blinkit and much higher contribution for food delivery was good. But Blinkit adjusted EBITDA was lower than expected, largely due to the pace of customer acquisitions. HSBC too, they've written they have a target price of 390 rupees on the stock. They're saying food recovery remains slow despite increase in spends for the customers. Quick commerce margins disappointed due to heightened marketing and expansion costs. And valuations are not undemanding now, though stronger quick commerce industry tailwinds and superior execution keep them, positive on the stock. So that's why they have a buy rating. Nomura too, they call it a mixed bag. They're saying that the food delivery business was marginally below expectations. However, they do expect net ordering value to actually grow by 15% in this year and sustainably at 20% once the consumer sentiment turns. So now all you got to wait for is the consumer sentiment turning in the food delivery business and some sort of margin expansion coming by or loss reduction happening in the quick commerce business.
All right, Mangalam, thanks a lot for giving us that quick take on Eternal. Well, let's go focus on Big Boy Reliance. We'll be reporting its quarter numbers. Sonal is here with the key expectations. Sonal?
Well, a good quarter is expected from Reliance Industries this time around. Remember, the stock has been flat in last 1 year, trades at 21.7 times FY27 earnings. If we talk about a quarter-on-quarter number, it is expected to see an improvement. Revenues to come in at 2.46 lakh crore rupees. EBITDA expected to increase by 4% to come in at 44,511 crore rupees. Margins expected to expand as well to 18.1%. The profits, they will decline 22% on a quarter-on-quarter basis. But do remember, in the base quarter, there was a one-time income of 8,924 crore rupees because of that stake sale that happened in Asian Paints. So optically, number will look lower on a quarter-on-quarter basis. Now, what are we watching out for? Growth this time will be led by the auto chemicals business because cracks have improved across products. Also, retail growth because of some GST cut impact that we'll see, and revenue per square feet will see an improvement on a quarter-on-quarter and on a YY basis. There could be some weakness in the oil and gas business because of some pricing issue. However, if we talk about the Jio number, Jio's EBITDA is likely to surge 16% on a YY basis, 2% on a sequential basis because of higher ARPU that came in because of the tariff hike. Retail EBITDA expected to grow by 11% on a YY basis. If we see the trend as well for EBITDA, this time around expecting a multi-quarter high EBITDA led by the auto chemicals retail business. So watching out for those numbers today.
Sonal, thank you very much for that. And that's going to be the big one, right? Later today evening when they report numbers. Well, we want to focus on one of the prominent capital market companies now, which are in focus. I'm talking about Angel One. Now, Angel One reported numbers for the second quarter and revenues came in slightly softer, profits largely in line with expectations. We have Ambrish Kenge, Group CEO of the company, now joining us to talk about all of this. So just three things, as we always do before we go across to management. Second quarter results and outlook is something we'll focus on they're taking a price increase. So expectations on with regards to volumes post this price increase in insurance, allied opportunities, wealth, etc. What's the picture there? So lots of stuff to talk about as far as Angel's business is concerned. Amrish, good morning again. Thanks very much. Happy Dhanteras, happy Diwali to you, your loved ones, your team at Angel. Thank you for coming on.
Good morning, Prashant, and thanks for having me here. Good morning to, happy Diwali to you, Rima and Nigel. Good to talk to you again.
Absolutely. Amrish, I'll get to the numbers in just a bit, but I think as we've done for the last couple of quarters, and pardon me for that, there is just so much attention on not what is in the bag, but what can perhaps happen. So maybe it's a little unfair to ask you, but I'm going to ask you anyway. So humor me. What have you heard with regards to this? We put out a couple of stories recently. Our colleague Yash has put out stories where, it seems to suggest that with regards to the weekly options product, the thinking perhaps has maybe undergone slight change. I mean, it's evolving, but at one point, it was looking like they were going to come down hard with a hammer, but doesn't look like it now. There was that consultation paper which was supposed to come out. So just anything you can tell us in terms of where this is at, what you've heard, have you been asked for any data, any views, would be very helpful, Amrish.
Yeah. No, Prashant, look, I mean, everybody's kind of looking at it because, any regulatory stuff people are interested in. Look, we haven't heard anything from the regulator in this regard. Really, what has been out there is in the public domain. And it looks like some of the news that you have broken out, you may have more news on this. Our approach to this is, we have to focus on what we are doing, keep executing on it, keep serving our customers. But really, I haven't heard anything on either the consultation paper or we haven't been approached with that at all at this time.
Yeah, there's another story this morning, right? Because there is so much interest around this. I mean, it kind of sort of goes to the heart of to market action volumes, etc. There's a Bloomberg story which says in India, SEBI to upgrade HFT rules to ensure fair play. SEBI to prioritize deepening India's cash equities market. So, I mean, that second bit, to prioritize deepening India's cash equities market. I mean, I thought that was interesting, but we'll see as and when things happen. Tell us a little bit about this price increase that you're taking, Amrish. What prompted it and any implications off of it once it goes into effect?
Yeah. By the way, I mean, I know you didn't ask me that question, but since you sort of you kept that thread open on the cash market, I think deepening the cash market is overall a good thing. I think it will sort of deepen other markets as well as you deepen the cash market. On the price increase, really, it is not a real increase. It's really bringing it in line, making the pricing simpler. What we had different pricing for intraday and delivery, and now we have made the pricing same across the board. And that does create some uplift in the bottom line, but the real purpose was to make pricing simple.
But does it give a bit of a lift in terms of pricing overall?
Look, it does give a lift. It does give a lift in terms of our revenues, and most of it falls down to the bottom line. It will be about maybe 50 to 60 crores. We talked about that yesterday on our earnings call. It'll be about a uplift of 50 to 60 crores that falls down to the bottom line, PBT directly.
All right. Hi, Amrish. Good morning. Good to have you on the show. This is Nigel on this side. Well, I just want to focus on that F&O broking side of things. It accounts for, I think, around 45% of your revenue ballpark. What percentage of this comes in from weekly expiry trades?
Look, yes, it's about 46%. Broking is 46% of our revenues. I don't have this handy, and it's kind of hard to calculate what comes out of it. So I don't have that breakup ready for you there. But in the end, actually, a large part comes outside of the weekly expiries because the expiry days are smaller than the overall days, but I don't have that breakup for you.
No worries. All right, let's focus on a couple of aspects then. How do you see the margins trending from here on? If you could give us a number, ballpark, what should be the range? Because client acquisition is going to continue. You'll be putting in some more advertising cost as well. But what an impact will it have on margins? Keeping in mind that you have taken a price increase, so that will cushion some part of it. Targeted margin band, and also I wanted your comment on the market share. Because, though the market has been a little bit of a lull, but you seem to be gaining market share. At least that's what it suggests on a quarterly basis. So tell us more.
Yeah, no, Nigel, good question there. On operating margin, we have kept the same guidance. We expect to exit the year with 40 to 45% OPMs, operating margins. So that guidance remains, and we are pretty confident that we will get to that margins, because you've seen our revenue, this quarter, if you see, the PAT grew 10% quarter over quarter on an adjusted basis. On an absolute basis, it grew 87%, but we take some, if you adjust for IPL expenses, other things, it was about 10% PAT increase. Revenues also went up, net revenues went up by 5 to 6%. So we are continuing to show that increase. So we are pretty confident that that will happen. On the market share, and that's the important part, like if you see this quarter, I felt it was a really strong quarter, because you had sort of, remember last time when we were talking about it, the Jane Street stuff had just happened. We've had all these wars. ADTOs actually have gone down. If you look at quarter over quarter for the last quarter, in spite of all of that, we've shown a strong quarter and increase in our revenues. Market shares actually quarter over quarter, if you look at cash as well as F&O market share, they've gone up by about 70 bips. The commodity market share has gone up by about 800 bips, but that's aberration. So if you look at year over year, they're about 300 bips increase. So I think we are performing well. Our focus is on giving the customers the best experience we can give, the best products we can give, the best platform we can create. And then I think rest of it just takes care of itself. And market share is really important, because as things turn around, like last quarter, FIIs were really negative. Now, as all of that turns around, if you have a good market share, the tailwinds actually help you. So we really focused on giving a great experience and having a good market share there.
All right, let's focus on the optionality value as well, which could add value for shareholders as well. Tell us about the new Angel One Live Well Life Insurance. I think you have minority stake over there, 26% odd. What's the opportunity size out there?
Yeah, so they're into, they'll be into insurance manufacturing. They are a player who have international experience. They have some really good technology where, the face scan technology that can help. They are also a player which is very digitally oriented. We are also very digitally oriented. So there's a really good synergy there. So far, I think if you look at it, life insurance is really large in terms of how it's sold physically. We think there is scope to sell it digitally, and with this kind of a venture and us having a large base of consumers, them having a really good technology, and that combination we think is really good for the consumers also. With GST, some of these rates will come down as well. So I think long term, this is a really good prospect. These are all things that you're seeing from us, Nigel, where we're sowing these seeds, and a lot of these will actually germinate and create big trees, we think.
Yeah, just one, Amrish, on this massive rally in gold and silver, right? And I think you have a fairly healthy market share, although I think the market share there dipped a little bit in the month of September from a very high level. Could you tell us what is the sustainable market share in that segment, and what has this rally meant for you in terms of volumes on that side?
Look, we report commodity market share as a whole. We don't report specific commodity shares inside of that. Month-to-month variations are very hard to predict, Prashant, because what you see reported is not just a factor of what our volumes are, but what the composition of the commodities is. If one commodity goes up and let's say we have less market share, then suddenly you'll see that share drop. If another one goes up, we have more market share, you see that go up. So I won't read too much into month-to-month variations. The silver and gold going up, is overall sort of, I think volumes have gone up, but market shares will depend on, again, we'll see how that shows up in October. They depend on the composition of the commodities. But what you will also see that more players are entering and expanding this market. So what you might end up seeing is the market shares may change, but overall, I hope the market expands, and that I'm seeing a bit of that already.
Amresh, always a pleasure talking to you as well as the entire team at Angel One. Appreciate you joining in. Looks like you're bracing for better times second half of the year. That's the hope. We'll track you to some of these numbers, but have a good festive season and regards to the entire team.
You too. Happy Diwali.
All right. Well, before we get into that break, I just want to pull up a stock. HAL stock is moving higher on good volumes. Our Minister Rajnath Singh will be unveiling HAL's third Tejas line in Nasik today. And the newer facility will raise, I think, the Tejas annual production from around 16 jets to around 24 jets, reading an article today. So, that's the reason I think we're seeing an additional volume out there. And the other one, I think, is the new listing. Canara HSBC, it's a flattish listing. 106 is the price. I think 106 is what the initial rate as well has come. We'll get that as well up for you on the screen. But a quick note for our viewers then, as you can see, that's coming up on your screen in a short while from now. There is a money control stock score just above the line graph. Now, this is a score assigned to each stock based on money control's multi-factor algorithm. It's calculating by analyzing over 40 parameters, including both the current and the historical financial statements, the price charts and technical indicators for every stock. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive at an overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or sell recommendation. Any investor viewer is advised to carry out the necessary diligence on their own or through a certified registered financial advisor for investment decisions. Well, we'll slip into a short break. On the other side, we'll focus on the pharma sector in our special segment, Quarter Se Quarter Tak. We'll have Sayan Mukherjee of Nomura who will be joining in as well. Stay with us.
Co-presented by Bank of Maharashtra, Ek Parivar, Ek Bank. Co-powered by National Stock Exchange, Soch Kar, Samajh Kar, Invest Kar. Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI, best hai sabko pata hai.
Welcome back. Markets, I think, have slipped a little bit, but not by much, about 10 points lower. So the high today has been, actually at yesterday's high, 25,625 was the high yesterday. Today is 25,623. So just about there, and then there's a bit of a pullback which is taken place from that particular level. 1,400 stocks are lower, about 1,300 stocks are higher. So it's basically on an even keel without too much change. Lots of new names, by the way, in the mix, which were not there in the morning. So I'll just name the new stuff, right? Adani Power is now the biggest volume-led gainer as far as the NSE is concerned. You've got Asian Paints, which is up 4% now. So that's a sharp move higher, which we are seeing. And Asian Paints, by the way, 2-3 days back from 2,300, it's moved up to 2,500. So that's a fast-paced move. Share India, I highlighted, with a 9%. It's the third largest volume-led gainer right now. Two new names into the mix in terms of top volume-led gainers. HBL Engines, 3.5% on it, $950. Very large volumes on HBL. And look at MTAR Tech, I mean, it's a company we've spoken to recently, and they put out that guidance. Oh boy, what a month it's been having. 20% after a 30% month, which was the previous month. So MTAR has done very well. There's other stuff as well. GM Breweries has been doing very well. Force Motors, we were discussing with Hiren Ved earlier. Force Motors is up 4.5% right now. There's a company called Krizag, one of the few listings recently which is way below the issue price. So 8% higher on that one. So lots of stuff moving, and I'll address more in a bit. But it's time for our special segment, Quarter Se Quarter Tak, and today we put the focus and spotlight on what the expectations are from the pharmaceutical space. Ekta is standing by with exactly that. Ekta, over to you.
Thanks for that. Well, overall, let's start with the domestic pharma segment, where growth is expected to be around 10% on a year-on-year basis. Companies are likely to see a 50 to 200 basis points impact from lower primary sales following GST revisions in September of 2025. Chronic focus players like Sun Pharma, Torrent and Zydus should outperform, while acute heavy players like Alchem, Mankind could see softer growth. For US generics, expect overall US sales to remain flattish Q-on-Q due to lower contribution from the anti-cancer medicine Revlimid generic across Dr. Reddy's, Aurobindo, Cipla and Zydus, alongside continued base business price erosion. This should be partly offset by traction in key products such as respiratory drug Spiriva generic and kidney drug Lynarc for lupin. Now, bladder control drug Mybetriq generic, which is basically for Zydus and lupin, and new launches like the cardiac drug Entresto for Alchem, Torrent and Dr. Reddy's, and the blood thinner drug Zalretto for Aurobindo and lupin could be in focus. Now, Cipla could see a decline Q-on-Q in the US due to flattish lanreotide sales and albuterol sales. For Biocon, you're likely to see around a 14% growth in core biosimilar sales. On the operating side, higher R&D and SG&A investments coupled with pricing pressure in the US are likely to keep EBITDA margins largely flat. Stock specific, watch for Sun's traction in specialty products with a focus on Lexelvi launch, color on impact from the announced tariffs on branded pharma, Lupin commentary on competitive landscape for tolpraptan, and Dr. Reddy's launch plan for semaglutide in Canada and Aurobindo could be something that could be watched for. Within APIs and CDMO, watch for high single-digit growth led by Divi's, Loris and SciLife, while Syngene and Piramal Pharma could post muted quarters this time round. Well, back to you guys to take the conversation forward with Sayan Mukherjee.
Okay, all right, Ekta, thank you very much for that. So that is a quick perspective on what the expectations really look like as far as pharma is concerned. Sayan Mukherjee is now with us, Head of India Equity Research at Nomura. Sayan, good morning. Great to have you with us here. Happy festivities, happy Dhanteras and Diwali to you and your team at Nomura and your loved ones as well. Thanks for joining us this morning. I trust you heard Ekta's crisp explanation of course, what the preview set looks like. What stands out to you? What's the broad sort of overlay as you look at these earnings, analyze these numbers in the space, Sayan?
Thanks, Prashant, and happy Diwali to you, your team, and the viewers. Yeah, I mean, this quarter is a bit unique, I would say, in the sense that there's just too much of volatility and disturbances, if I may say so. So the numbers per se may not really convey much. And I think people would sort of look forward to some of the expectations, which Ekta had outlined. I think the key issues that we would be dealing in this quarter is slowdown in India because of the implementation of GST. Many of the large companies tend to book their sales a few days before the end of the quarter. And to that extent, since the GST got implemented towards the end of September, one could expect, meaningful slowdown, I would say, in the month of September, which will sort of get reflected in this quarter. But that should reverse as we go into the next quarter. And the other issue is around generic Revlimid in the US. Most of these large Indian companies, they have contribution from Revlimid, which is now coming to the fag end of the exclusivity period. And therefore, we should brace for some decline. And I think most importantly, what it means, because generally the street believes that Revlimid is a very high margin product, and if that starts to decline, you could see that manifesting into margins, lower margins. So I think that would be the key to watch out for as far as this quarter is concerned. But as I said, it's a transitory quarter, and a lot will depend on what the guidance or the company talks about the future Q3 and Q4.
All right. Hi, Sayan. Good to have you on the show. This is Nigel on this side. I was just recalling what you said in our earlier chat in January, and it seems, you're pretty much on the money. And I say this because you were saying be very stock selective. On the Nifty, maybe, low single-digit returns is what you're going to be looking forward to. Consumption could get a boost. That has well happened. And the last point I think you made was focus on some of these, quick commerce plays and, some of these platform plays. And they as well have done well. So you've had a good track record this year. But from here on, what do you feel about the markets? You've gone through a bit of a time-wise correction. We have lagged our peers, emerging market peers, the global market party, and most of the asset classes as well. Do you think with the fiscal, monetary policy support that we have got, maybe things look up from here on? Earnings as well could pick up.
Yeah, absolutely. I think, late last year, I guess, given the valuation and the growth headwinds, I think that was probably easier call. Now, of course, a year has passed and India has underperformed. I think we should see some improvement definitely in the third quarter, driven by consumption, the GST cut, and there are other factors as well, right? The inflation is low. We have seen, monetary stimulus being unveiled. So we should be, seeing traction in consumption. I think that's something which probably the market has already started to factor in a meaningful way. I think the key would be the sustainability of that strength going beyond the festive season. How much of that strength continues and whether it sort of kickstarts a stronger economic cycle. I think that is still not very certain in the backdrop of several uncertainties, particularly on the global front, that we continue to face. And unfortunately, things haven't really settled down yet, and we still are grappling with significant amount of uncertainties from the global side.
Sayan, well, I'm just going to toss it back to the conversation on pharma, and I'm going to ask you about what your thoughts are with regards to what's taking place in the US now when it comes to this entire tariff situation. The branded pharma drugs seem to probably be more impacted. We've heard positive noises that, the generic pharma is probably unscathed at this point in time. Do you think that Indian pharma is now out of the woods?
So we can't say it's completely out of the woods, but I will be in the camp that it would be difficult for the generic companies to be tariffed, at least at a very high level. And if you see incrementally, the noise that has come from the US does suggest and give us confidence. I think there is statement suggesting that the Section 232 investigation is not thinking about tariff on generic pharmaceuticals. That's one. The Trump administration has talked about strategic reserves and also giving some sort of priority for filings which are done out of the US. I think the broad objective here seems to be there is today an over-dependence on imports as far as pharmaceuticals is concerned. If they can get some bit of an ecosystem established, that's enough. I mean, it's very difficult for generic manufacturing in large scale to move to the US. And actually, Indian companies does add significant value because of cost, quality, and therefore I don't think the US would like to completely create or try to sort of completely change that, particularly in a complex sector like pharma where it takes years to establish supply chain. So I am getting more constructive as far as generic pharma space is concerned from a tariff perspective. As far as brand, as you said, yes, I think that's a little bit more challenging. But most of the Indian companies, except for Sun, who has presence on the branded sides, most don't have. And I think going forward, the fact that the US is talking about lowering drug prices in the US, and probably we'll see an increase in prices in Europe. So that also changes the geographic dynamics as far as branded medicines are concerned.
Okay. What is your opinion on, the entire CDMO space? Do you think that's, a space you would be interested in, something that you're recommending to your clients as maybe a longer-term beneficiary of, say, the China Plus One?
See, CDMO theme, I think there is definitely a truth to the narrative. I think people are looking at diversification, whether, you have a Biosecure Act in some form or the other. But I think, the companies in general, the innovator companies are looking at alternatives, and India is clearly a beneficiary of that. Now, I think, like in many pockets of the market, I think the narrative is very strong, and that's already reflected in the stock prices and very high valuations for many of these stocks. And and therefore, we may not really see immediate returns here. And many of the companies would have to go through an investment phase, whether it is in technology, whether it is in manufacturing setup, so that we can really compete with China effectively. And I think we would see a significant amount of investment in the space. From a long-term perspective, if you're thinking 5 years as a horizon, I think this space does provide a lot of opportunities, because there are many small companies which can scale up quite rapidly. But in the very short term, in the near term, given the run-up in the stocks and valuations, one may not expect a lot of return immediately.
Sayan, thank you very much for that. Ekta, thank you very much for taking us through that conversation as well. Really appreciate your time here, Sayan, and good to get that. Well, the market, I think, is back up, but it's, 20 down, 30 up, that kind of session so far, but it's still very, very early days, the first 40, 50 minutes. Sudeep Shah is with us with a quick view on price action. Sudeep, good morning. And, wishing you a happy Dhanteras and Diwali. What's the call?
Good morning, Prashant, and wishing you and everyone at CNBC TV18 a very, very happy Diwali, and all our viewers also. Prashant, what I feel is last 2 days price action is speaking everything as we are entering into this festive season. Markets have also cheered, and 25,400, 25,350 in all our previous discussions, that was that zone which we wanted Nifty to cross, and then we would see a big move on the upside, and that is exactly happening. And one important thing of what we are noticing is that although the mid-cap side of the market has not moved yesterday, but the large-cap stocks have reacted well. And now we feel that 25,400, 25,450 now will become a base for the markets in the coming few days. Until this is held on the upside, 25,800, 25,900 levels can be witnessed in the next week. From the Bank Nifty perspective, 57,100, 57,150 now becomes an important support on the downside. And with the kind of momentum and strength that the banking stocks are showing, I feel 58,000, 58,300 can be witnessed in the next couple of days. And we all know that it's a result-heavy weekend. So I guess that is the reason I feel that banking stocks are going strong into the results.
Got that. In terms of specific ideas, Sudeep, what do you have?
A couple of them. One is from the defense space. Today we have seen the defense stocks breaking out on the upside, HAL, BEL. So we like BEL more amongst all the other stocks, and 415, 416 is where BEL is trading at. It is at its breakout point. On the downside, 404 now becomes an important support. So till 404 is held, we feel an upside up to 440 is on the cards on BEL. The second stock that we like is from the large cap space. That is Bharti Airtel. This stock also has given a breakout on the weekly charts and can be bought with 1930 as a stop loss on the downside, with 2100 targets on the upside.
Got that. Sudeep, thank you very much. Good speaking with you. Enjoy your weekend and festivities. Thanks very much for joining us. We come back in just a bit from now. And we put the focus back on the commodity space, which I think is really on a tear, especially precious metals, gold, silver ETFs once again making a big move this morning. Manisha coming up with that in just a bit. Okay, welcome back. Commodities in focus, and Manisha is with us in festive attire. Manisha, good morning. Gold and silver unstoppable run.
Oh, well, yes, I wish I could talk about something else, but it is gold and silver which continue to make headlines. So take a look at the gold prices. Every single day when you wake up and the Asian markets are nearly $30 to $50 to $60 on the higher side. As you can see, we still are trading $40 on the higher side. 43.80 is an all-time high that we have seen happen in case of gold prices. It has been one very, very strong run. We started this year with 26.50. We are trading at 43.80 right now. So yes, it has been a 62% of a jump up that we've seen happen in case of gold prices there. And with that, it's a 64% of gain as well. Various new factors that have come into the market which are supporting is the US credit market concerns. Well, remember, last 24 hours, this is what has been on the streets' mind. And this has led to a decline in the global equities as well overnight, whether it has been about Europe, US markets closed lower as well. And that in turn also seems to be supporting gold prices. And then you have US and China trade concern. The rhetoric from both countries does not stop. And that does well for the bulls who are into the gold markets right now. It also is about the prolonged US government shutdown. Until that continues, why would you short gold? And that's exactly what the markets are doing. The US Fed rate cut expectations when that meeting happens on 28-29 October is almost factored into the prices right now. With the kind of run-up that we have seen in case of gold, if you look at the overall global market cap of gold, that now stands at a tall $30 trillion. We've seen a very strong run-up come in for this one. But the one question that everybody is asking and talking about is, on where is gold headed from here? And that's exactly what we have for you in the next plate here. So you have Societe Generale Bank of America talking about $5,000 an ounce in the next year. That's exactly what the latest report from JP Morgan also says. Goldman Sachs as of now says $4,900. But remember, we are still talking about 2026, and these targets can perhaps change. For this year, by the end of 2025, the targets were for around 3,500. We are trading at 43.5 right now. So 5,000 by end of 2026 is what we're looking at. So clearly, even with this run up, the banks and brokerages believe that it is going to be higher highs from here on as well. Take a look at some other banks as well. Blue Line Futures talks about 5,000. Stancy is talking about 4,500 as an average. So clearly, they expect higher prices there. And then ANZ is talking about 4,600 by June 2026. The second half of next year perhaps could be slightly different depending on how things change when it comes to tariffs, geopolitics, US dollar index. So there's plenty to watch out for. And I have saved JP Morgan for the end because he's talking about, Jamie Dimon clearly has talked about 5,000, 10,000, take a pick kind of a conversation. So clearly we are looking at very, very bullish gold prices there. And then you have silver trading at a record highs on your screen. It has been 0.5% of a gain as we started Asian markets today for this one as well. For silver, everything that is about gold is working for silver. And in addition to that, you have seen, one, prices rise by 85%. So it's outperformed gold on a very, very strong basis there. And then you're looking at a global supply crunch that's fueling a historical rally here. There is a silver squeeze happening in the international markets. The US and China trade concerns, almost everything is supporting silver. And at this point in time, it is 50% of silver usage that you're seeing in industrial markets. So that is something that you don't have a proxy for. And with the deficit, very, very supportive. So while we are trading at $54 an ounce right now, Bank of America, ETO markets are talking about $65 an ounce by next year. SD Bullion talks about 75. Motilal Oswal came out with a report yesterday. They're looking at 55 on an average in next year. And for the Indian markets, Motilal Oswal says that you could be looking at prices of 2,40,000 rupees by next Diwali. So that's the kind of bullish cues still continuing when it comes to gold and silver.
Well, dazzling moves there, Manisha. Thank you very much for that. And that's a topic we continue to sort of focus on for the rest of the day and as we go into Dhanteras tomorrow. Thank you very much, Manisha. Well, we'll take a quick commercial break here. Lata will connect with Ajay Kumar Srivastava, Managing Director and CEO of Indian Overseas Bank, to talk about their second quarter numbers. That's a conversation which follows in just a bit from now. Stay tuned.
Welcome back to Earnings Central. Indian Overseas Bank, or IOB, is one of the first PSU banks to announce its second quarter numbers, and it has set a standard that should be very difficult to beat. An absolute standout set. Contrary to expectation, margins have risen by 17 basis points over the last quarter to 3.21%. Credit cost, or the money you set aside for bad loans, has actually fallen sharply by 31 basis points, and now credit cost is just 1.06%. Profits are up 58% year-on-year. Advances are up 21% year-on-year. Only deposit growth is a tiny disappointment at 9%. To take us through whether these three themes, loan growth, margins and low NPAs are sustainable in the coming quarters, I have with me the Managing Director and CEO, Ajay Kumar Srivastava. Mr. Srivastava, thank you very much indeed for joining us. Festive greetings to you for Diwali, and congratulations on a good set. Let me start with the margins. Most banks are going to continue to suffer a curb in margins because of the repo rate cuts. How come it hasn't affected you, or how come your margins have already bottomed out?
Yeah, in fact, reduction in repo rate was anticipated, and almost 9 months before, we started proactively to address the concern.
Okay.
It's not the numbers which we have shown and the increase in the margin NIM.
Okay.
It's not overnight, over 9 months of meticulous planning.
Okay.
And successful implementation of the strategy has resulted in that. And this 3.21 also, that is global. If we take domestic, it's 3.35.
Oh.
Quarter on quarter and year on year, we have been able to protect margin. June was, of course, we have not been able to do.
Okay.
But increase in interest income, increase in quality credit, and the more importantly, the focus on good pricing.
Okay.
We have been very selective and lending to those entities only where pricing is good and quality is good.
That's very good to hear. There will be possibly one more rate cut in December or February. That is the expectation, because inflation is surprising on the downside. The governor himself said in the press conference that there is space to support growth. If that is a cut, what is your guidance on margins? Will you continue to rise or keep your domestic margin stable at 3.35 at least?
Yeah, we are pretty sure that it will be around that 3.35, between 3.32 to 3.35. Plans are already in place. About 9 months before, our total credit portfolio, 60% of that portfolio was repo linked, external benchmark linked. And over 9 months, we have very consistently shifted to MCLR-based lending. And it's not as if that
Now what is the percentage? Now what is the percentage of repo and MCLR?
9 months before, it was around 60%. Now it is around 46%.
Okay.
Last 9 months, whatever we have lent, that mostly we have lent on MCLR based.
Okay.
And it's not as if the impact of repo cut will not affect MCLR, but as we all know that it happens with a lag.
Yes.
And accordingly, deposit rates also in between get repriced.
Oh.
So the margin we have been able to protect, and going forward also, if any rate cut happens, we are pretty sure that we will be able to maintain at that level.
Okay. What about deposit growth? I mean, that is the only fault I can find in an otherwise perfect set of numbers. Your advances are growing at 21%. Your margins have grown your deposits have grown at 9.1%. So the credit deposit ratio has gone up a bit towards 80. You think you will be able to, up your deposit growth? What is the target?
Yes, see, the growth in deposit has to be seen in one particular factor, that the composition of deposit at IOB, it's not bulk deposit based.
Okay.
If you look at the numbers out of the total bulk share in total deposit is only 5%, 17,000 crores.
Okay.
Out of a total base of 3,30,000 crores. Okay. Meaning thereby that 95% is CASA and retail term deposit, which is very stable.
Okay.
If we want to increase deposit, of course, every day we can go for aggressively for bulk deposit. And that deposit growth also can be shown at 13-14%. But very consciously, we are not focusing on that. The focus is on retail and CASA and that organic growth. And without any additional focus on bulk, we have been able to grow at 9%. Okay. CASA is also growing year on year. If you see, CASA has also grown. Okay. And then we are pretty satisfied with that.
Okay. Your retail advances, there is a lot to agriculture, and of course other retail. Would you worry about any likelihood of slippages? What is your unsecured loan percentage as well? We don't have that number.
We don't do unsecured lending as much. It will be less than 1% only if we look at the total portfolio size. And last 2 years, if you see every quarter year, the slippage ratio has been around 0.11, 0.12 like that. We have been one of the best performers as far as slippage control is concerned and slippage ratio is concerned. This quarter also it stands at 0.11 only.
Okay.
And we do not see any stress whether in agriculture book or MSME book as a product as a whole. Individual cases may be there, but systemically we do not see any stress.
Okay. You indicated that you all are moving to the new tax regime by the third or the fourth quarter. Can you tell us what that will mean to your ROE or earnings? What will be the impact on the P&L and balance sheet?
Yeah, P&L, once we shift there, in fact, we have delayed the shifting to new tax regime only because we wanted to protect P&L. We never wanted that it's going to adversely affect that. So we delayed it. Now we are in a position where in Q3 or Q4, even if we shift to a new tax regime, there will not be any impact on P&L and we will be able to smoothly shift to new tax regime.
Oh.
That is why it has been delayed by almost 1 year. But Q3, I think most probably will be able to do that.
Will there be some positive impact on ROA or something? I mean, as it is, you've done very well in your ROA from 82 last year, 82 basis points. You've gone up to 1.2. That's a very big jump in ROA. Will that be protected?
Yeah, it will be protected, and it will further improve also.
Okay. Again, I'm trying to find some faults in your results, which are otherwise very good. EPS growth, that's the one that disappoints. I mean, if you look at your price, given the earnings, which is less than a rupee, your EPS, your PE ratio looks very high at about 60 times. What is the EPS forecast you can give? I mean, your profit is doing well. That's why I'm asking.
Yeah, it's very difficult to comment on that. What I can say to this is that our job is to give good numbers, generate good profit, generate good numbers, a good balance sheet we are supposed to give, which we have been doing consistently over the last 2.5 years.
Did you hear anything? Yeah, sorry. Go ahead, please.
And beyond that, we do not have any control on other factors. That is what I wanted to say.
Okay. No, I'm just saying if there is any EPS forecast or guidance that you have in mind.
No, we have not thought of that.
Okay, Mr. Srivastava, did you hear anything about consolidation? I mean, when you all are doing so well, the only other bank, PSU Bank, which came with numbers is Bank of Maharashtra. Again, it was a very good set of numbers. So, any consolidation talk from the ministry?
Officially, we have not heard anything from any of the authorities. We are reading in newspapers only.
Okay.
But officially, there is no communication.
Okay. What's your sense about what will be your growth engine in the second half? Will it be retail? Which part of retail? Will agri continue? It's a little worrying. Agri sometimes throws up bad loans, especially in the first quarter. So what is your engine of growth and where are your worries?
If you look at my total credit portfolio, retail, agri, MSME and corporate, all are equally distributed, around 20 to 25%. So there is no special focus on any particular area, I will say, depending on the pricing and the borrower type and financials of the borrowing company. Okay. We are taking a call. We have grown in retail also, MSME also, agri also, and corporate. We have been, I will say that growth is almost flat in corporate. Okay. And mainly because of pricing issues, because corporates are having other sources also of getting funds. And because of pricing, we are not very aggressive on corporates. But
yeah, I can see your corporate loans are falling. It's down 3% year on year. Just a final question, any MFI loans?
Around 1,400 crores of exposure we are having. And out of that, NPA percentage is 2% only.
Okay.
And otherwise, the remaining portfolio of MFI, right now, it's working fine. Okay. And all are regular and standard.
All right. We'll have to leave it at that. Mr. Srivastava, once again, many congratulations for a great set of numbers and a very happy Diwali to everyone in your team.
Thank you. Thanks a lot. Happy Diwali to you also. Thank you.
Thank you. We have to wrap up on that note. And from all of us, the entire Bazaar team, a very happy Diwali to all of you viewers. Take a break. Chartbusters coming up.
Presented by Punjab National Bank, the name you can bank upon. Co-powered by SBI. Best है सबको पता है. Co-powered by SBI. Best है सबको पता है. In association with Think Equity, Think Motilal Oswal.
Shares of Wipro trade 4% lower after reporting an inline set of September quarter numbers. Management tells CNBC-TV18 that the third quarter will be impacted by seasonal furloughs. Stock lower.
Eternal trades under pressure. The company's revenue sees strong growth, but management indicates growth in the food delivery segment is expected to remain slow in the near term.
Pain stocks trade with a bright green shade as crude prices fall to a 5-month low, heading for the third weekly loss. U.S. crude inventories rise by 3.5 million barrels. Festive cheer further boosts sentiment.
Shares of Zee Entertainment trade lower after the company's EBITDA and profit fall short of analyst estimates. The company also reports a negative operating cash flow in the second quarter.
And a flat debut on the bourses for Canada HSBC Life Insurance. Shares reached at 106 rupees, which is just about a mild premium to its issue price. We'll be joined by the management shortly. Stay tuned for that. You're watching us here on Chartbusters on this Diwali special on CNBC TV 18. We wish you, your family, all the viewers a very, very happy Dhanteras and season's festivities. And markets are actually doing just that, celebrating in those festivities. We join you live from the CNBC TV 18 Motilal Oswal studio. I'm Mangalam Malu, with me Vinny Motiwala. And we bring in, the Dhanteras pre-Dhanteras trading session with a 100-point move on the Nifty. It's conquered the 25,600 mark, closing in towards that 25,700 mark. The Nifty is at a one-year high, but more importantly, the Nifty Bank went within 5 or 6 points of a fresh record high. The fresh record high in the Nifty Bank is 57,628. Where is it right now? 57,615. The high today, 57,621, thereabouts. So just keep an eye out on that index. Keep an eye out in the markets because there is a fair amount of festive cheer in our markets. In fact, now it's just a few points away from a record high. Perhaps in this show itself, it happens.
Absolutely, hoping for that, Mangalam. Vasi, festive greetings to you as well, and festive greetings to all our viewers. But let's take a quick look at the mid-cap space, Nifty mid-cap. That's the one that's not cheering as much as we're seeing in terms of the Nifty Bank or the Nifty. Nifty mid-cap is trading with the cuts of almost 1/10 to 2/10% in today's trading session. Small cap, that's managing to hold on to gain. So keep an eye out on that. Advanced decline ratio is somewhere in between only, not much of a gap that we're seeing today. So keep an eye out on that one, around 1,200.
I'm sorry to interrupt you out there. The Nifty Bank has hit a fresh record high right now. A fresh record high for the Nifty Bank. That's the headline of this morning right now. Ahead of the Dhanteras session, the Nifty Bank has hit a fresh record high. Go ahead, Vinny.
Fresh record high, 57,000, and what are we watching out of 57,000? 636, 637 is what the fresh record high is. So yes, surely cheer coming in there. Let's keep that with the cheerful side as well, because FMCG, that also is managing to hold on to strong gains today as well. Today also, in terms of the sector, top sectoral gainer coming in from the Nifty FMCG side as well. So keep an eye out on that, but the cheer coming in obviously for Nifty Bank today. But Mastag, that's what we want to focus in on as well. That's the stock that reported its Q2 numbers. Subdued quarter that came in Q2 FY26. Dollar revenue is near the flat line, while profits saw a rise of around 6%. We're joined by Umang, the CEO at Mastag, to discuss more in terms of the numbers, the outlook of the company going forward as well. Umang, good morning. Thank you so much for joining us on the show. Firstly, festive greetings to you as well as your team and everyone in your family as well. In terms of overall, when you're looking at it, the CC growth this time is coming at around 0.2%, while in terms of peers or the companies that have reported their numbers in the IT sector, they've given a growth of around 2%. What is it that now could lead to a pickup in terms of this growth, or what was it that was left out this time for Mastag, which led to this muted growth in terms of CC revenue?
Good morning, Vinny, and festive greetings to you and all your friends and family too. So yeah, it's been a steady quarter for us. The CC growth, as you know, is around 0.2%. Which is, I would say, definitely not as high as we would have expected it to be. Some of it is still, I would say, steady, performance as far as our US business is concerned. The US business isn't, the demand cycle in the US still has a lot of macro uncertainties, which is differing the, decision-making cycle for our customers. And that's leading to a little more short-term view by many of our customers as far as their discretionary spend is concerned. And that's been a theme that we are still trying to work on. We now have a new leader in North America, and we are very excited to look and work with him. Having said that, our UK business definitely continues to grow strong. We had seen, again, a 4% quarter-on-quarter growth with our UK business across all sectors. And we feel very confident that the combined business, as the US starts to ramp up going forward, that's going to be a key for really driving the Mastag business to its true growth potentials. And all hands on deck focus towards executing and driving that.
How far are you from growth returning? Because, it's lower than peers. What do you think caused that?
So there are two parts to the equation. I think the way we are looking at our current business, a lot of it is AI-driven efficiency asks that we are seeing. The take that we are taking to the market today, Mangalam, is AI efficiency asks are real. AI productivity gains are very, very real. We want to really go out and deliver it transparently to our customers rather than just doing an eyewash around. Customers are cutting through and seeing that. And that, I think, step back and demonstrating the efficiency today is what will really create the roadmap for a significant uptake as we go forward. So we are in some of our key customers in the mid segment and some of our larger customers also demonstrating, very tangible AI ROI to them, which is around productivity and efficiency. As we do that, we also are working with them and discussing much larger piece of work that currently sits with some of the larger players that we could gain a significant share of. So a lot of AI for technology-led efficiency is what we are demonstrating today. This kind of tangible performance, we believe, is the core for building a stronger AI-led business as we go forward.
Have you lost an order to Infosys recently? I just wanted to understand, because you've been working with NHS for a while, and NHS recently awarded a near $2 billion, almost 14,000 crore contract to Infosys. Were you keen on it? Was it something that you were looking at as well?
No. I think it's an order in a very different space, although it is still NHS, but it's a very different wing and arm of NHS, and for a service line or capability that we were not competing for. So it's not a business that we have lost to them. Our current business with NHS is more around the preventions and the data-led efficiency or decision-making that they're doing. That continues to grow strong, and we see strong demand. This current business that Infi has won has no direct correlation to our piece of work that we do with NHS.
Okay. Umang, in terms of the US business also, I want to understand that contributes around 23% of your revenues, right? So that has also been a bit slow in terms of pickup, not coming as much as one was expecting. When can you start seeing strong growth here? What about the US segment margins as well, if you could give us any indication there?
Yeah, US is a business that is of extremely high focus to us. That's been a business that has been more flattish, and that's been the reason why we haven't been delivering as much growth as we should have. Although our UK business definitely is pulling the weight and delivering phenomenal growth. From a US standpoint, we've been making some structural and people corrections. We've gone through those changes now. We have a new leader in place, like I was saying, a very hands-on and capable leader that we are very confident will start driving the business forward. Also, two other parts, a lot of the US business current discussions are very, very active and centered around AI, which is more of AI for technology, which is around AI efficiency and productivity gains. Some of these sectors that we are in, especially around the healthcare payer or retail, also are experiencing challenges as far as their bottom line performance is concerned, and the customer are asking for those kinds of tangible savings to them. Our current posture is to go out and deliver those savings to them, and therefore create the stickiness to deliver much larger business program, which is what we're also discussing with them.
All right.
I think it will take us another 2 quarters before we start really going into very strong growth momentum in North America.
Take that point. Just quickly before we let you go, running out of time, Umang, on the margins, you've delivered a 50 basis points improvement despite passing on the AI savings to your customers. What do you end this year with when it comes to margins, and how much of a wage hike are you factoring in the third quarter?
So margin focus and operations improvement has been a constant theme that we've been looking at for the last few quarters consistently. If you look at our revenue per employee is growing phenomenally. Like I said, it's a reflection of the amount of AI-led business that we are executing. And I strongly believe that our margin performance, while we are offering some of the efficiency gains to our client, some of it is also benefiting us, and it's a share between the client and us, and which is what is starting to reflect on our bottom line and will continue to reflect in our bottom line efficiencies as we go forward in the rest of the year and the years going forward. So I think the margin or the bottom line performance is going to continue to stay healthy as we move forward.
It will stay healthy as you move forward. Umang, thank you so much for joining us this morning and talking to us about your numbers and outlook of the company going forward as well. That was the management of Mastech for you all. But on that note, we're going to actually slip into a very short break, but a quick note for our viewers. As you can see on the screen, there is Money Control stock score, just above the line graph. Right now, you can see for Nasdaq, it's 64. Now, this is a score assigned to each stock based on Money Control's multi-factor algorithm. It is calculated by analyzing over 40 parameters, including both current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive in the overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or sell recommendation. Any investor or viewer is advised to carry out necessary due diligence on their own or through a certified registered financial advisor for investment decisions.
Market continues to do well. HDFC Bank powering the Nifty, bank ahead, which is just near record highs after hitting it just a few minutes ago. Let's talk about the new listing on the bourses, a flat debut on the bourses for Canada HSBC Life Insurance. The stock listed at around 106 rupees per share, still holding around those levels itself. Anuj Mathur, who's the MD and CEO of the company, joins in to discuss more. Thanks a lot, Mr. Mathur, for joining in. Festive greetings to you, your team, your family. More importantly, a momentous day for you as well. So congratulations on the listing, and we wish you good luck for your journey in the stock markets from here on. And as the journey has begun, you'll have more conversations with us, and perhaps we'll press you a little more for numbers too. Let's start right now. The first half of this year, your new business premium, your APE, etc., were all slightly subdued. What's the target that you have for the industry in the second half of this year, and how much better from the industry, better than the industry, would Canada HSBC do?
Yeah. First of all, thanks for having me on the show, and I would like to thank our investors. We had a successful IPO. It's a very special day, as you rightly said, for us when the company has got listed. So we announced our quarterly results, the first quarter results. The second quarter results will be announcing, H1 results will be announcing in the next few days. So as a company, we have done very well. And our strength lies in the bancassurance model which we have. We have over 12 crore captive customers. We have access to 15,700 branches. And as a company, we are very, very profitable for the last 13 years, very, very healthy solvency margin. And we are very confident that in the past, we have actually outperformed the industry in terms of growth of APE. And we are very confident that that will continue. So we will be announcing our H1 results in the next few days, but Q1 was good for us.
Hi, Mr. Mathur. Good morning. This is Vinny joining in the conversation. I just want to understand in terms of the VNB margins as well, right? So currently, when you're looking at it, VNB margins as on 30th of June 2025, the numbers that we have, 19.5% was your VNB margins. Now, versus peers, it's slightly lower than them. So I want to understand what maybe could lead to higher margins going forward from here on, or are these your peak margins? What are we watching out for now?
Thanks, Vinny, for asking that question. See, I'd like to mention that actually the VNB is also dependent on how old the company is, because the older you are, the book is more, and then the VNB also comes from that. So vintage plays a very important role. Another important factor in VNB is the cost, and our cost ratios are very, very low. We are very efficient. So as the book grows, the business is growing. We have seen very good growth in the past. So our VNB also, in accordance with the growth of business, will accordingly grow. I don't want to make any forward-looking statements right now, but if you see our VNB in 17th year of business, actually it is in line with the industry. I would say slightly better than the industry in the 17th year of business.
You know, some of the private players have VNBs anywhere between 25 to 29%. Do you have an aspiration to get there, and what's the path?
So you see, most of the insurance companies came in the first wave, particularly the listed players. They got listed. They started business in 2000, 2001. So these businesses are almost 25 years old. We started our business in 2008, so we have history of 17 years. So yes, our book has grown. Our VNB has also grown over a period of time. And as I mentioned, as the business grows, as the vintage increases, the VNB is bound to increase. So I think we will see good growth in future, but I can't put a number right now. It will not be right for me. And I think in the H1 results also, you'll see that we will be disclosing our first half VNB.
You have an aspiration to improve it by a few hundred basis points over the next few years, right? I mean, not a specific number, but that's the direction.
That's right, because as I mentioned, we are a very, very efficient company. Cost ratios are low. Business, our top line has grown higher than the industry. So going by all these assumptions, there is no reason for our VNB to be lower than what we have done so far. So yes.
Okay, and what about the ULIP share as well? That's what I want to understand. I think last time when he spoke, you said that ideally you would look at 40 to 45% would be from ULIP. Also, so what does that mean for your margins? How much would that start adding? And when would you come down to this 40 to 45% share from the ULIP side?
Yeah, so I'll say last year was an aberration because last year we saw markets going up significantly and we saw customer demand coming for more ULIPs. Traditionally, we have been kind of traditional focused company because our customer profile is such. We have customers from tier 3, tier 4 cities as well. So if you look at our product mix of the past, we have been around traditional focused company and roughly about 55 to 60% has been our traditional mix. And that is something we are very confident that we will move to that mix. In fact, if you see our first quarter, we have seen actually growth which is happening in the traditional business and ULIP mix has gone down slightly.
All right, take that point. Wish you good luck and we will have a conversation with you once you've reported your second quarter numbers and perhaps get a more detailed look into what your numeric guidances are. But for now, enjoy the day, enjoy the occasion. And once again, festive greetings to you and your team. Take a short break, come back on the other side, more markets and stock-specific action on Chartbusters.
Welcome back to Chartbusters on CNBC-TV18, and we are seeing record high levels continue for Nifty Bank. Nifty also is about 25,700 at the day's highest point is what the Nifty 50 is trading at as well. So yes, day's highest point for the Nifty Bank. Nifty also, keep an eye out on that one. Nifty IT, that's the one bit subdued after numbers that have come in from some of these IT companies. So that is something that we're watching out for. Nifty is actually at a 52-week high, so it has hit the highest level in almost a year. Keep an eye out on both these, Nifty Bank as well as the Nifty going forward. Keep an eye out on that. But with that, we're absolutely out of time on this edition of Chartbusters on CNBC-TV18. Thank you so much from Mangalam, me, as well as the team who put this show together. Up next, your Trading Hour.
Co-powered by SBI. Best है सबको पता है. In association with Think Equity, Think Motilal Oswal. Co-powered by SBI. Best है सबको पता है. In association with Think Equity, Think Motilal Oswal.
You're tuned into Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Hormus Patakia. We are in the festive mood. So are the markets today. What a stellar rally that we are seeing right now. It's a 150-point uptick that we are seeing. What about the markets in general? Mid-caps, they too have recovered from the lows.
In the pink of health are the markets, and you can say that with all confidence. The Nifty bank is at a record high. The Nifty is now moving in a one-way direction towards the 25,750 mark, now 150 points higher on the index. It has crossed above that 25,700 mark for the first time since in 2025, and the Nifty bank at a record high as well. It's a 10,000 point recovery on the Nifty bank from the lows that it made in March.
Absolutely. And, you know, if we talk about individual names as well, they're just not reacting to earnings anymore. There are a lot of other factors, one of them being the markets surging in trade as we speak. Nifty FMCG, that is the top gainer in terms of sectoral movers, 1.3% higher there. We have Nifty Auto, which is contributing as well. IT not so much after those earnings coming in from Infosys and Wipro. We do have the metal index, which is lower as well. But all in all, not much to complain for the bulls today, at least with Nifty Bank surging to those levels. But Hormuz, you have some market movers on your radar. Tell us more about it. Which are the stocks there?
No reason to complain whatsoever. And the broader markets are painting a similar picture now that they have started to recover from the lows. It started with Aztec Life Sciences. The stock has now snapped a 4-day losing streak today. And it's been an underperformer so far. It's gained only thrice in the last 10 trading sessions. But it is the biggest single-day gain that the stock has seen in 2025, this 14.5% up move. The volumes that you have seen today are already the highest since June. They will cross them very soon as well, so maybe we'll have a different picture come afternoon. 6.5 lakh shares have already traded on Aztec Life today, and you take a look at the 20-day average, that's only 2,300 shares. Now the stock has also moved above its 50-day moving average of 821 and the 200-day moving average at 824. The next level to watch is going to be the 100 DMA, which is at 836. Share India Securities, we spoke about this yesterday, we spoke about this morning as well, is another 9% on this stock today, is up 42% now in the last 3 sessions, and today's volumes in the first couple of hours have already crossed yesterday's volumes. We've had 1.2 crore shares that have been traded. The 20-day average is just 4.5 lakh shares, and we spoke about that 200-day moving average yesterday. It has now broken above that level and is sustaining above it. The extent of the underperformance has been such that despite this 42% gain in the last 3 sessions, the stock is still down 40% in 2025. And the last one on the list today is Whirlpool. Consumer durable names are making a move in the festive season, but today is the third straight day of gains for the stock. It's up 16% now in the last 3 sessions, and the volumes this week have seen an increase every single day. And today, of course, is the highest that you have seen in the week at 12 lakh shares being traded. The 20-day average is less than 80,000 shares. And despite this up move, as also features among the underperformers, does Whirlpool is down 28% in 2025 amidst all of these stake sale rumors from the promoters.
Oh, yes, some interesting moves there. Thank you so much, Hormuz, for bringing that list for us. And, you know, IT continues to take the center stage, right? LTI Mindtree, that's one stock on our radar, reported a strong set of Q2 earnings. The EBIT margin was up 160 basis points. Our colleague Rima caught up with Venu Lambu, who is the Chief Executive Officer and Managing Director of the company, on their Q2 results and the outlook. Listen into what he had to say.
Yes, it's been a strong quarter for us. We reported 2.3% on dollar terms and 2.4% on constant currency. I think when we spoke last time, I guess at the end of the Q1 results, I did share my plan that we intend to reach nearer to the double digit sometime in the second half of the year. And I think, the results of second quarter essentially, pushes us in that direction. So the plan is intact. We have a good pipeline, and we're executing towards that plan. So I would say somewhere in second half, most likely in Q4.
But beyond the second half of the year, do you think, say, FY27 onwards, on an aggregate basis, the company can hit double-digit revenue growth in its stride? I mean, is that the direction?
Look, we always want to grow faster than the industry, but I guess it's too early to talk about FY27. Probably when I talk to you sometime in January, I'll be able to give you a more directional view about the FY27. Right at the moment, we are all focused to make sure that the second half is has the same growth momentum, the profitable momentum, both on we grow both on the revenue and profits, and meet our goals.
So under the Fit for Future initiative to expand margins, what's been the extent of margin improvement and what is the headroom?
Well, I think when we spoke last time, I did mention about achieving 100 basis points over a couple of quarters. And if you see our results this quarter, we are ahead of the plan, right? So, we're sort of already meeting the commitment that we made. But having said that, as I mentioned in our earnings call yesterday, we do see that there is an opportunity to sustain this margin and also to improve it as we get into the Q3. So, I don't want to put a specific number to it, but, you can expect that we will expand margin in Q3 as well.
Your salary hikes are now going to be implemented in two phases. Half of them in Q4 and the balance in Q1, FY27. Is that correct? And again, give us the margin implications. You talk about sustaining and improving margins, but some guidepost in terms of the goalpost would be helpful.
Well, we don't give a specific outlook, but as I said, the commitment of expanding 100 basis points at the back of Q1, I think that we are ahead of the plan. And I still see a scope we can get better both on the cost side and the kind of deals that we pick up that will help us to expand the margin in the second half of the year. Now, when it comes to the wage hike, look, I think it's important to put a context to this approach. The context is that I do believe that in the new normal, are we going to see one increment one day for all of the employees? Probably not. I think we will see an increment to be done over, more than once in a year or a couple of quarters. And in some cases, you actually, might do it throughout the year in different phases for different teams and the skill sets that we identify as important. But I think, if I just put it in the larger context of the transformation that the industry is going through, and most importantly, our company, we want to take our employees as part of that transformation journey. And, hence, we feel that once we meet those milestones, we'll reset into the new normal and how we manage the wage hikes going forward. So we announced the wage hike effective from January 1st. So we'll start giving it in phases between January and April.
Your deal wins were $1.6 billion in the quarter gone by. Can you break down how much was net new versus renewals?
Well, we don't call that out, but as you would see, most of the renewals also come with a new scope, right? So it's not a like-to-like renewal, both in terms of scope and in terms of price point. So most of the renewals have an incremental business that gets added to that.
Are there any large or mega deals that you're likely to close in the second half of the year that can materially lift growth? I mean, are you close to signing any large deals?
No, nothing that I can announce, but I can say that our pipeline is pretty strong. Right. Last quarter, when I know that I was about to sign in a few weeks and a month's time, I took a chance of sharing that. But as we enter into the, sort of a Thanksgiving holiday and Christmas around November and December, though there are deals which are at a very interesting phase, in the sales cycle, but I just don't want to put a timeline to say that, can we sign that in Q3 or so. But I can just assure that we have a good pipeline in large deals and we are focused in closing them.
How are the Q3 furloughs likely to be? Similar to last year or more, given the uncertainty in the environment and the fact that the tariff deal has still not been struck?
Well, at the moment, we see the furloughs to be the same as last year. There are no different variations that we see. So it's the same as last year.
Yeah. How many employees did you send, Venu, on H-1B visa this year, FY25 and last year? And what is the plan now with the hike?
Sure. It's a very small number, to be honest. It's in hundreds. This year is about 250, 300 that we had, employees moving on to the H-1B. Over the last couple of years, our dependency on H-1B has actually reduced. In US, it's about 50% of our employees are on H-1B, and the rest of them are on visa-independent category. We have a plan in place to strengthen our nearshore delivery. Our local hiring is getting strengthened, and I also see clients talking to us to increase offshore. They're also talking to us, to leverage a good mix of nearshore, on-site, and offshore. So I think the business will settle to its new normal. I don't see any material impact with regard to the H-1B topic is concerned.
But 50% of the US employees are still on H-1B visa. Would you like to bring it down? Because there are margin implications of paying that 100,000 visa fee?
Well, the H-1B visa fees for the new applicants, the employees who are over there, we will walk through them for a period of time, along with our customers, as and when the point of renewal comes.
The management of LTI Mindtree among the top earnings reactions of the day. The stock not doing enough as of now, but still trading above the flat line. The Nifty 160 points higher now, well above the mark of 25,700. We take a short break. We focus on the crypto markets on the other side with Manisha Gupta.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
In Crypto Corner today, we are talking about crypto staking. I mean, this is an important one. Remember, you always do buy cryptos, but how do you put that to use while you're sleeping? This is something that you can do via crypto staking here. So crypto staking is a process of locking up some part of your cryptocurrency to support operations of proof-of-stake blockchain network. This is one part of it. Well, proof-of-stake blockchain network, what is that? Proof-of-stake blockchain network uses a consensus mechanism. What happens in this is that your moves have to be validated, and this is done by validators here. Interestingly, this method is more energy efficient. It also replaces complex computations with the commitment of staked coins therein. Also examples, the major ones, blockchain networks which do use that are Polkadot, Avalanche, and Cardano. Now, what are the benefits and how does crypto staking really work? So as I said, you already have bought cryptocurrencies. While the prices rise, you are making gains there. But when they're not, what you can do is you can put this cryptocurrency to use, and some certain amount of this can be put out, and this will earn you, this participation will earn you passive income there. Now, this is used to help validate and process transactions on the network, as we spoke about. For your participation in securing this, this help in newly minted coins or network fees is what you get as you stake your cryptocurrency. So as I said, a passive income is what you generate once you stake your cryptocurrencies there. It's a core component also when it comes to at POS, which is proof of stake, Bitcoins or blockchains, that is, which are considered as more energy. Various benefits, as I told you, it earns you passive income, it supports the network, and it is a simple way of participating, being part of the blockchain network, and you don't really have to do big computations or have big computers or get into difficult mining therein. You can be part of network and earn money as reward and fees being a part of this.
Okay, all right. Thank you for explaining that to us, Manisha.
CNBC TV18 presents Crypto Corner, powered by CoinDCX.
Right, thank you so much for explaining that to us, Manisha. But let's move on and talk about stock markets now. Rossari Biotech, that is the one on our radar, reported their Q2 earnings with revenue and EBITDA beating estimates. Sunil Chari, co-founder and managing director of the company, is joining us now to explain what happened in the quarter gone by and the outlook going forward. Mr. Chari, good morning. Thank you so much for joining in. And festive greetings to you and everyone at Rossari Biotech as well. Let's talk about the business now, because this time around you said that growth in institutional and B2C business remain muted. What is happening here exactly? Do you expect some recovery that could come by? And what is it as a percentage of overall business?
The B2C or the semi B2C, which is the institutional cleaning chemicals and the pet business which we have, the pet care, grooming and food which we have. The EBITDA has the losses have reduced. We had loss of about 3.8 crores now in the Buzil Rossari business, and we continue to focus on getting this to EBITDA neutral by the end of this year. We cut down on products where we had lesser margins, and we did not focus on growing the business. Rather, we focus on making it EBITDA neutral. But on the good side is that our B2B business, which is our main business, we have a 15% EBITDA. We have a 14% growth in the first half or the first half of last year. Our EBITDA is now the highest. We had the highest quarterly sales and EBITDA ever in our history. US markets did not, and the exports did not do as well. Although we had 28% of our sales as export, which is again highest, but we expected much more. But September was a little subdued, and otherwise we could have done still better.
Mr. Chari, good morning. Thank you for joining in. You mentioned September was a little subdued, but have things picked up going into October? That's part one. And since you mentioned exports, the growth that you saw in the second quarter, which was around 36%, does that number sustain for the full year as well?
We are hoping that this will sustain for the full year. Our efforts are there. And I think the tentativeness which is there, especially in the Americas, with regard to placing orders, should go away in this quarter. So we are hoping for the best. The domestic market seems to have picked up a little. And this could also be something which we have to cheer about.
Okay, that was going to be my next question, Mr. Chari. Overall revenue growth has been 9% in Q2, out of which exports we have seen have grown around 36%. How much was the growth overall in the domestic markets? I'm talking about every business, B2C, B2B, institutional. And what kind of volume growth did you see in the quarter gone by?
See, if you compare year on year, the first half, we have more than 20% growth in volumes over corresponding period in the last year. So this volume growth is based because the pricing of the products have gone down. The raw material prices have gone down, and consequently, with the pass-through, we also have the finished goods pricing coming down, and the oversupply in the Chinese market, especially in the petrochemical derivatives, is putting pressure all over the world for this. And then the tariffs and the uncertainties, and Europe also is going through its own set of problems. So we are also focusing on the Far East and the Southeast Asia, for growing our exports. But the MENA region could be another area which we should focus for the future.
So are you going to shift your focuses towards Southeast Asia and all other such economies to grow your exports, as you were mentioning? But has there been any positive response from any potential clients that you have reached out to within these geographies, Mr. Chari?
Yes, we have started a lot of new clients, both in MENA and the Far East area in the last quarter, and we continue to see uptrend in this also. So we divide, our eggs in different baskets. But the US and Europe will continue to be a majority of our exports. That is what we believe in the future.
So, this time all segments have seen good growth, be it your textile specialty chemicals, animal health and nutrition. Those were some of the segments which were seeing some pressure. Can we say for good those pressures are done with and now you will continue to see the growth that you saw in this quarter? And secondly, what was the growth in Unitop's business? There were some pressures with respect to supply chain because it's largely agrochem focused. Is that done away with as well?
Traditionally, the third quarter we get business from the south of India, and I think we should. The monsoons have been pretty, good, not bad there. We had a lot of issues with, monsoon in Punjab and north areas, and we think, the next year we should have pressure there because with the floods there is a lot of sand which comes and settle on the ground. But also a lot of our agrochemical customers export to the Americas. They will feel the pressure. And our textile industry especially is going to be in a trouble this quarter, and if the tariff situation does not improve, because the home textile, which is one of our bigger markets, the focus is US for our customers, and all of them are in big pressure. So textile, we don't see the growth sustaining definitely, but home personal care and performance chemicals and animal health and nutrition is something which we think should do well.
Mr. Chari, once the second phase of your ethosylation capacity comes on stream in the third quarter and the other capacity expansions that already have come on stream, what does that do to your overall financials in FY27? What are the kind of improvements that you are envisaging then?
See, for example, now this month we have had issues with the supply of ethylene oxide because the Dahej plant had an unexpected shutdown of Reliance for EO, and we have shortage of EO this month. So this shortage of EO should go away, hopefully, in the second half of the calendar year of next year, or maybe the second half of the financial year of the next year. Till then, we are maintaining the business and trying to grow the non-ethoxylate business, which is basically the esters and polymers, and also the animal nutrition segment. Once we get the EO, we have the markets, and I think we should grow well.
All right, so we'll watch out for when you get the supply easily, and that is something that would serve the business output as well. Thank you so much, Mr. Chari, for joining in today with your thoughts and insights on the outlook going forward. That's Rossari Biotech, but it's time for a short break now. We'll get you more on the markets on the other side. Stay tuned for that. Welcome back. You're still tuned into Trading Hour. It's a good time to get all the trends from the FNO space. Mangalam Malu is joining us now. Mangalam?
It's a sparkling looking screen if you look at, the frontline indices. The Nifty well above that 24,750 mark. The Nifty bank at a record high. The Nifty bank at Nifty itself at a 52-week high. All of that doing well. But in the mid-cap index. The mid-cap index isn't participating in today's rally, but nothing really to worry about out there as well, because that too has been doing well in the earlier parts of the week. If you look at the advanced decline, it's split right down the middle. In fact, we have a little more number of stocks which are declining than the number of stocks which are advancing. But two things that I'm watching out for that may prevent a further melt up from current levels. First part is the India VIX. Even as the market's moving higher, you would want the VIX to come lower, but that's not happened. In fact, the India VIX has seen a big surge, so the chart of the India VIX comes up for you. The second part that I'm looking at is that the Nifty put call ratio has moved higher as well. So if you look at the stocks that are gaining, you do have the ones which have been underperforming, which are seeing some traction. So the likes of Asian Paints, HUL, Bharti Airtel, the consumption theme ahead of the festive season doing extremely well. And a large part of the short move, the move has been led by short covering in a couple of these calls. 25,400 call, 25,450 call, all of them have come in for a fair amount of short covering. On the way down, we've seen 25,700 and 25,600 put see a fair amount of writing as well. Typically, when this happens, it is something that takes the PCR higher. So the PCR, the put call ratio, has now moved to the higher end of the range, 1.44 versus 1.36. Typically, at these levels, we see a bit of consolidation and a cool off, after which the market moves higher. So that's something I'm watching out for. A lot of short positions added in a few IT names, Infosys, Wipro, both of them under pressure today, and a lot of long positions added in, again, consumption-related names. Gold, Muthoot Fincorp at, because of gold being at a record high, PG Electroplast, again, electronics doing a lot better, so maybe one of those plays out there. Those two counters fairly well bid in today's trading session. Market looking sparkling. How far the sparkle goes is something that we'll have to watch out for, because the India VIX is higher and so is the put call ratio.
As should be the case, right? It's Diwali. The screen has to sparkle, so does the markets. And so are you, Mangalam, sparkling.
Thank you.
So take a short break.
You have Patakia in your name, so there's a Patakia in your name.
Who would have thought that? Seriously.
Okay. Take a short break here on Trading Hour. And we're back with more on the other side. S&P Global Ratings is Neil Gopalakrishnan joins us on the other side. We put the spotlight on Indian corporates. Stay tuned. Welcome back. Now, as India gears to scale its economic growth, all eyes are on Indian corporates. Now, in their recent report, S&P Global Ratings say that they see parallels between India Inc. and their Chinese corporates counterparts of the early 2000s. Now, they anticipate top Indian corporates to double their spending and capex over the next 5 years. Neil Gopalakrishnan, who is the director of corporate ratings at S&P Global Ratings, joins us now. Mr. Gopalakrishnan, firstly, thank you so much for joining us today. Festive greetings to you and your team as well. It was a very interesting report that you've put out. You're drawing parallels for India Inc. to their Chinese counterparts. If you could summarize those parallels for us, what are the kind of parallels that you are seeing for Indian corporates going forward?
Sure. Firstly, thank you for having me in the studio, and it's a very festive atmosphere here. Nice to be with you at this time. We have been positive on the outlook for Indian corporates, the growth potential, and also the balance sheet health. And we have reiterated this message a number of times. So this report was actually building on that, and we drew on some lessons that Chinese corporates experienced during their period of peak growth in the 2000s. And we compared that with what Indian companies are going through now. And we saw a number of parallels. Of course, there are differences as well, but since you asked about the parallels, the most common similarities we found were from a perspective of government policies which are supporting corporate growth, the promotion of policies in order to increase self-sufficiency, export potential, building domestic capability, and also on the infrastructure side, where the government is focusing on building infrastructure, reducing logistic inefficiencies, and thereby creating an environment where corporates can grow and become stronger.
You mentioned in your report how logistics cost has gone down as a percentage of GDP, and these are smaller things, but they make a big difference on overall GDP as well. But when you said there are differences as well, we need to talk about that as well, right? Because we've seen the way Chinese economy has grown versus how India is growing. Of course, it's growing at a good pace, but what more needs to be done, which should be parallel to Chinese counterparts? What are some aspects that you saw is not happening in India?
So some of the similarities that I talked about, infrastructure development, the setting up of industrial clusters, special economic zones, these really helped Chinese companies grow in the 2000s.
Yeah.
And as we commonly say, they became a factory for the world.
Yes.
But a big change happened around the 2010s when Chinese corporates moved up the value chain. And this they did by investing heavily in technology, innovation, and by increasing spend in R&D. I would say in India, there are two big challenges now. One is on the technology side. We know corporates are not spending enough on R&D. So there needs to be more focused spending on R&D. And whatever spend there is today is quite fragmented. And this spend on technology is important from a perspective of strengthening supply chains, which is one of the reasons Chinese corporates became so competitive. The second challenge is in India is execution. Things are improving, but implementation, particularly greenfield projects, it remains a challenge. Issues around land acquisition and so on. And this also has implications for FDI inflow. So I think these would be some of the areas where things, if they improve further, would be really positive for corporate growth.
So is the lack of availability of skilled labor a challenge as well for India Inc. to execute their growth plans going forward?
I wouldn't say that. As we all know, there is a lot of talent in this country. So there is no shortage from a skills perspective per se. But if you look at specific areas like say R&D, for example, I think that is where probably there are skills gap. And maybe the incentives, we now have some design-linked incentives and so on to promote the R&D side of things. But I think that together with skills where greater collaboration between, say, universities, the public sector and the private sector, those could really make a big difference in the future.
What about financing? Because, there's a difference. There's been a difference in debt levels as well for both the economies. How do we go ahead and finance the R&D spends that you're talking about, the technology spends that we are talking about? I think we are internally sufficient for that?
I think you raised an excellent point. In fact, one of the differences we drew between China and India was the involvement of the state, where the Chinese government provided significant direct financial support to corporates. In India, that's more limited, but offsetting that is the fact that corporates have plenty of funding access today. So financing is not a constraint on their ability to grow. Specifically on R&D, the government itself is coming up with plans where they are investing in R&D, and that has to be supplemented by the corporates. It will probably happen, and we are seeing that. And as I said, there are incentives, but incentives alone will not move the needle. It needs to be a concerted effort, and at least on the technology side of things, we think it might take a few years, but things are getting there.
One interesting point that you mentioned in your note is that they'll be less reliant on exports, the Indian corporates. There are still a lot of export-heavy sectors in India. What more should be done to offset that or to turn those export-heavy sectors into domestic-oriented sectors? And if that happens, what kind of a runway can these expect in terms of growth?
Right. Good question again. And again, if we draw a parallel with China, in the early 2000s, interestingly, the Chinese domestic market was comparatively small relative to what India's domestic market is today. So the growth largely came from exports. Whereas in India, domestic growth is very strong. And in a number of sectors, we still import to meet demand. If we take the steel industry as an example, companies have significant growth plans, but the demand is growing as well that we still think it will predominantly be servicing the domestic industry. So to be able to export, two things. One, they'll have to grow even more aggressively. But in doing that, you also need to be mindful that India's own growth could have implications for the regional demand-supply balance. So that could affect profitability. And when China was growing, we say China didn't have to compete with China. But when India is growing, global competition is so high that you'll have to keep the global demand-supply in mind.
We are in a different
We
are in a different era right now. We are seeing a lot of macro changes at global level, at India level as well. But thank you so much for joining us today with your insights and this very interesting report where we could delve into what parallels we are drawing with China and what growth parameters we would look at going forward as well. It was a pleasure having you. With that, we'll slip into a short break. When we come back, management of South Indian Bank will join us to discuss their Q2 numbers and more. Stay tuned for that conversation. Welcome back. You're still tuned into Trading Hour on CNBC TV18. Let's get to our earnings corner and talk about South Indian Bank. PR Seshadri, who is the MD at South Indian Bank, is joining us now to talk about their earnings that they reported yesterday. Mr. Seshadri, good morning. Thank you so much for joining in, and festive greetings to you and everyone at the bank as well. Let's talk about loan growth, right? We are talking about the cuts that came by, the festive season cheer that came by as well. What's the sense? Earlier you mentioned a 12% growth that could come by. In the quarter gone by, it's a 10% growth. So do you stick to your loan growth targets and the deposit growth guidance as well of 10%?
Morning and festive greetings to all your viewers. Thank you very much for having me on this show. We are sticking with our growth targets. We think by the time the year is done, we should have more than 12% growth in our assets. We've had an extraordinarily good first half in terms of deposit growth. Our savings deposits grew 10%, current accounts grew 11%, retail time deposits grew 11%. So very strong momentum, both on the asset side as well as on the deposit side.
Mr. Seshadri, good morning. Thank you for joining in, and festive greetings to you and your team. What do you attribute this drop that you've seen in your interest income this quarter? And going forward, do you see this just as a one-off and things to improve in the second half?
So I think we've hit a trough in terms of net interest margin. This is essentially because we passed on the RBI rate cuts to all our customers at the beginning of the last quarter. So that's the full effect is flowing through for us in this quarter. We see net interest margins rising from here on. And in fact, the information that we do have internally is indicative of that. So I think this is just the bottom of the net interest margin ladder. And going forward, it's going to be much better. And the reason for this is that we have a large corporate book. Approximately 40% of our balance sheet is linked to external benchmarks, and we do have a fairly substantial quantum of very short-term assets where the rates in the market, given the fact that there was very substantial liquidity available, the rates actually dropped more than the repo rate change. So consequently, we were impacted by that. And from our point of view, this quarter, we've been able to change the asset mix quite substantially. And that we are feeling pretty good about, actually.
So how much would that number be? You're saying it's going to be higher than current levels. It was around 3% in first quarter, 2.8% right now. Do you maintain that 3% mark or maybe do better than that in this year?
So I think we should exit this year at back to about 300 basis points. We started the last quarter, we were at 3.03. We're now at 2.8. We think that we can exit the year at 3.03, actually.
Okay.
Mr. Seshadri, what about credit costs? Your credit costs were down this quarter, the calculated credit costs. Your provisions were down as well. Does that trend sustain? Were there higher write-offs this quarter?
They were not. Write-offs were similar to what we had the prior year. Just give me a minute, sir. The slippages came in at 21 basis points. Prior quarter was at 20 basis points. So we are our portfolio is in excellent health. And given that our provision coverage ratios had hit north of 90%, at this point in time, there was moderation that was required in the quantum of provisioning, which is why credit costs are down to where they are right now. And we think that will continue as we go forward.
Okay, and what about ROA? Do you see any downside risk to it? What's the outlook going forward?
We think ROAs will continue to be north of 1%, which is where we are at this point. And as the interest rate regime shifts for us, and as the retail and MSME loan book continues to grow, we expect ROAs to widen. I'd hesitate to give a target in the immediate future for that. But having said that, we think that the 1% ROA is something that we are reasonably confident that we should be able to deliver.
And what about asset quality, Mr. Seshadri? It was fairly okay this time around. There was some moderation that you saw from the June quarter. But for the second half, as you go into the new year, do you see that trend continuing? Do you see further moderation in asset quality, bringing gross NPAs down to around 2.5% levels?
Gross NPAs will drop. As of this moment, the quantum of provisions that we are holding are very substantial. At some point in time, the board will have to decide, what kind of write-offs to take, and consequently, gross NPAs will drop. The slippages are quite low. Our SMA2, is at 30 basis points, and between SMA 1 and 2, we are significantly lower than 100 basis points. So that gives us reasonable comfort as we go forward, and we do expect that the NPA numbers will trend in the right direction as we go forward.
Mr. Seshadri, thank you so much for sparing time and joining us. Festive greetings to you once again, and looking forward to having you more often on the platform. And the management there of South Indian Bank after their quarterly performance. Take a short break, get you more on the markets on the other side. Stay tuned. Welcome back. Now, investment buying has outpaced emotional purchases, signaling a shift in consumer behavior. And who better than Manisha Gupta to bring in a special report from Zaveri Bazaar on the eve of Dhanteras on the festive jewelry purchase. Stay tuned.
Let's also get a sense on how the gold jewelry sales are doing in Zaveri Bazaar during this Zaveri Bazaar festival here. Joining us to talk about that is Anil Jain, our Pukhraj Jewelers, and Mr. Kamlesh Jain is SK Gold. Thank you, gentlemen, so much for joining in. Anil, what is your sense, first of all, with the gold prices all-time high, 60% of gains in this year? Are you looking at a bit of a dent in buying, or do you think people are still attracted towards gold?
People have got now more frenzy. And it's like catching up. They all want to cash in on the daily basis rise and make quick money. The investment buying is like exorbitant, but the emotional buying is a little down.
I think so. This is the highest gold sale ever I have seen in my career from last 32 years. People are buying because this is the safest metal.
As compared to last year, Mr. Jain, what is your anticipation? Are we looking at a bit of a decline in volumes? And if yes, then how much?
I think so. From last year, my business has grown approx 50% more.
So there's no decline for you?
No, it's not decline.
But are people buying 22 carats, 18 carats? What is it that people are investing in?
People are more buying 22 carats and the investors are buying 24 carats. But major people are buying jewelry.
Anil, is it about lightweight jewelry or is it still bridals that's working for you?
The more the prices, the quantum will go down. So lightweight and light caratage also will come in the near future. It will be a new norm now. The 22 carat will wane off and 18 will be then setting in, maybe 9, maybe 12. Anything 12 carat also might catch up.
Thank you so much for joining in and giving us a sense on what really is happening here.
All right, glittering. That's what gold is looking like right now. Wishing all of you also a very, very happy and prosperous Diwali. With that, we'll wrap on Trading Hour. But stay tuned. Halftime Report takes all the market action ahead.
Co-powered by SBI. Best है सबको पता है. In association with Think Equity, Think Motilal Oswal. Co-powered by SBI. Best है सबको पता है.
Stock surge with Nifty at a 52-week high after rising past 25,700 for the first time in 2025. The Bank Nifty too scales to its lifetime levels. FMCG consumer durables lead the charge even as IT drags.
Infosys and Wipro post better than expected Q2 numbers, but muted growth expectations disappoint, particularly Infosys not revising up its guidance despite a strong Q2 show.
Analysts expect Reliance Industries to post a healthy quarter with operating profits growing along with some margin expansion. Growth is expected to be led by the O2C segment, with Geo and retail also chipping in. Some weakness likely in oil and gas.
Gold and silver continue their dream run, scaling new highs. Most analysts now see $5,000 per ounce on the horizon for gold. Silver too is seen scaling to $65 an ounce on a supply crunch.
We're here in our festive finery. You're watching us here on Halftime Report. I'm Mangalam Malu, with me Ekta Batra and Vinny Motiwala. We come to you live from the CNBC-TV18 studios, Motilal Oswal studios. But importantly, what's also in the festive finery right now is the market. We have the Nifty, which is almost 171 points higher, 25,750 as we speak. The Nifty Bank hitting a fresh record high. We have all the colors of the season. And even if you look at the mid-cap index, which is slightly underperforming, we still have an even keel on stocks which are gaining versus the stocks which are losing. So a lot of these consumption names doing extremely well.
Hi guys, yes, absolutely. You know, the celebrations are really trickling in terms of the markets at this point in time. If you look at it, the Nifty 50 on a week-to-date basis also is up around 1 point or almost 2% at this point in time. The mid-cap index is up around 0.8%. We have no complaints considering that the Nifty is at the best levels that we've seen in a year, and the Nifty Bank is at a record high as well. So no complaints coming in. Earnings as of now, the street seems to be rewarding earnings positively. So that's the other piece which seems to be working out for the markets at this point in time. But Vinny.
Hi, afternoon, Mangalam as well as Ekta, but we have an important interaction that is lined up for you all as well. So let's actually go across to Parikshit, who is in conversation with Rajiv Bajaj, Managing Director of Bajaj Auto. Parikshit, over to you.
Well, we had seen in November 2024 how Austrian motorcycle maker KTM had applied for legal restructuring and self-administration because they had encountered financial liquidity constraints and several hurdles. To bail them out and save them, Bajaj Auto, which owns a 49.9% stake in KTM's parent company, they came forward with a 800 million euro package. The company has already infused over 200 million euros. They have also secured a 566 million euro loan to support the rest of the loan that they had committed to KTM. And with this, they will be taking over the KTM brand, subject to an approval from the European Commission. We now believe that that approval is quite imminent. Joining us to discuss the road ahead is the Managing Director of Bajaj Auto, Rajiv Bajaj. Rajiv Bajaj, thank you very much for joining us on the program today. Let me begin by asking you about the timeline for permissions and approvals from the European Commission. What are you expecting?
Thank you, Parikshit. So exactly in line with what you said, as you know, our investment went in on 23rd of May, and a series of approvals was required after that. As we stand, all the approvals that are to come on account of mergers and acquisitions are already in. Those that were to come in terms of foreign investment approvals, I believe, are also through. We are waiting now for the key approval of the Takeover Commission. We understand that this may be forthcoming in November. We hope it will be positive, and which means that in that case, after a almost 18-year association, in which Bajaj has been a minority partner, we would become a 76% shareholder in KTM AG. and well, in PMEG actually, and from being an observer, we would take charge.
What, in your view, led to such a sudden and sharp downfall for the KTM brand? This was a pillar of Bajaj Auto's premiumization strategy. What, according to you, led to such severe financial constraints?
Well, Parikshit, yeah, we were all taken by surprise, I must say. I think most of the industry was quite shocked at how rapidly, this thing developed. And my mind goes back almost 30 years to what my first management guru, Dr. John Wallace, told me, which was simply this, that the single biggest reason for corporate demise is corporate greed. And I have really witnessed this play out at KTM, unfortunately, over the last 12 months in particular. I would say broadly three types of greed. First, operational greed, best exemplified by what happened in the last couple of years when KTM Austria kept producing and overproducing, even though the spike of demand that had come about post-COVID had calmed down. And as we all know, with the result that KTM distributors and dealers worldwide were carrying over a year's worth of inventory, which was just preposterous, frankly speaking. And then there was the, I would call it as a strategic greed. Companies often get into businesses that they have no business getting into. In the case of KTM Austria, the best example of that hurt them the most was getting into the bicycle business, specifically the electric bicycle business. When you have no synergy in any of your major operational areas, such as R&D or supply chain, or marketing, sales, and distribution, with such a business that may appear to be adjacent, but actually has no synergy with your core business, then really, it is irresponsible to venture into that space. This was the, second greed, the strategic greed of getting into a new area that was actually not synergistic. And the two factors combined to take KTM to insolvency in a period of months. Now, I know you might say that, but Bajaj was part of it, right. And I would concede that yes, we were also part of what went wrong. But I would only submit that as a minority partner, we could not prevent this, and I can share with you today that we did our best to resist it. So much so that I think it led eventually to the third kind of greed, which, if I may call it, almost a governance greed, where certain decisions like this were either taken, without our knowledge, without our information, and sometimes without even following due process. So we are quite shocked at what has been revealed to us over the last 12 months. That we have got involved in this process. I must clarify, we are not yet in charge. We don't have takeover permission yet, but as an observer, this is what we have come to understand. And if I might summarize it, leaning on the words of my other management guru, Jack Trout, he would say, the stock market can become the temple of greed. And I think this is what happened here. In the pursuit of valuations, some of these options were pursued that should not have been pursued. And when you link, the stock market price to company performance and company performance to the remuneration of top management, this is how things can go horribly wrong.
And you had warned them about this, would you say?
Well, this is something that has happened over years. So from time to time, whenever we were aware of some of these issues, if I were to enumerate all the minor and major issues, we would be speaking for the next hour or two. We took it up. But, as a minority partner, there was only so much that we could do.
Okay. Now, when we speak about restructuring and management restructuring, are we going to see some changes some major changes in KTM going forward? Would you begin with management restructuring?
Oh, yes, absolutely. This is a problem that is not caused by 98% or 99% of the KTM employees. This is a problem of the top management of KTM, the erstwhile top management of KTM. And that's why, quite frankly, most of them are gone. What we have now in place is a new team, a wonderful new team that I personally feel very confident about. The entire team is already in place, barring just one vacancy that will be filled in the coming months. And it's a very nice combination, I think, of some of the, if I may call them, our older colleagues who are still, very passionate about KTM, very committed to KTM, in areas like the product planning, in the R&D, in the legal department, etc. And then we have some wonderful, outstanding new colleagues led by our CFO, new CHRO, etc. So we have a great team in place, and I must make mention of the manner in which the Bajaj bench out of it. Yeah.
Absolutely. Now, just to ask you for an update on KTM sales in India, the GST impact on the KTM offtake, what are the exports that you're seeing from India right now, and what will be the US tariff impact according to you?
The short story would be that KTM India sales are growing very well. The domestic sale is up like 70% year on year. It is a combination of, I would say, half the credit goes to the excellent GST reduction move of the government, very well timed. And the other half goes to the introduction of the new products, particularly the new Duke 160, which is really flying off the shelves. So domestic sales of what we make in India is really at an all-time high. I think this month we will finish at the highest ever in our 18-year association. Exports also, I'm happy to say, have normalized. And you asked about the US in particular. And I'm happy to say that we believe US sales will continue uninterrupted in volume terms of the products that we supply out of India. Yes, we are hit by a 50% tariff, but that's the power of the Indian supply chain. Believe it or not, Parikshit, we have absorbed most of that 50% tariff. Some has been passed on to the consumer, a small percentage of that. And despite that, we will be exporting at an EBITDA that is higher than our blended corporate EBITDA. So that's the power of the cost competitiveness of the Indian supply chain.
Last time we spoke, you had said that the European manufacturing is dead. Any further developments in terms of re-engineering the KTM supply chain, optimizing costs?
With that one interview, Parikshit, I am told you made me famous in all of Europe. I had so many people from the KTM ecosystem telling me that, in that interview, my counterpart, Nick Blower from Triumph, said he's never received as many forwards of an interview link as he has of that one. And I find it very amusing because it was the erstwhile KTM management that has been presenting to us over the last 10 years, about how European manufacturing is dead, how KTM needs to move more and more production to India. And eventually we did move half the volume to India. They said, European work culture is dead. Wages are too high and working hours are too few. They showed us graphs comparing Europe, China, and India to that effect. Similarly, they said European politics is dead. Energy costs are so high, and as a result, all associated inflation is so high. They brought it to our notice that, Triumph is now made entirely out of India and Thailand. Ducati now has a second plant in Thailand. BMW is moving to Thailand. So, this is what I learned from the previous KTM management. And now, when I echo the same sentiment, I was frankly taken a little aback at the kind of, feelings it seemed to generate on the other side. But yes, I think restructuring the supply chain, moving more things to, lower cost supplies in Europe, outside of Europe, is certainly the way forward.
Right. Mr. Bajaj, also, what is the reduction we're going to see in headcount and also overheads at KTM? Have you set some targets for the company?
Actually, you touched upon what is really low-hanging fruit out there. Again, from the outside, so far, what we observe is that there is an opportunity to reduce the overheads by more than 50%, and the overheads are enormous. And that covers R&D, that covers all marketing areas, including racing. That covers, obviously, all the operational areas, some of which we just touched upon. And of course, if I may call it, the general administration, including IT. So over a 50% reduction, which is a lot of money. In terms of headcount, the erstwhile and the kind of current management that's been there in place since last November has already brought it down from 6,000 to 4,000 people, which in their own estimate is still too much. But what I find in a way amusing again is that in this 4,000, only about 1,000 people are blue collar. 3,000 people are actually white collar. And that's really perplexing because it's actually the blue collar that make the motorcycles. And in that sense, if some more of the volume is moved out from Mattighofen to wherever it makes more sense, whether India or otherwise, the impact actually on the blue collar is going to be relatively benign. The issue is going to be with the white collar headcount, which is very, very expensive, as you know, and it brings back to me Mark Zuckerberg's words when he said, the problem is that we have managers managing managers, managing managers, managing managers, managing managers who manage the people who do the work. So I'm amazed at the kind of overhead, the management overhead of bureaucracy that we found in this otherwise excellent organization.
Okay, that is an interesting chat there. Thank you so much, Parikshit, as well as Mr. Bajaj, for joining us for this conversation. But on that note, we're going to slip into a very short break. Viewers, don't go anywhere. After the break, we'll be joined by the management of Indian banks. Stay tuned in for their conversation.
Welcome back. Well, for the markets, it's holding steady. We have the Nifty, which is 180 points higher. We have the mid-cap index, which is a little pressured, so down around 56 odd points. But let's get talking about one particular bank which has reported numbers. Indian Bank is the next management on the show. It reported what was a good set of Q2 numbers. We have with us Mr. Binod Kumar, the MD and the CEO of Indian Bank, who's joining in now. Mr. Kumar, thank you very much for taking the time out, and season's greetings as well. Let's start by talking about the loan book, which was in fact better than what the street had at least anticipated or factored in. You've done around 12% plus. Just give us a sense in terms of, where exactly did you see growth come through in terms of advances and your guidance for the remaining part of the fiscal as well.
Yeah, thank you for having me here, and season's greeting to all of you. Loan growth has been better than whatever we have expected. We have given guidance of 12%, but it is 12.65%. Main driver of the credit is RAM. RAM sector, if you see, my growth in retail is 18.58%, whereas in agriculture it is around 14%, and MSME also around 14%. Even corporate book, which grew last quarter 1%, it has grew by 5%. So major driver is the RAM. And we are also seeing some green shoot in the corporate book, in particular in few of the sectors like green finance, data warehousing, smart metering. Some road projects are also coming, and coming quarter or maybe coming half year, I am seeing good traction for the ports also.
So what does that mean in terms of the remainder of this year and their advances growth? If you could give us a sense on that. And also, as the RBI has cut rates, the street expects maybe a cut more maybe going forward. What are your projections on NIMs for the second half of this year?
Yeah, so guidance, I have given guidance of 10 to 12%, and I stick to that. We may do little better than that.
Got it.
12%. Yeah, and on NIM, assuming there is a no rate cut, then I think if you see this quarter, my NIM has only 1 basis point contraction was there. So similar 1 or 2 basis point contraction I am seeing in the next quarter, and thereafter it should start going up if there is no rate cut. But if there is a rate cut, which is the environment for which is benign, if you see the CPI, etc. is good, but only thing, growth numbers are also good. So timing will have to see when rate cut comes. But when rate cut comes, there will be some further contraction on the NIM.
Okay, you're saying there will be some further contraction if there is a rate cut. So what's the percent of your repo linked booked, if you could help us with that as well? And what would be the impact if there's a 25 basis point cut? Then what would be the impact in terms of your NIMs?
Yeah, so my 48% of the loan book is linked to external benchmark, repo rate. Going forward, I can see if a 25 basis rate cut is there, then impact on NIM maybe by 5 to 7 basis point. Because some MCLR book will again reprice in Q3, so impact of that will also come.
Okay, well, some positive news which has come in for NATCO, where the Supreme Court has in fact dismissed the plea which was filed by Roche with regards to a spinal atrophy drug that NATCO had launched and Roche had challenged. So that means that it's a positive for patients which has come through, where patients will be able to access the drug at around 16,000 odd rupees as compared to Roche's, which was up to around 5 to 6 odd lakhs. So it's a big relief which has come in for patients. So, Mr. Kumar, just coming back to the numbers, your slippages, you seem to have done better in terms of your asset quality this time round as compared to what you have done, say, same time last year and even same time or even in the previous quarter. So give us a sense in terms of the slippages. You did around 1,132 odd crores this quarter. Is that the trajectory that we can expect for the coming quarters as well? What do you expect to end the year with?
Yeah, if you see my H1 last year, Q2 last year was 1.06%. This year it is 0.79. Sequentially also it has come down from 0.94 to 0.79. And going forward, this trajectory will be maintained because we have used some, using AI, agentic AI also we are using for the slippage. So account as and when it slips to say SMA 0 itself, even SMA 0 we have bifurcated into two categories, 0 to 14 days and 15 to 30 days. So we are making concerted efforts on that. That's why I expect trajectory to be continued.
All right. So you expect the asset quality improvement trajectory to continue, 10 to 12% growth, which you believe has chance of hitting the upper level of that guidance, and at the same time, you don't see a big change in your NIMs. Even if there is a rate cut, it will be about 5 to 7 basis points in terms of an impact. Final question then, in terms of capital raising, what's the kind of CRAR that you're at right now? And do you have any plans to raise capital in the very near future?
We are well capitalized, 17.31. And profit of Q1, Q2 is not added back when we are taking calculation of the CRR, because that will be added at the end of the year. So I don't see any need for the capital raise, but we have board approval of QIP of 5,000 crore. So if we see some good opportunity, then we may go for QIP. But as of now, there is no plan.
And you aren't seeing any opportunity for acquisitions as well right now. There's nothing on the table, right?
No, nothing. There's nothing on the table right now.
All right. Take that point. Thanks a lot, Mr. Kumar, for joining in and giving us a very stable, stellar outlook for the remainder of this year. And you have a fair amount of capital, also a provision to raise 5,000 crores if you were to go ahead and look at any opportunity out there. Wish you good luck for the remainder of this year. And once again, festive greetings. Take a short break, come back on the other side, more on the markets and stock-specific action. In fact, we'll tell you what the street is expecting from Reliance Retail.
Welcome back. Well, big boy Reliance Industries will be reporting its Q2 earnings today. Manglam is here with the key expectations from Reliance Retail this time. Manglam, over to you.
Reliance Retail has been the growth driver and the valuation driver for Reliance for a while now. And given the early onset of the festive season and the updates that we have from other retail players as well, it is likely to be a steady quarter. The analysts expect a 13 to 15% sort of revenue growth range, and because of operating leverage and a lot of the company's own specific movements, we expect an EBITDA growth in line with revenue growth, if not a step ahead, which means the margins would be stable as well. A CNBC-TV18 poll throws up nearly $10 billion in terms of sales, a quarterly sales for Reliance, 13% growth, 86,250 crores. The EBITDA grows by about 15% at around 6,750 crores as well. What this means is that the margins stay in the range that they have been over the last 3-4 quarters, between 7.5% to 7.8%, and 7.8% is what we're expecting this time around. What is it that will lead growth? Remember, the company has been scaling up a lot of their categories, including the likes of beauty, fashion, value fashion, etc. Higher penetration of quick commerce and grocery business will also lead growth for them. And alongside that, their digital penetration. In fact, operationally, they've completed the recalibration of their store network. So the current stores which are there are a lot more profitable than their overall universe right now. So that would help the margins. And Reliance Consumer Brands, which is the FMCG vertical of Reliance, did almost 11,500 crores of revenue in the previous financial year. One of the fastest growing FMCG companies in the country right now is likely to lead growth as well. So all these factors will make Reliance Retail a steady performer this year.
Okay, thank you so much for that, Mangalam. Important to keep an eye out on specifically Reliance Retail numbers as well. Thanks for that. But on that note, we're going to slip into a very short break. On the other side, Manisha Gupta will be in conversation with Anand of Tata Asset Management. Stay tuned in for that.
Welcome back, and joining us is Anand Vardaraja of Tata Asset Management. Thank you so much, Anand, for joining in. Very, very happy festivities to you. That time of the year when everybody is buying gold in whatever way they can, but the gold prices are trading at an all-time highs. Anand, I have to start by asking you on what is your sense with the gold prices? How are you reading this rise?
I think you'll have to step back a bit, Manisha, and see what's really happening in the last couple of years. I think ever since this Ukraine-Russia war started, if you were to look at central banks, especially Chinese central banks, they held a lot of their reserves in US treasuries, approximately about $1.3 trillion way back in March 22. That number today stands at half of that 1.3, so roughly $650 odd billion. If you were to look at the Chinese central bank, they've been steadily increasing their gold reserves. I think the last quarter or so, their reserves have gone up from 5-6% to about 7-8%. Which, just for context, if I were to give you some numbers, India holds roughly about 13-14% of our reserves in gold. Germany holds roughly 78% of their reserves in gold. And China, like I mentioned, is 8% in gold. So you can imagine that, this is something which perhaps could play out in a manner where gold could continue to kind of keep looking solid over the next, medium to long term.
Anand, the people have started treating gold now as an asset class, also as a financial instrument, and that is where exactly the ETFs come in. And we've seen very, very strong buying happen in the month of September. I know it's too early to ask, but is October going the same way?
Yeah, just for context, I think if you were to look at August numbers in ETF, gold ETF alone saw about 2,300 crores of net flows. That number in September stands at 8,300 crores. We've seen a 4x jump, Manisha. And I think if you were to look at what's really happening is you are seeing physical gold prices shooting up. That is perhaps increasing a lot of interest in the asset class, and there is demand for paper gold as well, which is coming into ETFs. ETFs by nature will then have to back it with physical gold. So again, they went and bought more of physical gold. And it's a bit of a circular thing which keeps happening, each trying to catch each other's tail. So which is why I think the interest levels are so high as far as gold is concerned.
Anand, how many new participants would you say have joined in when it comes to ETFs?
I think the number remains more or less the same. I think it's just the retail interest in gold, especially precious metals as a category. We've seen the volumes going up. We've seen a 4x kind of a jump month on month in gold and silver, which is quite heartening.
Anand, how are you reading into also the ticket size here? Because we understand retail would do SIP and they have a measured one. Have you seen big lump sums come into the space too?
Yeah, I think we are seeing all types. SIPs are also strong, and so are lump sum investments. There is a bit of a FOMO which we are seeing in parts. As a matter of abundant caution, we chose to hence restrict flows into our silver ETF because there were supply side challenges that we were seeing in as far as silver was concerned. Especially on the FOF side, we thought, it'll be prudent and in the interest of our investors to then limit or restrict flows there.
And that's exactly what I was coming to next, because silver ETFs have seen a shutdown, not just from Tata, but various other funds as well. If I can count it right, maybe 3 or 4 in total as of now are not offering it. We've seen huge premiums. I mean, anywhere between 5,000 to at its peak at 25,000 rupees per kg as well. So that perhaps counts for around 16-17%. Is that getting better? Because yesterday was perhaps the first of the days in many that we did see premiums come off a bit.
Yeah, some semblance of cooling off yesterday, you're right. But we'll have to wait and watch because physical, silver supply has to keep pace with the rising demand. I think, like you know, Manisha, this is really peak season for precious metals as we get closer to Diwali, and this demand could further accentuate as time progresses. So one has to really see whether physical supplies really start keeping pace, and whether this premium that you spoke about, whether that is narrowing or not. That's really a function. We really believe that this is a temporary dislocation that we are seeing, and hopefully, as time progresses, this should get normalized.
So Anand, you're saying that you'll want to watch some more time before you can bring the ETF buying back yet again.
Yes, that's right.
All right. Anand, as always, thank you so much for joining in and making sense of how India is buying into its ETFs, whether it's gold and silver. Very, very strong numbers. And of course, some action that we saw come in for silver ETFs as well, where new, bigger investments are discontinued at this point in time. And as Anand tells us, we'll want to look at for some more time before we restart there. Thank you so much for your time. And with that, it's a short break. When we come back, we'll talk about markets and stock specifics on the other side.
Welcome back to Halftime Report on CNBC-TV18. Now let's talk about Signature Global. They came out with their Q2 FY26 operational update. Pre-sales down 28% on a year-on-year basis, quarter-on-quarter basis, also seeing a decline of almost 24%. collections. That has just come in at around 2% increase on a year-on-year basis. But let's move on and bring on the management now. We do have the management of the company, Rajat Khaturiya, who is the CEO at Signature Global, to talk to us about the Q2 update. Rajat, good afternoon. Thank you so much for joining in with us on the show. Let's start by talking about this decline that we're seeing in terms of pre-sales. Collections have been quite muted as well in Q2 FY26. One, what has led to this decline? And now for the rest of FY26, what could we be expecting from the company?
During the first 2 quarters, we've done sales in excess of 4,600 odd crores. So last year we achieved in a little more than 10,000 crores. It was about 10,300 odd crores of pre-sales which we did. So in the first 2 quarters itself, we've done more than 4,600 odd crores of pre-sales. So by and large, I would say the demand is holding up. During this first half, we've done just one larger launch within the region, which was of about 2 odd million square foot, adding up to about 4,000 odd crores of sale potential. Whereas in the later half of the year, which is Q3 and Q4 put together, we are launching almost 7.5 million square foot, which has a GDV potential of about 14,000 odd crores. So with these sort of launches coming in, we feel that we'll end up doing a fairly good number for this particular year in terms of pre-sales. And as far as collections are concerned, yes, I think we are staying in that roundabout 1,000 odd crore sort of quarterly mark. But, this will go up as we move forward.
Second half of this year, do you believe that you can cross that 10,300 crore mark that you did in terms of pre-sales last year? In the sense that for the full year, would you cross that? And if yes, by how much? And even on collections, you've done about almost 1,900 crores in the first half. Last year, you did about 4,400 crores. Do you have a target, a number in mind?
No, we stay committed to our guidance. For the year, we've given a 20% increase in pre-sales as a guidance number. So about 12,500 odd crores of pre-sales is what we're targeting, and we are fairly confident of achieving that number. The new launches which we are doing has a GDV potential of almost close to 14 odd thousand crores. So we are confident with that 12.5 odd thousand crores of pre-sales to be achieved during the year. And collections are expected to climb in Q3 and Q4 significantly.
Do you have a target for that, for the full year?
6,000 crores.
6,000 crores.
Okay. Rajat, you're sounding extremely bullish in terms of the figures that you have. But just wanted to understand that are there any kind of gyrations when it comes to, say, demand or pricing at this point in time? And if you could give us a sense in terms of what the on-ground impact is possibly with regards to, this uncertainty on the US-India front, and are there any ramifications on the business at all?
So see, Gurgaon, if you understand, it's quite a diversified, micro market. There's a lot of auto ancillary related entities which operate. There are a lot of MNCs which operate, and there's a lot of strong rubber from the Delhi market because, Gurgaon provides a very strong sort of, social ecosystem, and hence we continue to see a lot of migration happening from Delhi to Gurgaon. So courtesy these factors, it's not that, there's some huge impact of these US-India sort of, trade.
Not only that, just a general sense in terms of how demand and pricing is panning out at this point in time. Is it as robust as, say, what it was maybe a year ago?
See, a year ago was a very euphoric situation. The prices were going up like anything. There was no control and there was no idea. Even we failed to understand why prices really spiked during that phase. But honestly, prices continue to go up even as of today. So while the price rise has moderated, prices are still continuing to go up just because demand is holding up. And that's why, we are continuing to achieve such kind of sales numbers.
Okay.
So we stay positive, on the demand business.
Sure. Rajat, also, are you seeing any issues in terms of delay, in terms of launches that we're seeing this time? Or what is the scenario there? And luxury market, how is that doing for the company?
So see, we are doing this mid-market housing only. It's a fairly wide spectrum. Houses may start at, let's say, 1.5, 2 crores, but may go up to 3.5 crores. So we focus on this mid-income housing market. In Gurgaon per se, you don't find anything being sold for, let's say, sub 1 crore. That kind of, viability doesn't exist for any housing product given the land prices. So we are in this, average 2 to 3 crore sort of, price points. And at these levels, there are abundant end users which are there because there are quite a few players who continue to do, fairly expensive products or, target the luxury market. So, since we are doing mid-income housing and we are continuing to supply products on a sustained basis, we are seeing good demand.
All right. And just a final question. You're on track for becoming debt-free by FY27, right?
Absolutely.
All right. Take that point. Wish you and your team a very happy...
Debt-free? Yeah.
Sorry.
We should.
All right, take that point. Thank you, Rajat. Always a pleasure speaking with you. We'll speak to you post your second quarter numbers as well, and thereafter get a better inkling on how demand is. With that, we'll take a short break, come back on the other side. We track markets and a lot more individual stocks that are moving around. Stay with us.
Welcome back. Well, 25,689. So we're just about hovering at those one-year highs currently for the Nifty, and the Bank Nifty also doing fantastically well at this point in time. Just want to point out that it's going to be a big day in terms of bank earnings tomorrow. So just watch out for that. We have ICICI Bank, IndusInd Bank, HDFC Bank, Federal, all of them that will be releasing their numbers tomorrow. So Monday will be important in terms of what the cues would be for the Bank Nifty. Ahead of that, the Bank Nifty is going in strong into this big event on the weekend. But on that note, we also need to wrap up on the show. Business Lunch coming up next. Stay tuned.
Co-powered by SBI. Best है सबको पता है. Co-powered by SBI. Best है सबको पता है. In association with Prakash Surya Steel Tubes and Pipes and Hindware Italian Collection, designed for Sukoon.
Stocks are surging with the Nifty at a 52-week high after rising past 25,700 for the first time this year. The Nifty Bank also scales a new peak. FMCG and consumer durables are leading the charge even as IT stocks drag. Infosys and Wipro report better than expected numbers, but muted growth expectations prove to be a disappointment, particularly Infosys not revising up its guidance despite a strong second quarter. Analysts expect Reliance Industries to post a healthy quarter with operating profits growing along with some margin expansion as well. Growth is expected to be led by the O2C segment with Jio and retail also chipping in, but some weakness is likely to be seen in the oil and gas space. Gold and silver continue to scale their dream run with new highs another day. Most analysts now see $5,000 an ounce on the horizon for gold. Silver too is seen scaling to $65 an ounce on a supply crunch. And Bajaj Auto Managing Director Rajiv Bajaj says he was shocked by what unfolded at KTM over the last year due to corporate greed. He hopes for regulatory clearance of the acquisition soon, even as he sees scope to cut KTM's workforce by half. It's a festive atmosphere both in the markets and in our CNBC-TV18 Motilal Oswal studios as well. Good afternoon. You're with us here on Business Lunch. I'm Hormus Vatakia. The markets, well, they seem to have cooled off slightly from the highs of the day. Not to forget that they've been on an absolute tear this week. The Nifty is now back at that 25,700 mark. So around about 70 to 80 points off the highs of the day is where the index is. But absolutely no reason to complain for the bulls. The intraday high on the Nifty today, 25,781. So it's around about an 80-point downtick from the highs of the day. But the real highlight has been the Nifty Bank, and it has been a one-way move in the month of October for the banking index. A new record high in today's session as well, above the mark of 57,800. That too has cooled off slightly from the highs of the day. Remember, almost every single bank that you can think of is going to report results tomorrow. Be it HDFC Bank, ICICI Bank, RBL Bank, the list is endless. Name any bank and it's going to be reporting results tomorrow. That's the case with the banking index. And the fact that the Nifty Bank, from the lows that it hit in the month of March, that index has gained 10,000 points. The 47,704 was the low that it made on the 11th of March this year, and since then it has gained around about 10,000 points. So that's the banking index for you. But the index that is sulking today is IT. And quite rightly so, because two of its major constituents, Infosys and Wipro, reported second quarter results. Although the results were better than expectations, Infosys has kept the upper end of its guidance unchanged, and Wipro's margins and revenue were in line with expectations, and as a result of which the stock is now down almost 5.5% at the lowest point of the day is Wipro. Rima is joining in with more details on what the street did not like.
Thanks so much for that. So just to run you through what the brokerage view is on Wipro now. Jefferies is an underperformed call. Target price 220. They say over FY26 to FY28, the EPS CAGR is only going to be 3%. Along with that, a 3% dividend yield makes the risk reward unattractive. Ambit says Wipro is their least preferred pick in large cap IT. They're saying FY26 is going to be the third consecutive year of a revenue decline. They also expect EBIT margin compression of over 100 basis points. And they're saying that the stock right now is penciling in a lot more growth than the company is going to deliver. Nomura, on the other hand, likes the performance. They say it was a beat on all parameters in Q2, which is why they have a buy call. But on the whole, you would say that Wipro's performance in Q2 was largely in line, and the Q3 guidance does point to some improvement. Infosys brokerages are very bullish. So Nomura has a buy call. Jefferies put the target price at 1,700. HSBC also 1,730. But the street is a bit disappointed because the company hasn't raised the upper end of the revenue guidance. So 1 to 3% guidance has become 2 to 3, but the upper end remains the same despite a strong H1. And the guidance basically pencils in no growth in Q3 and Q4. So, is it caution that the company sees, or is the company being conservative? Before now, the street is a bit disappointed.
The street is indeed disappointed. Rima, thank you for that. Let's listen into what the management of Infosys, Wipro and LTIMindtree had to say on the impact of the new H-1B visa rules on their workforce.
Our US workforce, the number of people that require Infosys sponsorship for immigration is a minority. So the majority of the people don't require it from our perspective. Second, we've built a large number of centers and hubs which are focused on digital, on innovation, on technology and AI in the US. We have relationships with universities, we have a training facility there. With all of that in mind, we are clear today that we will work with our clients without any disruption to their services and into the future.
H1B, very limited impact. 80% of our US-based employees are locals. We have been adding about 250 to 300 H1Bs every year. We are very confident that even with the change of the law in the US, it will not impact from a supply side as demand moves up. Near term, long term, we will look at increasing our presence from our delivery centers in the US, look at our campus hiring there. But we are very comfortable and we see minimal impact from an H1B standpoint.
It's a very small number, to be honest. It's in hundreds. This year is about 250, 300 that we had, employees moving on to the H1B. Over the last couple of years, our dependency on H1B has actually reduced. In US, it's about 50% of our employees are on H1B, and the rest of them are on visa independent category. We have a plan in place to strengthen our nearshore delivery. Our local hiring is getting strengthened, and I also see clients talking to us to increase offshore. They're also talking to us, to leverage a good mix of nearshore, on-site, and offshore. So I think the business will settle to its new normal. I don't see any material impact with regard to the H1B topic is concerned.
On to the big earnings announcement of the day. Reliance Industries will come out with numbers later this evening. Sonal is here with what is expected from the Nifty Big Boy.
Well, this time around, strong results expected from Reliance in Q2. Do remember, the stock has been flat in last 1 year, has been a reasonable in terms of valuation as well, 21.7 times FY27 earnings. But let's talk about the earnings. On a sequential basis, revenues are expected to come in at 2.46 lakh crore rupees. EBITDA expected to increase by 4% on a quarter-on-quarter basis to come at 44,511 crore rupees. Margin expansion is expected as well, 18.1% this time around. However, profits are expected to decline 22% on a quarter-on-quarter basis. That's because the base quarter had impact of stake sale in Asian Paints. So they earned around 8,924 crore rupees because of which, and that is something which should be kept in mind while looking at reported profits this time around. What will drive the growth this time? It will be oil to chemicals business, which will do well. Retail business too, because of the GST rate cuts, and also revenue per square feet will see an improvement this time around. However, some weakness will be seen in oil and gas segment. The other part will be Jio's EBITDA. That is likely to surge 16% on a YY basis because of higher ARPU due to tariff hike. And also, if we talk about the retail EBITDA, that's where I said it will see higher growth. 11% on a YY basis is what we are expecting this time. If we go by the trend as well, this time it is expected to see a multi-quarter high EBITDA coming in at 44,500 crore rupees. So watch out for that one. Sequential recovery is what we are expecting from Reliance this time around.
Sequential recovery is what we are expecting. Sonal, thank you for that. Jio will also be reporting its second quarter numbers today. Rima is here with the key expectations. Rima.
Expect a steady showing from Reliance Jio this time, the telecom arm of Reliance Industries. Top-line revenue growth is seen up 2.7% to 31,700 crore rupees. EBITDA margin seen stable at 55.5%. And at the bottom line, the profit number is about 6,925 crore according to the CNBC-TV18 poll. There are two metrics that we track to understand the operational performance and the improvements seen in the quarter. One is pricing and the other one is volume. Pricing is captured by the average revenue per user, seen going up by 1.1% to 211. And the other one is sort of a quasi-volume growth, the subscribers, the number of subscribers who come onto the Jio platform in the quarter gone by, and that's seen inching up by 1.4%. In July and August, we have the TREI data, and the subscriber addition was ahead of peers at 2.5 million. But this time, for the first time ever, Jio's overall subscriber base will cross 500 million customers, and this was told by Mukesh Ambani at the AGM. He also spoke about a Jio IPO, which is planned for the first half of 2026. So the question is, ahead of this planned IPO, will we see a tariff increase? Last tariff increase was more than a year back, and we know any sort of tariff increase by the industry, the companies, is a big driver of profitability.
Rima, thank you for that update. Just before we take that break, the cool-off on the Nifty is continued. The index is now down 100 points from the highs of the day, 25,681. Now exactly 100 points off the highs of the day, which was 25,781. Take a short break. More news on the other side. Stay tuned. Welcome back. Now, the Tejas Mk-1A fighter jet takes its maiden flight from HAL's Nashik facility. Madhya is now joining in to give us more details of this. Madhya.
A proud moment for Hindustan Aeronautics Limited. We are at HAL's Nashik facility, and what you see behind me is the first jet, the first Mark 1A Tejas light combat aircraft produced in HAL's Nashik facility. The jet took off to the skies in a spectacular aerial showcase. It showcased its capabilities, it showcased its agility, power and cutting-edge technology in an impressive aerial display in the presence of Defence Minister Rajnath Singh, top HAL officials and hundreds of people in the audience. Remember, HAL's producing these jets, the Mark 1A Tejas LCA, at 3 facilities in India, 2 in Bengaluru and 1 in Nashik, and each facility has the capacity to produce 8 such jets every year. Remember, the Indian Air Force is already flying 40 Mark 1 jets, the Mark 1 Tejas jets, and then in 2021 it placed an order for the upgraded version of the Tejas Mark 1, which is Tejas Mark 1A. So in 2021 IAF ordered 83 the upgraded Tejas jets, and then in September 2025 it placed another order for 97 such jets from the Hindustan Aeronautics Limited. So the total order book with HAL to hand over Mark 1A Tejas LCAs to the Indian Air Force stands at 180 jets. But HAL is yet to hand over even a single jet to the Indian Air Force. We are in 2025. The first order, which was for 83 LCAs, the deliveries were to start in 2024. But HAL has been struggling with engines. Remember, the important component, the most important component that goes into a jet is the engine, and that is being supplied by GE Aerospace of the United States. Engine delivery has been an issue, and HAL has only received 4 engines so far. So it has 10 jets ready in Bengaluru, 1 jet in Nashik, but only 4 engines, and hence deliveries haven't started yet, and HAL is yet to hand over the first jet to the Indian Air Force.
Madhya, thank you for that update. Now, investment buying has outpaced emotional purchases, signaling a shift in consumer behavior. Manisha Gupta brings in a special report from Zaveri Bazaar on the festive jewelry purchase.
People have got now more frenzy, and it's like catching up. They all want to cash in on the daily basis rise and make quick money. The investment buying is like exorbitant, but the emotional buying is a little down. But the investment buying frenzy is like heightened and enormous, you know.
Mr. Jain, what is your sense? All this buying that is coming in, is it more investment? Is it more institutional based, or do you think it is still retail buying their jewelry?
See, according to this festival, people are coming, seeing they are buying gold, and I think so this is the highest gold sale ever I have seen in my career from last 32 years. People are buying because this is the safest metal. All women want gold. Everyone is investing, buying. They are using in daily use. So people are coming from pan India to see. International buyers have come this year to see the festival. 7.5 kilometers lighting. This is the Asia's biggest festival, we can say. So many people are attracted with red cards, golf cars. So people are coming. They are buying. They are too into. Even if rates are more high, then also people will start buying. They won't stop because gold is that a commodity. India love gold. All Indian will buy gold at whatever price it may be. It is the safest investment and the best investment.
All right. As compared to last year, Mr. Jain, what is your anticipation? Are we looking at a bit of a decline in volumes? And if yes, then how much?
I think so. From last year, my business has grown approx 50% more.
So there's no decline for you?
No, it's not decline. See,
but are people buying 22 carats, 18 carats? What is it that people are investing in?
People are more buying 22 carats and the investors are buying 24 carats. But major people are buying jewellery. Less investment people are also there, but 22 carat is the most running jewellery. Now, if gold high prices go more high, people are demanding of 18, 14 carat. So I maybe next year 14 carat and 18 carat might be running soon.
Anil, is it about lightweight jewelry or is it still bridals that's working for you?
The more the price is, the quantum will go down. So lightweight and light caratage also will come in the near future. It will be a new norm now. The 22 carat will wane off and 18 will be then setting in, maybe 9, maybe 12. Anything 12 carat also might catch up. As the prices are going high, the budget are shrinking. So we'll have to think about the quantum and cater to the customers like that.
Special report from Manisha Gupta from Zaveri Bazaar. Just pull up Sterling and Wilson before we go into that break. The stock has now slumped to the lows of the day after a net loss this quarter compared to a net profit last year. The margins are almost down to zero in this quarter. So that's Sterling and Wilson. Numbers continue to come in thick and fast. Take a short break. More news and updates on the other side. Welcome back, and there are a slew of reports, earnings coming in now. Ujjivan Small Finance Bank on your screen. Net interest income now down 2.4%, almost 2.5%. Asset quality has remained, well, relatively unchanged compared to the previous quarter. That's Ujjivan Small Finance Bank. The stock currently trading little changed, no change in asset quality as well. Pull up Sterling and Wilson. We just addressed it a couple of minutes ago before going into the break. The EBITDA of the company is down 79% on a year-on-year basis. Margins are almost down to zero. And of course, the fact Sapphire Foods also came out with numbers just a few minutes earlier, and that stock too is reacting to those numbers, and that has now moved to the highest point of the day, 1% higher for Sapphire Foods. And Dalmia Bharat came out with numbers a few minutes ago, and EBITDA was up almost 60%, and the stock as well now 3.5% higher for Dalmia Bharat. By the way, the markets too have cooled off from the highs. The Nifty now below the 25,700 mark, so it's a 100-point cool off from the highs of the day. The broader markets are not having a very good day. They did see a bit of a recovery in the start of the session, but that recovery has been sold into very swiftly. The mid-cap index is now down to the lowest point of the day, 350 points lower on the mid-cap index, and we are awaiting numbers from Polycap, we are awaiting numbers from Havells, we are awaiting numbers from Dixon Technologies as well. So keep an eye out on that. Just pull up Eternal before we move on, and the stock was down around about 4% at the start of trade earlier compared to the loss that it saw yesterday as well. The stock is now down 2% in today's session as well. And in response to Eternal's results, Swiggy is now at the lowest point of the day. Swiggy is down almost 5% as we speak. Swiggy yet to announce numbers, but Eternal's numbers are having a bit of a rub-off effect on Swiggy as well. Take your leave on this edition of Business Lunch from me and the team. Thank you for watching. Midcap Radar on the other side, as do our earnings.
Co-powered by SBI. Best है सबको पता है. In association with Prakash Surya Steel Tubes and Pipes and Hindware Italian Collection, designed for Sukoon. investing. Co-powered by SBI. Best hai sabko pata hai. In association with Aditya Birla Capital.
Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. Hey Vivek, good afternoon. Markets cheered and they were in the festive mode as well. They still continue to be so, but they have come off from the highs. Almost a 200-point cut on the Nifty from the highs of the day. We are at the 25,680 mark. The highs today was around 25,780. So yes, some selling pressure from the highs. Midcaps in the red. Bank Nifty too, after touching that record high level, has seen some retreat from those levels.
That's right. Good afternoon, Sonal. And like you mentioned, we start off the day. In fact, the Bank Nifty hit a record high, cooled off a little bit, and the mid-cap index today sulking a little bit compared to the large-cap peers. But we have a lot lined up on the show, some important corporate conversations as well. So let's start off with the top headlines. Stock surge with the Nifty at a 52-week high after rising past 25,700 for the first time in 2025. The Bank 52 scales to its all-time high. FMCG and consumer durables lead the charge, even as IT, metals and PSU banks track. Mid-caps slipped.
Whirlpool of India in focus after it enters into multiple agreement with its parent company. Brokerage firm Kotak says this will ensure long-term business continuity after the parent's impending stake sale.
JSW Infra in focus after reporting their Q2 numbers. The company sees a 26% rise in revenue, while profit and margins come under pressure.
Midcap ID stocks in focus after reporting their Q2 numbers. LTI Mindtree sees the constant currency revenue growth at 2.4% in the quarter gone by. Meanwhile, Science saw its DET services revenue surge 0.5% sequentially. Company expects higher H2 margin as compared to H1.
Shares of Zee Entertainment trade low after the company's EBITDA and profit fall short of analyst estimates. The company also reports a negative operating cash flow in the second quarter.
All right, those are the top headlines. As we pointed out, Nifty is off the morning highs. It's a 200-point cut from the highs of the day. Mid-caps also under pressure. And we have the Bank Nifty, which is higher. But yes, it's underperforming the benchmark as well as we speak. But let's go across to Sudarshan in our special segment, Mid-Cap Movers, which are the big movers in focus today. Sudarshan, over to you.
So let me start with those companies which are reacting to the news flow. And first in that list is Dalmia Bharat, which has come out with its Q2 earnings just a few minutes ago. And on most of the front, earnings were largely in line. And that's the reason you are seeing that Dalmia Bharat is currently up almost 2%. Yes Bank, it slipped in the trade, currently down almost 4%. The reason is just like an hour ago, there were certain comments from SMBC that it's not looking to increase the stake more than 25% after their stock has slipped. Zee Entertainment continues to be under pressure after reporting earnings. Both ad revenue as well as margin both were under pressure in Q2. Anupam Rasayan has also slipped after its results, currently down more than 6%. Kalpataru Limited had reported Q2 updates and those updates had looked very strong, and on the back of that you are seeing a big move. Stock currently up more than 8%. Some of the major mid-cap gainers, as you mentioned, Whirlpool has signed multiple agreements with its parent company, and that's the reason for second straight day the stock is seeing big buying, and today also it's up more than 11%. Force Motors continues to see a big buying on an expectation of an improved demand, and today also it's up 6%. Canada HDFC Life Insurance got listed today, and after that we have seen buying listed at rupees 106 and currently trading around 111. Muthoot Finance, all the gold financiers have been seeing buying because of the surge that we are seeing in international gold prices, and today also Muthoot Finance is currently up almost 3%. Some of the losers, Swiggy is under pressure after Eternal has come out with its earnings, and earnings had looked a bit mixed, and that's the reason you are seeing a big downtick coming for Swiggy. PV Fintech has been falling continuously, and the one reason is that all the insurance companies are negotiating commission cut. That's the reason, and that's the main business for PV Fintech, and that's the reason you are seeing that a big fall that coming for PV Fintech. IGL is under pressure in line with all the other city gas companies ahead of its quarterly earnings.
Thank you so much, Sudarshan, for joining us and taking us through all of the movers as far as the broader end of the markets are concerned. Well, we'll now slip into a short break. We'll get you excerpts of our conversation with the management of JSW Infrastructure next. Stay tuned. Welcome back to Midcap Radar. Well, what's actually transpired in the last 30 minutes or so has been an intensified selling pressure across the mid-cap and the small-cap space. Have a look at some of the names, especially in the auto ancillary pack. Global auto major Volvo has gone ahead and lowered the guidance for the North America Class 8 truck market growth. They were earlier expecting a degrowth of minus 11%, and now they've gone ahead and said that they now expect a degrowth to the tune of minus 14% or 14% degrowth. On the back of that, a slightly negative need-through coming across for Bharat Forge, even a Motherson Sumi, and even an RK Forging or a Ramkrishna Forging. All of these stocks near the day's lowest points. Along with that, the metal pack has cooled off quite significantly from the day's highest point. Names like Tata Steel, JSW Steel, even Jindal Steel for that matter, all of these stocks have cooled off quite significantly. Vedanta as well as Hindustan Zinc. Hindustan Zinc, remember, reports its results today. That particular stock too has fallen to the day's lowest point. Well, like we had highlighted earlier, JSW Infra reported their results yesterday, and they reported a 26% rise in its Q2 revenue, while profit and margin declined during the quarter. Earlier today, I spoke to Rinkesh Roy, the joint MD and CEO at JSW Infrastructure, on their Q2 cargo volumes, overall outlook, and more. Let's listen in.
The total cargo handled was 28.9 million tons, a growth of 3% year on year. And the issue on the mines was basically in the Odisha sector. A total last year in the entire first half, 16.6 million tons were handled at the different ports. This year, there was a massive drop to 9 million or thereabouts, so a drop of around 7 million tons. These were on various factors, mostly relating to commodity prices of iron ore in the export market. So what we have seen currently in this month, there's been a slight firming up of prices upwards, and now we are seeing an increase in movement towards the ports. So we hope that we'll be able to cover this losses to a great extent. And the loss at the Paradip iron ore terminal was close to 3.4 million tons. And if this would not have occurred, our guidance of 10 million tons, 10% growth would have held good.
Understood that, sir. So now you've slightly trimmed the guidance lower. You still aspire at the upper end of your band to reach the 10% mark. Is that accurate, sir?
Yeah. We will be, now be realistically looking at somewhere between 7 to 10%, depending on how the iron ore market pans out. And if it's on the higher side, we are very confident that we'll make it up. If it's on the lower side, we'll be looking at that number of around 7%, because historically H2 gives you far better growth than H1.
Understood that, sir. So the other important point, and something that we always discuss when it comes to JSW Infra, is the share of the own group cargo versus the third-party cargo handle. So what was the third-party customer share in Q2? Q1, it was 52%, whereas that moved to at the end of Q2.
So the group share in this quarter was around 54%, whereas for the entire first half, it stood at 51%. So third party was 46% this quarter, and for the entire half, it was 49%.
Understood, sir. You've kept a top-line target in the range of 710 to 720 crores in FY26 for the logistics business. And that is one particular space where, especially when it comes to the kind of growth that they're expecting, it's expected to do far better than the cargo business, of course, or albeit of a lower base. So give us, are you, number one, on track to achieve that guidance? And number two, what kind of margins will that happen, especially given the fact that analysts fear that the Navkar Corporation assets may give slightly lower EBITDA margins?
You see, if you look at the picture in the first half of this year, already Navkar has clocked revenues of over 310 plus crores in this first half. Our EBITDA numbers have reached around 45 crores. If you compare it to what it was with the previous ownership, the entire year of Navkar operations yielded only 45 to 50 crores, which we have done in half of this year. We still stand by a guidance of 100 crore plus EBITDA for Navkar. And we have been adding on now, as you would have seen, we had announced siding at Kurtini, which we are planning to ramp up to a world-class multimodal logistics park. And there are other acquisitions, small acquisitions on the anvil. So all this put together, we stand by that guidance of 700 crores plus in revenue and the top line crossing 100 crores and the EBITDA crossing 100 crores. That is, we stand by that guidance.
Okay, so the absolute EBITDA figures, you're expecting it to be much better than what it was under the previous management. We understand that. Also, when we talk about JSW Infra, the one thing that the market always looks out for is the kind of inorganic growth that, especially that you've been able to capture. Quite a few acquisitions, Navkar being one of them, where operational efficiencies have improved significantly. Also, you've got a new berth at Kolkata as well. Briefly, if you could tell us about the inorganic growth that has come about in H1 and what are the kind of aspirations that you have for each of these assets?
So the container berths that we have taken in Shyama Prasad Mukherjee Port Trust. So this is going to help us, put our footprints on the container business, which we have been trying to expand. Our first foray was at Mangalore. And in this contract, we have interim operations allowed. So we're looking at how quickly we can start the interim operations there. And in the logistics sphere, we have taken over this Kurtini siding. So we expect it to be operational within a month or two, and gradual ramp-ups will be taking place. So these are, like a very complementary business, the container business as well as the logistics business. These are very complementary to each other. It's a core adjacency to our entire port infrastructure. So we hope that these inorganic acquisitions will push up the EBITDA numbers also in this year.
Okay. So the other question is, promoter stake continues to hover around the 75% mark. Any fresh QIP plans? You have very strong capex plans, especially for the logistics part of the business. Would you look at a fundraise going forward via the equity dilution route?
So there will be, mandated by SEBI after the 3-year period. So that's going to come in September 26, so where we'll have to dilute the stakes of the promoter. So that is going to happen. And what process we'll adopt is something we'll have to strategize on.
Understood, sir. And lastly, what has been the impact of GST cuts, especially as far as traffic growth is concerned, cargo volume growth is concerned? Has there been any disruption, especially in Q2? And going forward, do you see better operational efficiency kick in, especially from the GST cuts come by?
We have not seen any major negative effects of any GST issues coming up. However, we are very upbeat that this will help and spur the growth movement further, because the GST cuts across board are a process of, improving more of consumption and more of industrialization. So that will help the entire sector.
All right, that's the word coming in from JSW Infra, the stock on our radar. By the way, there's some more pullback on the markets. The Nifty is up 60 points right now. When we started the show, the mid-cap index was down around 0.6%. Now it's down almost a 500 point. So we'll keep tracking that for you. For now, we'll slip into a short break. When we come back, we'll get you more news and updates on the other side. Welcome back. You're still tuned into Midcap Radar. Anupam Rasan, that's the next management on the show, reported one of the best quarters this time. Vishal Thakkar, who is the deputy CFO at the company, is joining us now to understand the outperformance that came by this time. Vishal, good afternoon. Thank you for joining in. Well, it's a massive surge that we are seeing. What is the reason for this? Is it because some of the agreements got executed this time? Is it contribution coming in from any particular segment? Is it just a one-off and not something that you will be repeating in the rest of the fiscal? Explain that to us.
First, thank you very much for getting us on your channel. Yes, this quarter has been a very strong quarter, and this half also has been very strong quarter, strong half. We have been historically saying this for last few quarters now that we should be seeing a strong uptick as we go forward. And I think the momentum has continued across pharma, agrochem, polymer, all three has been doing well for us. If you look at our growth, as you said, the growth has been over 100% on a quarter-on-quarter basis, YOY basis on the quarter. Even from a cash flow point of view and from a balance sheet point of view also, we have been strengthening our balance sheet strongly now. Our working capital has improved significantly. Our operating cash flow has been over 450 crores for the half. So overall, a good quarter. I would say the primary reasons will be two. There was a strong commercialization of our orders that we had received from our customer. And also there was a liquidation of an old inventory of around about 150 crores, which also supported this. But even if I take that off, we have a very strong demand that we are seeing across all the three segments, which has really contributed to this.
So Vishal, in that case, what is FY26 guidance, or what would the revenue growth look like in FY26? In the first half, you have done revenues around 12-17 crore rupees. Of course, it's higher than FY25 already. But will you be able to see double that number in FY26?
I would not really go and double it straight up, but we'll be fairly in a similar range. So we should be continuing the growth amount. I said that we should be over 50% growth for the year. And
what about margins? What band are you looking at?
So the margins, if you look at it, we will be historically, I've been guiding around about 24 to 26% margins. I think steady state margins, you should take it at that level. I would go with that number. But for this quarter, because of the one-off sales where we have strengthened the balance sheet and focused on that, so we have taken the old inventory out, which has a little lower margin than what we would have seen otherwise. And also the new products that we have launched from polymer and pharma, which will start kicking in, the stronger margins will start kicking in the next 2 quarters. So overall, steady state basis, we should be back to the 24 to 26% EBITDA margin that we have been guiding historically.
Right. Mr. Thakkar, we also want to understand, TANFAC, your subsidiary has done quite well this time around. We want to understand what is the outlook on the performance over there. And another question that analysts want to know is, are you planning to add any capacity as far as R32 is concerned at TANFAC?
So I would let the TANFAC management speak about the R32, but if I ask you, if I suggest about their performance is in line with what we are expecting going forward. So they have a strong numbers. They will continue to deliver a strong growth because the markets are pretty steady in terms of demand, or more buoyant, I would say. And they've been doing well. I think they should continue this journey.
Vishal, the other aspect of the business is fluorination. How much is that as a percentage of revenues currently? And margins tend to be higher in this business, right? So when does that start contributing? And if they do, will you be surpassing your guidance in terms of margins, or will it be there, the one that you mentioned?
So see, fluorination is practically reaching around about 18 to 20% of our number in terms of our revenue, and it should continue to grow, and we expect that full year should be over 25%. So that's where we are talking about the fluorination part of the business. Second, yes, their margins are stronger. As I was saying, that when we launch new products, it takes a little bit of a time before it gets the full potential of its margin. So if you look at the next year, yes, we should be looking at a stronger margins compared to this year's margins.
And in the segments generally, pharma revenues, they've been growing quarter on quarter. We saw around 75 crore rupees in the quarter gone by. What was it this quarter itself? And are these revenues part of LOI or they are non-LOI based? Also, the products which companies are supplying, are they going into patented products or non-patented products?
So if you look at pharma largely it is an import substitution. We are focusing on more on the KSM side rather than going into the API side, because that's the segment that we believe is where we have a stronger play. And there is a strong synergy from our other product portfolios also. So that value chain really plays up for us here. So pharma is more we are supplying to domestic players currently, and later on we'll think about the international markets as we go. And they are around about 25% of our 23% of our revenue this quarter.
Take that point, Vishal. Thank you so much for joining us today and giving us all those insights, and wishing you and everyone at Anupam Rasayan a very happy Diwali. That's the word coming in from Anupam Rasayan. That's the word coming in from Anupam Rasayan. But with that, we'll wrap on this show with a quick note for our viewers. As you can see on the screen, there is a Money Control stock score just above the line graph. This is a score assigned to each stock based on Money Control's multi-factor algorithm. It is calculated by analyzing over 40 parameters, including both current and historical financial statements, price charts, and technical indicators for each stock. Each of the individual parameters considered for calculation of the 4 factors are assigned a score, which is then aggregated to arrive an overall Q factor score, G factor score, V factor score, and T factor score. Remember, this is not a buy or sell recommendation. Any investor or viewer is advised to carry out necessary diligence on their own or through a certified registered financial advisor for investment decisions.
Co-powered by SBI. Best है सबको पता है. In association with Aditya Birla Capital. Co-powered by SBI. Best है सबको पता है.
Hello, good afternoon. You're tuned into Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in. As always, festive greetings to all our viewers as well. But when you look at the market, we're seeing a bit of a decline coming in from the day's highest point for the Nifty, Bank Nifty, which was at all-time high and record high levels. We are seeing a fall coming in from there as well. Now, Bank Nifty is managing to just hold on to gains of almost 0.1%. So keep an eye out on that one. Nifty, 25,670, approximately around that level is what the Nifty is trading at. Nifty mid-cap, further more decline is what we've seen coming in for the Nifty mid-cap. It's down 0.7%. So keep an eye out on this. Markets have significantly come off the day's highest point. In terms of the top losers that we're seeing coming in, especially on the broader end of the market, Sterling, Wilson, Credit Access Grameen, Wipro, Mastek, all these are reacting to their numbers as well. So keep an eye out on that. Nifty IT clearly seems to be a bit under pressure today, given the numbers post, Infosys, Wipro, LTI, Mindtree, all of these reporting their numbers yesterday. But that's the market setup that we're watching out for. But this is a show where we solve all your stock-related queries. And to do just that, we have Shaina Mukaddam, independent market expert, joining in with us to do just that. Shaina, good afternoon. Thank you so much for joining us. And firstly, festive greetings to you as well. Happy Diwali in advance, and hope you have a great one as well.
Same to you, Vinny. Same to you, your viewers. Happy Diwali in advance. And let's hope the year coming forward is going to be much better than the year that's going by.
Absolutely. Hope that really turns out to be the case in terms of the returns that we're watching out for. But let's get started with those queries then, Shaina. The first query for today is coming from Venkat, who's writing to us from Chennai. He's holding 20 shares of Force Motors. The price at which he's purchased is 1,486 rupees. He wants to know, and he's asking if he should buy at current levels in terms of more of Force Motors. Your view on this, Shaina?
He's made a good amount of money, and I think even from here he can actually add. The price levels that he's talking about, 15,000-16,000, I would say are very good levels to add at. Even at current levels, it's fine. If you see last 2 years, the company has actually turned from losses to profits, and that has actually seen this huge rally that we've seen. Now, at current levels, I wouldn't say it is cheap. If you look at turnover, it's about 1 year forward, it's about 2 times, the market cap is 2 times the turnover. If you look at EBITDA, market cap is, EV by EBITDA is about 20 times. So it is not cheap. But if you look at the plans that they have going forward, it is very aggressive. They are going to invest about 2,000 crores to set up or to expand the EV portfolio. And as you know now, China has agreed. If it is for domestic use, they are going to supply us with the rare earth components. And Force Motors, 90% of their revenues is domestic. So it is a good long-term story. You can keep adding and hold it for the medium to longer term.
Okay, hold it for the medium to long term is the view coming in from Shaina on Force Motors. Let's move on and talk about the next query for today. We have Sai Gopinath, who's writing to us from Hyderabad. He's holding 270 shares of Waaree Renewable, and this is at a price of 2,039 rupees per share. They're making a loss on this one, while the other one is 900 shares of Transformers and Rectifiers at a price of 490 rupees per share. So he wants to know whether to hold or sell at current levels. What should he be doing with both these stocks, Shaina?
I think there is some mistake in the price that he's actually given, or maybe it is post split. There was a split of 10 rupee share to 2 rupee share, because I don't see this price, post split. So I would still think that he is making money if he's acquired it at those levels, 2,000 type of levels. See, as of now, I would say you can continue to hold.
Okay.
Basically, the parent is pretty strong, and as you saw the numbers that they came out with, very strong numbers. They're talking of something like close to 50,000 crores of order book, which is to be executed over 2 years. And, Waaree Renewable will benefit from it because they do work along with their parent company in many ways. suppliers, etc. Also, in terms of the numbers, they are coming up with very strong numbers. If you saw the Q1 numbers, their turnover was up. In fact, even Q2 numbers out, they are up by about 48%, and PAT is more than doubled. So if you go on at this growth rate, then I think if you hold it for about a 3-year period, valuations will become more attractive. Currently, I would say it is slightly expensive, but because it is about 4 times FY26 revenues, if you look at shorter term, and 20 times EBITDA. So short term, yes, it is slightly on the higher side, and the stock has been consolidating over the last 1 year. But if you hold it for the longer term, I think it should give you a decent return. It's in a good sector. So I would say continue to hold. Transformers and rectifiers also similar story. Valuations are very similar to what it is for Wari Renewables. So there also, I believe the growth, it's a small cap. The growth is pretty strong. And I would believe their order book is also very strong. They are talking of something like 8,000 crores of order book by the end of this fiscal or beginning of next fiscal. So that again gives you, market cap to turnover about 2 times. So I would say continue holding both of them.
Continue holding both of them. Thanks so much for that, Shaina. And the next query now we have is coming from Siva Kumar, who's writing to us from Coimbatore. He's holding 1,200 shares of Chennai Petro. And this is at a price of 870 rupees per share. Wants to know whether to book his losses, stay invested, or maybe look to average also this one. Shaina, your view?
I would say it is better to book losses and exit. The numbers have been pretty disappointing. First quarter also, they came up with a loss. Actually, the loss was more on account of the lower GRMs. I mean, we were expecting a GRM of around $5, but they came out with GRMs of less than $4. Now, the problem here is that oil prices are very, crude oil prices have been fluctuating. And while as of now, the prices are low, because of the geopolitical risk, we really don't know where it will be like a couple of months down the line. So I would say, and valuations also compared to the other refiners, it is on the higher side. So instead of being in a pure refiner, I would say it is better to be, in something like a Reliance also, if you want to be in that sector, which gives you an opportunity to be in multiple segments. So I would say it's a switch.
Okay, a switch coming in for Chennai Petro as a view over there. Let's move on to the next query then. This is coming from Siva, who's writing to us from Hyderabad. He's holding 150 shares of Bajaj Housing Finance, and this is at a price of around 130 rupees per share. Right now, he's making a loss on this one. Now, he's a long-term investor. So what should he do with this? Should he continue to hold Bajaj Housing Finance or maybe shift to another one? Shaina?
Yeah, so the stock has really not done anything over the last 1 year. And that is because of the valuations. Of course, the group is a very strong group, but valuations were so expensive. If you looked at it, post IPO, and it was one of the very well subscribed IPO. But after that, the stock for an investor has disappointed if you've gotten post the listing of the IPO. Now, if I look at it today, see, valuations, if you look at it 1 year forward, is about 4 times price to book. So that puts you on the slightly more expensive, in fact, more expensive than the other housing finance companies. Having said that, I think in terms of growth, they are growing much faster than the rest. While the industry is growing about 11-12%, they are growing 25% plus. And the funds that they raised from the IPO, which is 6,500 crores, plus the recent NCD that they have raised of about 1,000 crores, I believe this will enable them to sustain this growth. Also on the, in terms of their PC, the provision coverage is quite strong. It's about 57%. Net NPAs is very low. So I think it's a very strong management, well-held, good growing company. AUM is more than 1 lakh crores. So I would say you can continue to hold. AUM is also growing by about 25% plus. So I would say continue to hold, but keep a very strict stop loss because it is consolidating at current levels. So I would say keep a strict stop loss, say 100 rupees or 105. And, if it falls below that, then maybe it is time to relook at it whether you need to exit. But otherwise, you hold it for the long term.
Okay, otherwise hold it for the long term. That's the view coming in there for Bajaj Housing Finance. But Shaina, thank you so much for joining in with us this afternoon. Hope you have a great festive season. Happy Diwali to you, your family as well as the team. Thank you so much for joining us. And viewers, thank you so much for tuning in as well. With that, we're going to wind down this edition of Your Stocks with the Nifty off the day's highest point right now. But don't go anywhere. You have Closing Bell up next to take you through all the market action.
Co-powered by SBI. Best है सबको पता है. Powered by LIC, हर पल आपके साथ. Co-powered by SBI. Best है सबको पता है.
On market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Seems like a period of a muted to a mixed signal is what we're watching out for in terms of the Asian markets.
There's expected to be an EBITDA growth of around 4% to come in at 44,511 crore rupees.
The number of people that require Infosys sponsorship for immigration is a minority.
The next stop, it's an equality level, is 25,705.
for the Nifty.
Infy's ADR was down 2.5%, 2.2% to be precise.
We had a very strong bookings, 4.7 billion.
We've got Nifty, which is 25,500, about 0.18% lower.
Companies are likely to see a 50 to 200 basis points impact from lower primary sales following GST revisions in September of 2025.
We have over 12 crore captive customers. We have access to 15,700 branches.
Nifty is now moving in a one-way direction towards the 25,750 mark, now 150 points higher on the index.
We are waiting now for the key approval of the Takeover Commission.
We are at the 25,680 mark. The highest today was around 25,780.
Well, that is the day so far. Last hour and 15 minutes coming up. We're starting closing bell here a little earlier than usual. Beautiful looking set. And we're all ready to get you what markets are doing over the next, 75 odd minutes or so of trade. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Reema and Mangalam. Guys, hi. Afternoon.
Hi, we're talking about one day before Diwali. The markets are crackling and the Nifty bank is glittering, if you must. And it's just the mid-cap index, which again, they say, nazar nahi lagna chahiye. That's why you put a kala tika. That's exactly what the Nifty bank is doing. No real worries. I mean, yes, from higher levels, we've seen a bit of a decline. But then again, the kind of levels that we've seen so far, it's only fair that some shagun is put in your pockets before you go for the weekend.
Nicely put, no?
Nicely
put, yeah.
fully nicely synced with the sentiment. Trust Mangalam to do that. But we're off the highs, Mangalam, a little bit, right, Reema? I think the high...
points about.
Yeah, and we were... I was surprised to see that. Sharp, almost 190 points or so at one point in the day. So 25,781 was the high. And we're at 25,680. So almost exactly 100 points off the high point of the day. Before I go any further, I just want to highlight, I'm not sure if there is any dominating driver behind some of this price action, but just look at what's happening in Europe. DAX is down 2%. You've got the FTSE 100, which is down about 1.5%. The CAC 40 is down 0.84. Actually, the Euro Stoxx 50, which is basically the 50 largest stocks in Europe, that index is down about 0.8% as well. The last I checked, you look at US futures, the S&P 500 futures, the Dow futures, they're down about 1.25% as well. So there seems to be, going into the weekend, a slight amount of risk off perhaps, which is there. Bitcoin, for example, I was just, before I walked in, we were looking at it, I think breaking down a little bit. So, that slight risk-off sentiment from last evening, yesterday evening, continues as we come back into today's session.
It seems like it perhaps is to do with the fall or the slide that we had in the US regional banks.
Yeah.
So the Stocks Europe 600 bank index has slipped close to about 2.8%. So there is some spillover from the weakness that we had in the US banking sector overnight into Europe, and the fear is that some maybe bad loans are lurking around the corner there.
For me, at the middle of today's trading session so far, when the Nifty was at the day's high, the two things that stood out. One was that despite the markets doing so well, the India VIX on a day like this, typically you expect it to go down because there is a fair amount of put writing and there is, unwinding of calls, etc. But the India VIX kept moving higher. And in fact, as we speak, it's at the high point of trade, despite the Nifty having about 100 points still in terms of gains. And the second part was at one point the put call ratio was at 1.44.
Yeah.
Typically it tops out around 1.3, 1.4, or tells you that maybe things are getting overheated at around that level. So 1.44, that's come off a little. That's cooled off to 1.19. So let's see whether that sustains and that leads the next leg of rally or not. Maybe the market could have run a little ahead of, its pace. So
if you look at European, European defense stocks, we don't have individual names, Rheinmetall, etc. They're all down sharply. Maybe there's another factor which is not exactly bad news, which is, this proposed Budapest summit between President Trump and President Putin. Once again, the last time I think they met was in Alaska. Nothing very much came out of it except a lot of photo ops, etc. But a lot of defense companies, defense makers, European defense companies, large ones, they are lower as we speak. It's unfortunate, but basically war means a lot of spending, and a lot of it goes into all kinds of things. Defense, of course, is really on the top of the list in that sense. But We'll track all of this. Europe is down, and we are still managing to hold on with about a 0.5%, just under 0.5% gain so far. We've got earnings to contend with. PVR Inox has reported a good set of earnings for the second quarter. So it's a profit of 106 crores. There was a loss same time last year, 11 odd crore loss. We have Ajay Bijli with us, and we have the CFO Gaurav Sharma joining in as well. Mr. Bijli, Gaurav, great to have both of you here. We're all dressed up. You guys are in suits, sort of. I don't
we didn't get the memo. We should have got that memo from you guys.
We should have told you, our fault. But wishing, you guys, your loved ones, and of course the PVR team a very happy Dhanteras and happy Diwali.
Likewise to all of you as well. Happy Diwali and happy Dhanteras. Yeah.
Lovely. Mr. Bijli, talk to us a little bit about the quarter which has gone by. I mean, I think you've got a 12% revenue growth. The EBITDA is up in a much better way, some 28%. Margins, I think, are looking a little much better, actually. 400 basis points higher is what I've got here. And of course, the loss has swung to a big profit. So it's been a good quarter all told?
Yeah, I mean, we're very obviously happy because the good thing about the quarter which has gone by is that we didn't have too many blockbusters. So I think content is what is attracting people and not necessarily superstars and the budgets of the movies. So which is what was needed because, the script writers, filmmakers, they're also focusing on scripts. And the consumers are also saying we can't be at home incarcerated all the time and we need to go out and enjoy the big screen experience. So movies like Sanyara, Mahavatar, all Narsimha, all these movies are not big blockbusters. They were all sleeper hits. They've done well. Hollywood has come back in a big way. And PVR Inox, of course, our USPs, some big formats that we've got like IMAX and also F1, Jurassic Park, Superman, Conjuring. Regional films have remained steady. But I think all sort of content has been firing, and as I said, there is a fatigue factor of staying at home and watching movies on the small screen. That's also gone away. It's taken its time, but definitely people have realized that our business is anything like any other infrastructure, out of home infrastructure business, and it's always. And I don't know why we keep getting into this either and or debate. Because, you've got so many things happening at home and people still go out to restaurants, they still go out, and shop. And similarly, movies can be watched at home and outside as well. So it'll always be a coexistence, and which is finally played out. So very excited about this.
So two questions, Mr. Bijli. How much? So it was a good pipeline of content, right? In second quarter. So could you give us a sense of what this quarter, the quarter that we're in, October to December, is looking like in that sense?
It's opened up very well. I mean, Kantara 2, all the movies that have played in quarter 2 or years, none of the movies have crossed 500. We've had 22 movies which have crossed 100 crores, which is a lot. But Kantara is the first one in this quarter which has started, will cross 500, has already crossed 500. And then got Avatar, and we've got, this new Ranveer movie, Dhunadhar, and, Thama is coming in Diwali, which is a big one from Maddock Films, which have been producing good movies, Alpha. So the big lineup is there. And so far the momentum is back. And as I said, again, there could be some sleeper hits, which are difficult to anticipate just now, which may also end up firing. It's the momentum which is exciting, and rather than just individual movies which are driving people to come to the cinemas.
Right. Mr. Bijli, just before we move on and ask Gaurav about the ATP and the spend per heads and the occupancy is what they're expecting in the third quarter. People are going to the theaters for Kantara, etc. I can see that. But I have to tell you that, a couple of weeks ago, I had the opportunity to speak to Amir as well, when he spoke about, the new thing that you've launched in Karnataka, in Bengaluru, where it's a restaurant inside a movie theater, as against it being a movie which is playing in a restaurant. I wanted to understand the economics behind that. He said, the capex is about 3 crores, the occupancy is about 70, 75, and it's the spends per head, which would mean that it's revenue neutral for the company. I just wanted to understand, it's been 2 weeks since its launch, how the initial response to that has been, and what your prognosis for expanding that beyond Bengaluru is.
Yeah, we're all about experience because, that's the biggest difference between watching a movie at home and watching the cinema on the big screen, movies on the big screen. So I think formats like Lux, Director's Cut, Gold Class. In fact, the first Gold Class that we opened was in 2004, way back in Bangalore. I think they also had to evolve now. So I think we're always looking at innovation. And this is one such experiment. It's a pilot still. And we've done it in Bangalore because Bangalore, I just find, basically responds the best to pilots and experiments. And it's absolutely on track with whatever Amer said in terms of occupancy and F&Bs. And now I think we'll be rolling out this format in other cities as well. And I think that's the advantage that we have with the scale that we've got, in all humility, that we can experiment with pilots and see how they make the cinema going experience more and more experiential.
Gaurav, come in on the expectations on the ad revenue. This is the highest ad revenue that you've seen post-pandemic. In Q2, it's a growth of 15%, first half about 16%. What's driving the momentum, and do you see this number perhaps moving, say, towards the 20%? Or will it be 15% kind of ad revenue growth for the next 12, 18 months?
I think the momentum has been very strong on the media sales and the ad revenue front, largely driven by a very strong content story across Bollywood, regional, and Hollywood this year. And, a lot of films have generated buzz, and that has helped us in locking some long-term deals at a very high yield this year. And when I, kind of look at the lineup for the rest of the year, it's pretty strong. Typically October till December and even till February, March, most of the big films, especially in South India, are released towards December. And we believe that, this momentum that we have seen in Q2 will only accelerate in Q3 and rest of the year.
Right. And what's your prognosis for the second half when it comes to average ticket prices, average spends per head? Because you'll have also, tried to drum up the value equation of people eating at theaters. So that may have an impact on spends per head, perhaps?
No, I think, ticket price is a result of what sort of movies are coming and what's a mix of films. So far in Q2, especially compared to last year, there's been a muted growth in ticket price. And that's largely because, films like Mahavatar, Narsimha, or, Sayara, that's kind of attracted a lot of value conscious audience. We are also doing a lot of work this year. Our biggest focus is to drive footfalls. And, Blockbuster Tuesday is one of the initiatives where the tickets are priced at a lower level, and Blockbuster Tuesdays has been a big hit. I think when I look at the next few months, we have a very strong lineup of big blockbusters, and especially, films like Avatar, Dhurandhar. The consumer profile who will show up in cinemas, in our view, will be far superior than what we have seen in the previous few months. And as a result, the overall realization we feel will be higher than what we have seen in the last Q2.
Mr. Bijli, just in terms of the new theaters, new screens which you will open, I think you're going into tier 2, tier 3 as well, right? What's the strategy? What's the thinking? And just if you can share some numbers as well, H2, what will H2 look like? And just your overall thoughts here.
Yeah, so 42 screens we've opened so far in the first half. And as we speak, we've opening cinemas in Siliguri, Guwahati, and also an extension of 4 screens or 5 screens in Orbit Mall in Hyderabad. So around 100 screens is what we're looking at again this year. And in various models, which is a FOCO model, franchise-owned, company-operated, as well as asset-light. And plus, wherever needed, we put our own capital as well. So I think we're pretty much on track of opening 100-odd screens this year. And smaller towns, again, we have to be very careful about where we open the smart cinema that we had announced. Of course, the OPEX is lower there, the CAPEX is lower, but we still are targeting the aspirational customers, even in the smaller towns, who really don't want their cinema experience to be compromised. And so that's also getting rolled out very shortly.
Right. But more and more, Mr. Bijli, this is going to be, as you said, a franchise-owned and company-operated. So capital light in that sense for you, from your perspective?
Yeah, I think a mix of both will do. Because, the hospitality industry has been doing this for decades now, where if the brand reaches certain recognition, They obviously have, management deals and all. Nobody in the cinema industry has ever done globally, is what my understanding is. But there is a brand equity, in all humility, which has been built. And I think we are finding that people are happy to, own the brand in a way and give us a fee, both technical and management, in terms of, and operate the cinema. And that keeps our, capital light model going and doesn't compromise on our margins either.
Right.
It works for both them and us.
Could it be margin dilutive at any point in time?
No, we're still, in fact, healthier margins on these properties, because even the rental terms are very carefully structured. Because all the rents that we have currently are historical rents when the comparative intensity was very high. Now, of course, going forward, we're making sure they are on a rev share basis, or rent to revenue ratio. If you common size, it doesn't go beyond 10 to 12%.
Right. Just a question on expansion itself. You've added 42 cinemas in the first half of this year. Are you also recalibrating some of the cinemas which are not functioning well or as per your internal estimates? Have there been changes out there? And the next leg of screens that you would open, would they be beyond tier 2, tier 3, where access is what will drive business as against just affordability?
Yeah, I mean, first of all, on your first question, last year, a lot of non-performing cinemas were closed, but this year only 8 screens have been shut. And I don't think going forward, there'll be any further closures now, because all the loss making and the ones where the malls were also completely decrepit. These are the cinemas we closed, and which happens with any retail company over a period of time. Some of the stores, so to speak, become obsolete and loss making. So therefore, the addition, the 100 screen count that I spoke about, is net addition after whatever closures that are going to happen. And yes, these smaller towns, definitely have an aspirational customer, and there again. Our strategy will continue to remain the same, that you need to have enough number of people who have the propensity to at least pay 100 to 150 rupees ticket price, go out, and even do the spends on F&B. And the cinema is uncompromised and it's a destination. So we're rolling it out. And of course, the cities have to be accessible. The cities have to have the right demographic profile. It's not just on a postcode basis where cinemas are not currently present, as some other exhibitors are talking about. Postcode is one criteria, but also you need to have the right demographic to be able to come to those cinemas and, make those threshold occupancy levels which are needed to make the whole project viable.
All right.
All right. All right.
Okay, all right. I just wanted to understand a little. This is purely from a personal taste standpoint. 4700 BC, that's a part of the listed PVR entity, or it's a part of the corporate entity?
So it's a subsidiary, and it's part of PVR Group.
And what revenue run rate is it at right now? Because I see it selling beyond the screens as well. So there is a very well laid out case for you to unlock value on it at some point in time.
Yeah, so I think, in terms of revenue, it's growing very fast, and it's into, packaged popcorn, which is more on the FMCG side of the business. And, the revenue run rate is upwards of 100 crores a year. And it's been growing at the back of the expansion in quick commerce and, digital sales. So you're right, it's one of the key assets in our overall group from a portfolio perspective.
I'm a big fan of this 4700 BC, and try and avoid sugar, but this is one thing.
Their caramel popcorn is pretty cool. And, D2C brand doing 100 crore outside of PVR would have made a lot of headlines because they would have been backed by some of the PE ventures, etc. You get a 5-6 multiple. There's
you get popcorn in a bag, and then you
it's in a big box. There's Hawaiian cheese, there's nutty tuxedo.
No, you got to put it in a...
It's ready. It's ready to be eaten.
It's incredible.
I think Prashant's asking for some of them to be sent to him so that he can experience.
I'll try it out. I mean, I've not tried it, but I'll try it. Lovely chatting with both of you, gentlemen.
Happy
Mr.
Diwali.
Bijli and Gaurav. Great to have both of you here. Thanks very much, and happy Diwali.
Thank you, guys. Happy Diwali.
Thank you. Wish you a very happy Diwali.
Thanks very much. Well, I think, what we're going to do is take a quick commercial break here. 120 odd points higher. So 25,710. We are back in just a bit with more market conversation on the other side. Lots of stocks we want to get to you. Lots of banking earnings tomorrow as well, which we'll get you previews on in a bit.
Welcome back. A bunch of these mid-cap stocks, even as the mid-cap index is underperforming and more stocks are declining, we have a lot of them. We're just seeing a lot of buying. We have Whirlpool for one, which is up 11%. So overnight there was a development where they've, cemented the terms and conditions of the ownership, brand ownership and royalty between Whirlpool International and Whirlpool India. So what this does is, obviously cements their position even if the parent goes ahead and sells the business to someone. So that stock's doing extremely well. Delivery, obviously we've seen a lot of quick commerce delivery, e-commerce deliveries take place during Diwali. So this is a seasonally strong quarter for them. Delivery is doing extremely well. And we are seeing some traction in a lot of these paint names as well. The fact that crude is at a 5-month low helps their cause along with the festive season. But how should you position yourself in the last hour of trade? Mitesh Thakkar from Bonanza Portfolio joins us now with closing strategies. Mitesh, we saw a big up move. Thereafter, there was some cool off. And now as we look at it, looks like the market's getting ready for another up move. Do you think there would be a blast towards the last hour of trade?
Good afternoon. So it's difficult to give an hourly, outlook because in an hour you can still get a pullback kind of a pattern. But broadly, if you look at the direction one, getting past 25,350, I said we'll test the 25,630 level, which was the highest closing we got this year, which was on 27th of June. And then today we have crossed that. Beyond that, the next set of targets come closer to about 26,000 to begin with. I think that's the first level which I'm watching, around 26,000, and then 26,200, 300, which was the earlier highs, become the next supply level. So I think these are the two targets which I'm working with. But as of now, if you look at the daily charts, the 2 and 3 hour charts, they're pretty good. They're pretty strong. They're all pointing on the upside. The only problem is that the hourly charts are now close to overbought. So as I said, I think, we always get some kind of a pullback on an hourly basis, but broadly the direction should be on the upside. In case you get a dip, the recent highs of 25,630, which is about 100 points lower, should be the support pivot. So any 70, 80 point, 70, 60 point kind of a dip would be a welcome buying chance, and keep a stop below 25,600 then. For the timing on stock side, I have a buy on buy on APL Apollo. That's a stock which is breaking into a fresh high after a few days of consolidation. So APL Apollo is a buy with a stop just below levels of 1735. Look for targets of around 1800. And the other one is FMCG name, that's Colpal, Colgate-Palmolive. All the FMCG stocks have started moving up. So Colpal is a buy with a stop just below levels of around 2270. Look for targets for around 2365.
Thank you very much for that. The entire FMCG basket has come alive for the last 2 days. But let's talk about Whirlpool. That's surging 10%. This is after the company entered agreements with the parent company. Upasana is here with the details.
Well, certainly this stock continues to remain in focus today as the company has entered into 5 strategic licensing agreements with the parent company. Now, first one, the company has entered into a 30-year brand license agreement with Whirlpool Properties, in which the company secures a long-term exclusive rights to Whirlpool brand in India and neighboring countries, which is extendable by 10 years period. Now, coming to the royalty rates is where the key focus is. The company has fixed the royalty rates from 1 to 1.5% for major domestic appliances and 3% for small domestic appliances. In terms of guaranteed minimum royalty terms, this ranges in the middle of $6 to $12 million. And actual royalties is likely to be significantly higher with this as compared to the last year level, which was around $8.2 million. Now, Kotak believes that these royalty rates are reasonably well as compared to the peers. Now, the second one is the company has entered into a 10-year exclusive technology license agreement with royalties of around 0.6%. Third one is the service agreement of 18% markup on engineering and technical support cost until March 2029 is what the company has indicated. And now coming to the remaining two, that is a transactional service agreement with Whirlpool Corporation, and last one is the intellectual property assignment deed with the Whirlpool Corporation. Now, on the back of this, Kotak believes that this will ensure the long-term business continuity for the company after the parent's impending stake sale, and it believes that the terms are reasonable and should ensure a smooth business transition. On the back of this, it has cut the EPS estimates by 6 to 10%, factoring the continued weakness that is seen in the cooling category of the company, and it has revised the fair value of to 1,415, maintaining our ad rating on this one.
Thank you very much for that. Siddharth Bhambre from Asit C. Mehta Investment Intermediates is also joining in on the show. Siddharth, afternoon, and thanks so much for joining in. Diwali greetings. So what have you been doing in the market right now? We went through a very long period of consolidation, and now you're getting the sense that markets are trying to break out. We've been steadily moving up for the last couple of weeks now. What is the call that you guys have, and how are you approaching? What are the stocks that you've been purchasing?
Good afternoon, Ramya. Thank you for having me on your show, and happy Diwali to you and everyone in your team. So market has been consolidating, and we expect that this is going to remain for foreseeable future, at least till Q4 of FY26. We are not expecting Q3 to be great either, and we might see this stock-specific action in market to continue. As far as market direction is concerned, people do turn bullish when Nifty goes above a certain level. And we start talking about how Nifty is under pressure when we go down, say, 700, 800 points below current levels. So I think I would not get excited by this move in market. And we'll try to figure out pockets where we are seeing some earning support. You just mentioned that FMCG pack is active. That is where we are, going to go on. Consumption space, selective banking space, selective auto names is where our attention is there. And we are playing this market purely on stock basis, not even on sectoral basis, because not every stock in particular sector is showing you that kind of earning support. And I'm not talking about because we just started earnings season. I'm talking about last 2-3 quarters. So it's very stock specific market, and I've always stated that such kind of markets are very beautiful for money managers, because this is the time when you can, if you do homework, your homework well, you can beat the market.
All right. So what do you think are some of the ideas which will allow you to beat the market? We'll ask you to do the hard work here.
Hi, Mangalam. So today morning on your sister channel, we were talking about how some of the value stocks and growth stocks which we spoke. And you also mentioned about paint companies doing well. One of the stock in that space which we like, though we like most of the names in that space, but one of the name I would like to say for your viewers is Kansai Nerolac. We all know that auto sector has been doing well, and 45% of the revenue of Kansai Nerolac comes from industrial paints. In automotive paints, Kansai Nerolac has more than 50-55% of market share. Though it's a slightly lower margin compared to decorative business, but we are anticipating good growth over there. Even in decorative space, we have seen, in fact, overall paint space, we have seen that the fervors of competition is now, subsiding. In fact, the competition is stabilizing, and so has been margin. We are seeing some uptick in demand. Margins are at a lower end of the spectrum. So from here on, we are expecting uptick in paint space. And Kansai Nerolac is one of these stocks which we are liking. It has around 24-25% upside from current levels. Among consumption names, some of the names we would like to highlight from FMCG space is like we're liking Bikaji, which is Bhujia company. They're expanding. They have already done more of the capex. Capacity utilization is as low as 45%. So from here onwards, we are expecting next 2-3 years capacity utilization to be better, margins to improve. And they are diversifying. They're predominantly into 3 states, Rajasthan, Bihar, and Assam. And now they have strategy to get into different states, including larger states like MP, UP, Chhattisgarh. They have made some good footprints, and even Maharashtra. So that is one of the names which we are liking. Other names, cement space is also something which we are liking. Large cap Ultratech Cement is a good buy even at current levels. The strategy from here on is not the margin expansion, but the acquisition they make. And then they convert this low EV/EBITDA companies to higher EV/EBITDA companies once they, do the proper merger. So there we like Ultratech Cement. We are also seeing realization improving in some of the smaller names. Everybody is expanding their capacity in large cap and mid cap names, but in smaller names, very few of them. And one such name is JK Lakshmi Cement, which we are liking. There too, we are seeing geographical diversification, cost optimization. So there are names, to cut long story short, there are names where managements are proactively taking cost-cutting measures, not by reducing, not by just cutting the cost in terms of manpower, but optimizing cost in terms of better energy efficient ways of production. So there are a number of stocks which we can go on and talk about those. So yes, this is a market which is high in terms of valuation overall. If you just see Nifty, then probably you will feel that you're not doing anything. But there are ample amount of ideas which can be worked upon.
We'll ask you about IT and whether any of the IT stocks make it at least to the value side. They don't come in the growth side, but after a 20-25% fall this year, are the stocks looking attractive from a value side? But just before that, Wipro's down 5%. That is the top Nifty loser. Following that is Infosys, 2% lower. HCL Tech takes a knock of about 1.5%, and it's red on the screen even for a Tech Mahindra. Now, on Wipro, brokerages are a bit circumspect. Jefferies has an underperformed rating on Wipro. They're saying that over FY26, FY28, the EPS growth is going to be a measly 3%. You add to that a 3% dividend yield, and even then you come at, say, 6%, and that makes the risk-reward unattractive. Ambit also says this is their least preferred stock in the large-cap IT space. FY26 will be the third consecutive year of a decline. Plus, there will be margin compression of about 110 basis points, and the current market price suggests that the company is going to grow a lot faster than their own estimates, and therefore they too have a sell call. Nomura, on the other hand, likes the story. Their target price is at 280, higher than the current market price of 240. They believe Q2 was a beat across most parameters. On Infosys, brokerages are largely bullish. We've got Nomura, Jefferies, HSBC, all buy calls. And target price is broadly between 1700 to 1730, and the current market price is 1440, which means you're looking at an upside of 200, 250 rupees on Infosys going by the brokerage verdict. But the reason why the stock today is lower, because the upper end of the guidance was not raised. They're now guiding for 2 to 3% versus earlier 1 to 3%. And this is despite a strong H1. So is the management being conservative, or is it that they're seeing caution in the market, at least for the second half of the year? That we'll find out soon. But for now, the stock is a bit subdued, down close to about 2%. Siddharth, while the large cap IT companies are not doing too much, there is no growth. These are companies growing in low single digits. Many mid cap companies are growing well. Now, LTI Mindtree, for instance, also has come back on the growth trajectory. When we chatted with the management, they said that maybe by Q4 of this year, they will hit double-digit revenue growth, at least as a run rate. That's in Q4. Persistent was growing at 4%. Coforge estimates for a 5.5-6% growth. So there are mid-cap IT companies which are growing. I mean, where do you stand on technology as a whole? And do you own any, or do you recommend any stock?
We have been negative on IT since last 3 quarters now, and we don't like to change our view right now. Reason for that are, and first I would just touch upon large cap names. As you rightly said, these are not growth stocks anymore. People are getting a bit excited because of margins, but if growth doesn't come by, I think margins will also not sustain at these higher levels. What we are observing, that valuations are not as cheap, because for 0 to 3% growth rate, you can't command PE of forward PE of 21, 22. You have to come back to 18, 17 to be very attractive to come into value zone. And if there is no growth, there is no chance that with 0 growth or 1% growth, you will fall into value zone. So that answers your question that Infosys, TCS still are not in value zone. Maybe the texture of Infosys and TCS, if you just compare two, then probably the tide is changing, where TCS used to command a higher premium because of higher margin and growth. Infosys has better levers at this point of time, and maybe there can be a shift from TCS to Infosys, but on absolute basis, we are not seeing any upside in both names in near future. As far as mid-cap are concerned, obviously they are growing at much higher rate, but we have to go back a little bit, Rima, and see that what has happened in mid-cap IT space. They were growing not just in double digit, they were growing above 15, 20. And that's the reason market gave them these valuations of 35, 40 times of forward earning. Now we are getting excited that large cap are not growing, but mid cap is going to double digit. But for double digit, you don't give 35, 40 PE. So even if you're seeing growth, you're seeing that barring persistent
expectations already were so muted. Stocks are not reacting. So valuations in mid cap are also very high. So despite these growth numbers, I won't get excited in mid cap, and I'll completely avoid IT for some time.
All right. Siddharth, we'll leave it there. Good talking to you. Thank you very much for joining us. And we wish you all the best. Have a good weekend. I'll see you back soon. We'll take a quick commercial break here. JSW numbers are at the bottom of the screen. Just as we came in, Hindustan Zinc had reported numbers, and now so lots of metal companies, and this seems to be margins have come in slightly better than expectations. Revenues are, I think, slightly better as well, and we'll have some analysis on these. Earnings which are coming through in just a bit from now. Sanjay Parekh is also going to be with us in just a bit from now from Soham Asset Managers, coming up on the other side. Welcome back. We've got, as we were talking about metal company earnings, right? Hindustan Zinc seems to have cut guidance. Look at that. So refined metal production, I think, is where, in terms of just volume-wise, they've cut guidance. Saleable silver now seen at 670 to 690 compared to an earlier number. But there seems to be a slight amount of lower everything. I mean, silver and other stuff which they're saying. But this is all volume related. Prices, of course, have gone up. So I'm not sure how much of value impact this will make in that sense. But overall, I mean, this quarter, next quarter, metal companies are expected to report very, very robust numbers across the board. I mean, yesterday, for example, we had Manish Chokani who was saying that Vedanta will make $1 billion in profits just from silver, and I think it, of course, showed up in that Hindustan Zinc numbers. I think we said that 40% of the profits from Hindustan Zinc essentially coming in from silver. And the move that we've seen as far as silver prices is concerned. Sanjay Parekh is with us, founder and CIO at Soham Asset Managers. Sanjay, good to have you with us here. Wishing you all the best for festivities. Happy Dhanteras, Diwali. Looking spiffy, looking good.
Yeah, I don't know. Wish all of you a very, very happy Diwali and your families and all the viewers. A great Diwali, peaceful, happy, healthy Diwali.
Thank you, Sanjay. Make it a little more healthier, more prosperous. कुछ बताइए क्या you talk about one or two names, right, which you've kind of sort of worked on, looked at, maybe not necessarily bought or even bought with disclosure. What's made it to your portfolio, or at least to the watch list?
Yeah, no, Prajan. So, I mean, markets certainly are not cheap, but, we clearly feel that bottom up, there are opportunities. And, we look for these. We think about it that, can this stock double in 4 years? And in some of the larger names, so not at the current price because some of them have flared up, but I'll give some of the instances where we think that this could be from 27 to 30, potentially have from a point to point, because some of them, as I said, have moved up. Can they double in 4 years? So, one of them is JSW Energy in the energy space, where we think from 12,000 crore EBITDA, can it go to 23,000 crores in 30 years? Then another one is Samvardhan Motherson, SAMIL. Can this again from 12,000 crore EBITDA can become 23,000 crores? Yes, the answer is yes. And all of them we own it, we would have interest in it. So please, that's a disclosure we have. And then let's say Adani Port, again from 22,000 crores to 35 to 38,000 crores in 4 years, very, very much possible. And so on, So even, in the Tower, which we think there is value, there could be a leg up in growth. And given if the Supreme Court can get a little easy and lenient, then the existential problem of Vodafone is taken care of. And that can again be a very good compounder in terms of can they double in 4 years, So I think in each of the areas, and also, something like HPCL, which we had bought last year and then, of course, sold out. Again, we find the risk return favorable after the oil minister's commitment that, a lot of decontrol or deregulation happened. Some of it is pending. Again, this is at real deep value. I'd send you one of the performance of HPCL, BPCL over 20 years. Nifty TRI has done 1100%, HPCL, BPCL with dividends have done 1900%. So 5 year, 10 year, 15 year, 20 year, they've done well. So despite all these issues around deregulations and controls, the reality is that they have delivered returns. So there as well, we have some small weight. So this is how we think bottom up in each of the areas where there is critical mass, size. They are almost large cap or near to large cap. And if they can double in 4 years, we are happy about it. Or even Axis Bank, not at the current price, but from 1100 to, maybe can it double in or maybe like 2,000 in 4 years? I think yes, it is possible if they start delivering on ROA, ROE. So this is how you get across even in larger caps, bottom up ideas, and that's how we seek to look to invest at a price.
We were just discussing the phenomenal rise in silver, and you own Vedanta in your portfolio, and that's seen as a big play on silver. I mean, at what price did you get in, and what do you expect from Vedanta going ahead?
Yes, so Vedanta we've been buying now for last year, almost 318 to even 440. We've got dividends this year, 23 rupees in cumulative 18 months, almost 60 rupees plus dividend. In the last 5 years, Vedanta has given 90,000 crore of dividend. And that may be higher than some of the technology companies, Of course, we did not like the JP deal. If that JP deal would not have happened, I am very, very confident the stock would have been somewhere at 530 to 550. There's serious value even now. And silver itself, when they mine, you get zinc, you get copper, and you get silver. If you attribute the whole mining cost to the zinc, silver actually would make them at $38, 10,000 crores at 750 tons. If they make 700 tons, it's a little less. So it's a serious EBITDA that they're making in silver, zinc, aluminum, and it's still less than 5 times, So again, this qualifies, where they can, from a point to point with dividends from where we bought half of the upside. We still feel there's big upside. But having said that, clearly the JP deal could have been avoided. That perhaps, is a little bit of bottleneck, which the parent should have avoided.
How big a worry would, the demerger thing be? Because that a lot of people are thinking of it as a binary event, right? Since you spoke about a binary event in Vodafone Idea, and as a result of which a possibility that Indus Towers could benefit. Say, for instance, if the demerger were to go through for Vedanta, how much could the value accretion be? And if it weren't, then how much could the destruction be?
So, Mangalam, you have a valid point. So, the way we look at Vedanta today is that, we look at it as a merged entity.
Yes.
And at that point, we should be making money. And we've seriously not looked at the SOTPs of separate companies. If the demerger happens, then it will be an icing on a cake. And that will certainly create further value. But the valuation, the starting point of valuation is so cheap that, at 4 times, 4.5 times at around 400. And as I said, because the parent also needs dividend, you are also a beneficiary of the dividend. And yet the debt is not going up. The standalone debt and this company will become meaningfully different with the integration in aluminum to alumina, aluminum to partially bauxite, on the power side, as they get the coal mining blocks. So the delta on EBITDA also will change. And the best part is standalone debt would not go up. As I said, the only bottleneck was this JP deal, which was completely unwarranted according to us, which we did not like. But having said that, there is value clearly in the stock, so we would hold on. But I hope sense prevails on the parent, then they move out of the JP deal, hopefully.
Yeah. Sanjay, one other name is which you've added. By the way, you own a fair number of. Not fair number, actually, maybe that's exaggerating, but you own a few newly listed companies. One which you own is GK Energy, which I think is also a new addition, right?
Yeah, we used to own, we had bought Oswal pumps way early, and we studied the solar pump sector, and GK Energy also is a part of it. And just a caveat, we may have book profit in one of them, which is Oswal pump. But GK Energy, we still own, and it got listed at around 165. It's less than a month now. Here is a player who has an asset-light strategy. When we bought, the market cap was 3,200, 3,300 crores. And they get a lot of work outsourced on the pump, motor, connector, on the modules. It takes the cells and get the modules outsourced at a very small margin. So very, very efficient player. And then the EPC part is done by them. So, and it's pretty large in size, almost number 2 in terms of the pump, solar pumps itself, predominantly in Maharashtra, now expanding in other regions. But this will be a debt-free company with this year EBITDA of more like 325 crores. Next year can go to 500, 550 crores. The risk that is there, that is always to be watched, is the state government, where you need to get the payments from them and the SEBs. And also, of course, whether Kusum 2 will get extended. I think the second one, I'm very, very confident. The first, we have to watch, but from the feedback that we have, they get payments with late, maybe 4 or 5 months. But that's where you still make good ROE, it's fine.
So you own both Oswal and GK, right? I mean,
we don't own now Oswal.
Oh, you sold on. Okay, then you got into this one. Got that. But as a farmer, I can go to the store and buy any of these pumps, right? I mean, I just get the subsidy from the government, but I can buy GK or Shakti or Oswal, whatever, right? It's up to...
Yes, you're right.
So
it is a very transparent process.
Yeah, okay.
You, as a farmer, can select, I want to buy this.
Yeah.
It's all assimilated, and the nodal agency then gives orders, and based on the one who is L1, they get order.
Sure. Have a good day, have a good weekend, and happy festivities once again, Sanjay. Great speaking with you. Thank you very much for joining us.
Thank you.
Really appreciate it.
You all the same.
Thank you. Well, as we look forward to summer 2082, I spoke with Madhu Khela of MK Ventures and Manish Chokani of Enam Holdings. And we spoke a little bit about gold. And both kind of, Manish, of course, has been a big believer that hard assets will do well for a while. But even he's now kind of saying, well, maybe this is a bit too parabolic. We need a bit of a pause. Listen in.
Traditionally, I've been more positive, always been in equity. And that fundamental view has not changed. You can tactically use gold and silver as an asset allocation call. But I don't think someone like me can invest heavily and significant portion of my portfolio in gold and silver for a long run. And my premise is based on very fundamental thing. That all the noise about this gold and silver price is all technical in nature. There's nothing fundamental about it, right? There's no real fundamental usage of gold or silver which can justify these prices. We're all talking these central banks are buying, dollar debasing, and I agree with Manish's point. But when I buy good companies, their earning could go up. Like if I buy really good companies, their earning could double in 4 years, quadruple in 8 years. So effectively, I'm buying those companies much, much cheaper 8 years down the line. The same is not true for gold and silver.
Holding around that 25,700 mark for the Nifty Bank almost 100 points away from its 52-week or record high. We're having Nimesh with us in the CNBC-TV18 Motilal Oswal newsroom for a special segment as always, D3 Chatter. Nimesh, what's the insight today?
Hi, Mangalam. Another day of strong gains, but it's only limited to the Nifty and the large caps. The broader markets are relatively underperforming like we saw yesterday as well, and the breadth is quite weak as well. So at the margin, we are talking about Bank Nifty at new highs or Nifty approaching new highs. At the portfolio level, that's not reflective very clearly as the broader markets are sulking. Again, technically, 25,700 is a level to watch out. If that gets taken out on a closing basis, the feedback is that you might see further short covering rally. Remember, in the last 4 days itself, the FI net short position has come down from 94% all the way to 86%. And with today's rally, it would have fallen further. So I guess it's the lowest short position by the FIs in the last four months. So clearly, that's clearly visible in the data as well, that there has been a short covering rally in the last couple of days. Financial stands out though. There is a bit of buying as well, and it's going to be a heavy earning as well over the weekend. Not only Reliance, but there are at least 7 to 8 financial numbers which are going to come out, and also the RBL bank deal that can have a big trigger to watch out for on Monday morning. So lots to watch out on Monday morning, but this week's rally seems to be largely focused on large cap names and Nifty, and that's largely because of short covering.
Okay. Yeah, no, absolutely. Nimesh, what about individual stocks? What's the chatter?
So a couple of stocks on my list today. First is Time Techno. That's been consolidating in the last couple of days, but understand the company is likely to raise funds by QIP very soon, so that's a trigger there. The second stock is Adani Power, up 5% in today's market. Even yesterday there was a large block, big delivery got marked into, and I understand some domestic mutual funds are accumulating Adani Power at current levels, so that's the second name. And the last one is Aditya Birla Real Estate. In the real estate name, that this stock is relatively underperformed in the last couple of days. While the other F&O stocks have seen a bit of a covering rally, Aditya Birla Real Estate has been under pressure, largely because there was a selling pressure going on from a leading domestic mutual fund. Now it looks like, with today's volume, looks like that selling pressure is largely over. So watch out for big delivery in today's market. But at least the selling pressure from a domestic mutual fund seems to be over in Aditya Birla Real Estate.
Nimesh, thank you very much for that. Let's 15 minutes to go to wrap up the day and the week. Mitesh is now joining in with a few BTST calls. Mitesh, still at 25,700. What about stocks? Any calls?
No, I think Kotak Bank has moved towards the highs, closing very strongly. So BTST here at the stop at 2190 for targets of 2230. And the other one is M&M. That's one of the stocks, which after pulled back a few days, started its move yesterday. Today is seeing good continuation. So BTST here with the stop at 3630 for targets of 3670.
Thank you. M&M it is, 2.5% up for the day, 5.5% for the week. But the big trigger tonight will be Reliance Industries. It comes out with their Q2 earnings. Sonal joins in with the consolidated preview. Sonal?
Well, this time around, strong results expected from Reliance in Q2. Do remember, the stock has been flat in last 1 year, has been a reasonable in terms of valuation as well, 21.7 times FY27 earnings. But let's talk about the earnings. On a sequential basis, revenues are expected to come in at 2.46 lakh crore rupees. EBITDA expected to increase by 4% on a quarter-on-quarter basis to come at 44,511 crore rupees. Margin expansion is expected as well, 18.1% this time around. However, profits are expected to decline 22% on a quarter-on-quarter basis. That's because the base quarter had impact of stake sale in Asian Paints. So they earned around 8,924 crore rupees because of which, and that is something which should be kept in mind while looking at reported profits this time around. What will drive the growth this time? It will be oil to chemicals business, which will do well. Retail business too, because of the GST rate cuts, and also revenue per square feet will see an improvement this time around. However, some weakness will be seen in oil and gas segment. The other part will be Jio's EBITDA. That is likely to surge 16% on a YY basis because of higher ARPU due to tariff hike. And also, if we talk about the retail EBITDA, that's where I said it will see higher growth. 11% on a YY basis is what we are expecting this time. If we go by the trend as well, this time it is expected to see a multi-quarter high EBITDA coming in at 44,500 crore rupees. So watch out for that one. Sequential recovery is what we are expecting from Reliance this time around.
Right, sequential recovery. In fact, on Monday, we will have not only Reliance, but a lot of the big banks which will be reacting to their earnings as well. So to that extent, it will be a very busy weekend from a Nifty earnings standpoint. And because it's bank, it will be Gaurav who will be, perhaps in office tomorrow as well, looking at all these numbers. Gaurav, happy Dhanteras, it seems. But what is it that the street is expecting?
Well, let's talk about the big boy HDFC Bank. When we look at the numbers, we have already seen loan book growth at around 10% on a year-on-year basis. So in terms of numbers, now street is expecting 4% growth in net interest income and 2% growth in profit. And I'll tell you why they're expecting muted numbers. First is that there will be some kind of pressure on net interest margins. They're expecting 10 basis point of pressure on net interest margin this quarter because of the repo rate cut. At the same time, credit costs, on the other hand, they are likely to see credit cost normalization. We may see some decline in credit costs on a sequential basis, and that is the reason why, although net interest income that is likely to increase by 4%, but the profit that will increase just by 2% on a year-on-year basis. What we will be watching out is that the commentary on growth and net interest margins, and second is that the commentary on LDR ratio. Remember, in this quarter, the LDR ratio has gone up to around 98%, and they want to keep it between 85 to 90% in medium term. Second is ICICI Bank. When we look at this bank, we may see double-digit loan book growth trajectory to continue because Street is expecting 10% loan book growth in this quarter as well on a year-on-year basis. But at the same time, when it comes to earnings, they're expecting net interest income to increase by 6% on a year-on-year basis, while profit that may increase just by 2% here as well. When we look at net interest margins, the fall may be a little bit higher than HDFC Bank, and the reason being that in the last quarter we saw 7 basis point of cushion because of one-off impact. So that is something which is missing in this quarter, and that is the reason that net interest margins may fall a bit harder, almost by 14 basis point. Credit cost, again, we are likely to see credit cost actually improving on a sequential basis. And lastly, what we will be watching out is that the commentary on the net interest margins going ahead and commentary on the growth here as well. Remember, these are the two big banks where Street is expecting profit to increase on a sequential basis, on a YOY basis actually. Third, let's talk about IndusInd Bank. Now, we have already seen some kind of weakness in the pre-quarterly updates. Loan book growth and deposit both have declined on a YOY basis as well as sequentially. So, in terms of numbers also, we are not expecting any kind of great set of numbers. When it comes to net interest income, we are expecting around 16% decline on a YOY basis. PPOP, which is pre-provisional operating profit, we may see 40% decline on a year-on-year basis in this number as well. Net interest margins, we may see a decline of around 14 basis point, and here as well we saw 11 basis point of cushion in the last quarter because of one-off impact. So we may see net interest margins falling more than 10 basis point. And lastly, when it comes to credit cost, now that may actually improve on a sequential basis but still remain elevated at 2%. Lastly, what we will be watching out is that the RBL Bank. Now, apart from numbers, the key thing to watch out is that tomorrow there is going to be a board meeting where they will consider, and if it is fit, they will approve the proposal of raising funds. Now, this will be raised via equity issue. And remember, just 2 days ago, we ran a story. Our exclusive sources told us that Emirates NBD is looking for 60% stake in the bank. So definitely, that is a key thing to watch out for. All in all, in terms of numbers, we may see some kind of muted numbers from the big banks. IndusInd Bank, we may see some weakness. And for RBL, along with the numbers, we will be also watching out on if any news comes on the story that we broke 2 days ago.
Thank you. That's a lot of numbers to contend with. Gaurav, thank you very much for simplifying it. Get into a break. More market talk on the other side.
Okay, welcome back. Now, that news at the bottom of the screen, which has, of course, been flashing, that Axis Bank is perhaps, I mean, there have been two firm bids which have been submitted for a stake purchase in Axis Finance, which is an Axis Bank subsidiary. My colleague Rachna is joining in with details on this. Rachna, over to you.
That's right. Sources have told CNBC-TV18 that Kedara Capital and Blackstone have submitted bids to acquire about 20% stake in Axis Finance, the non-banking finance arm of Axis Bank. A strategic player is also said to be in the race. Now, the proposed transaction has been scaled down from an earlier plan to sell up to 50%, which was between $800 million to $1 billion of value, to now about 20% for roughly $350 to $400 million. Now, Axis Finance has been drawing strong investor interest thanks to its performance. The company operates across 5 key segments: corporate loans, real estate funding, collateralized lending, MSME and retail finance. And as of March 2025, Axis Finance reported a profit after tax of 676 crore. That's up 11% year on year, with assets under finance of close to 40,000 crore rupees, and they contribute up to 38% to Axis Bank's total subsidiary earnings. Now, its AUM grew about 22%, and the loan book also expanded at 31% CAGR between FY22 and FY25, and asset quality remained healthy with net NPAs at 0.37%. Now, in its recent earnings call, Axis Bank management said Axis Finance could be classified as an upper layer NBFC under the RBI's scale-based regulatory framework in the future. Now, Axis Bank has also reiterated that any decision on stake sale or IPO will be guided by its capital requirements. We did write to Kedara, Blackstone and Axis, but haven't received a response yet.
Okay, all right. That's an important one. There's a large sum of money that we're talking about as and when something happens. There are firm bids. And as Rachna pointed out, we'll have to hear from, Axis Bank in terms of what they want to do, whether they want to take this forward based on, of course, their own requirement of capital per se. Actually, on that note, my colleague Shivani Bajaj from Delhi also caught up with the Axis Bank CEO, Amitabh Chaudhary. And of course, this was more to do with the results, etc. And of course, a bit about the future outlook going forward. Listen in.
If you look at the results, we have taken one-time special provision for something which RBI directed us to do, and then as a result we also have to declassify some loans, and we have bought some PSLC which has had an impact in the P&L. It is one time. Obviously we are hoping, given how the credit costs are now stabilizing, how the business momentum is picking up, that things should improve from here on. We have always said that given what the government has done in terms of GST cuts, what we see in the economy, the momentum which is happening during October, it is slowly, gradually picking up. CRR cuts, maybe a likely further rate cut. I think it should help the overall Indian economy. Hopefully, some of the tariff issues should get settled. So we are quite positive about the outlook of the Indian economy. If that outlook it does get realized, and given where we are and where our platform is, we are quite hopeful about the future. Let's see how it pans out.
So this is you're saying one-time hit that we saw.
This specific provision is obviously a one-time hit. And it is a one-time hit in this quarter, and if our credit costs on this portfolio do not get elevated, which we don't think will happen, it will get reversed in the quarter ended March 31st, 2027.
Okay, so you spoke about, the interest rate dynamic in India. We are expecting, the market is at least factoring in another rate cut to come in December. What is your outlook on that, and do you see that directly impacting the credit takeoff?
Well, I don't know whether a rate cut will really kind of lead to a sudden credit takeoff. The rates have been cut quite a bit already, and another 25 basis points, which is the chatter in the public markets, is not going to really spur credit growth on. I think it is about the confidence which RBI has on inflation, if that rate cut comes through, and it's a signal to the economy that they can expect these rate cuts and they can take, their overall returns can potentially go up. So I think we should just assume that, nothing beyond it. Let's see whether the rate cut happens or not, because right now it appears that RBI will be very, very watchful, or the Monetary Policy Committee will be extremely watchful before they go for a rate cut.
All right, that is the management of Axis Bank. Let's, 3 minutes to close. Let's quickly get in a word from Gurmeet Chadda of Complete Circle as well. Gurmeet, happy Dhanteras, happy festivities to you, your team, your family, and all your investors as well. What's the Diwali gift that you have for our viewers? What are the 1 or 2 ideas that you would give us? And not chole or bhature.
Happy Dhanteras, Nigel. I think a couple of things we are tracking. I think the private capex seems to be picking up. we are seeing a lot of traction in power equipment space. So we've added companies like Rectifier to the portfolio, and we are giving a boost to consumption. Very strong auto demand across the spectrum. So we've added Lumax, we've added Uno Minda more. We've given more weightage to M&M and TVS. So adding more consumption and some power equipment since there is less time. So quickly winding it up.
Yeah, one Diwali gift will be a deal, Gurmeet. Looks like we're getting closer, or no? I mean, no way to tell, but we can hope.
Yeah, looks like, and if you see the action on rupee, the intervention, reversal of capital flows, some of it is pointing towards that. I think the bigger event is earnings, Prashant. Between today and tomorrow, you have 25% Nifty reporting earnings, Reliance, HFC, ICICI. So if earnings pick up, I think sooner or later the deal could be sentimental, earnings will be structural.
That's a punchline. Gurmeet, sorry, you said capital goods is a focus area for you, right?
Yeah, early signs of private capex pickup. I was in the railway exhibition yesterday at Bharat Mandapam. Huge, I saw a lot of foreign delegates visiting, a lot of counters of CG Power, Hain, Siemens, etc. A lot of traction, a lot of MOUs being signed. So I'm getting a sense as demand picks up, I think some private, because we will be a little early, but I think this is the right time to get into them, and prices have corrected, especially the mid caps and the small caps in those pockets.
It's a good enough tease, short but effective conversation, and on the dot. The markets closed for the day, for the week. A good performance is what we've seen for the week for the frontline indices. The mid caps as well evened out. Last couple of days were underperforming, but for the week it hasn't been a big problem. In fact, the Nifty ending virtually at 25,700, the 52-week high for that index. The Nifty Bank as well hit a record high earlier, did extremely well. The top losers today, however, belong to the IT pack, Wipro as well as Infosys along with HCL Tech. Top gainers, the consumption names, we had Asian Paints, M&M, Bharti Airtel, HUL, ITC, Reliance ahead of numbers. Broader markets, more losers than winners. Like we said, Z Entertainment, we had Yes Bank, Emphasis, HFCL, CESC, all of them at the lower end. But on the way up, we had Whirlpool up around 11% on securing royalty rights for the next 30 years. We have Delivery, PG Electroplast and Laurus Labs along with Nippon Life doing well. So with that, we wrap up on this week of markets on closing bell. But don't go anywhere because it's a Friday. As always, after this short break, Editors Roundtable up next.
Powered by LIC, हर पल आपके साथ. Co-powered by SBI, बेस्ट है सबको पता है. Special partner, Nuvama. Let's do it right.
The Wall Street gains for the third straight week, records its biggest weekly gain in 4 months. The Nifty and the Sensex are up nearly 2 percentage points each. However, the mid-cap index underperformed. On this week's edition of Editors Roundtable, we take stock of the week gone by. We decode the market action this Samvat. I am Reema Tendulkar. With me are Prashant and Nimesh. And joining us here in the studio is Sunil Singhania, founder of Abacus Asset Managers. Hi guys.
Good week, right?
Yeah, it's a good week. The mid caps had a little bit of a
yeah. I mean, the mid and small cap has not done well. So portfolio level, it's not a great week, so to speak. But yeah, from a Nifty point of view, the shorts are getting covered. FIs are now coming back. There is a bit of cash buying as well. It feels good, right?
I mean, I thought you would start with how beautiful the office is looking, how different we are looking, and it is feel good.
And
right?
Sunil.
And Sunil, of course.
Oh,
Sunil, Happy Diwali, Sunil. Happy Diwali
to all of you.
Wonderful. I think we've made a bit of a tradition with your sort of
You joining us on
Madhu today.
So how are things? And I mean, it's been. I mean, people have been complaining it's been a bad year, etc. But
yeah.
If you actually tally the returns, there are lots of 20%, 30%, 40% kind of movers this year.
Yeah,
in 25.
That we come to know only in hindsight. Unfortunately. No, it's been a challenging year. Obviously, last 4 years was so good that expectations were very high. So, normally in a challenging year, you lose money. This time, even a flat year is looking like a challenging year. More importantly, because the alternatives, some other markets like China or Europe or even US and Japan and Hong Kong and Taiwan and Korea are doing well. Gold and silver are doing well. So obviously equity investors keep on comparing. Life is relative. So on a relative basis, people are unhappy, equity investors. But I think on an absolute basis, after 4 great years with so many challenges, I think it's not been a bad end.
Indians should not complain about gold at least. Gold to jewelry sabke paas hi hoga, right? I think
yeah, but what happens typically is the larger investors, their percentage allocation to gold is smaller. For smaller investors, the percentage allocation evens out.
Yeah, and it's still a store of value. It's not used to monetize, right? You're not going to sell it in that context.
That's fair. But Sunil, what's the setup looking like? We had a tough year, as you explained. Not much money has been made. But is the worst priced in? I mean, a lot of things are priced in now, and you feel there is a reason for investors to be bullish on equity?
No, so we were a little apprehensive since the last at least 15-18 months in terms of putting big money to work. But I think last 2-3 months we have started getting constructive. Okay. And I would say that other than the tariff issue, even 2-3 months back, things were falling in place. Sure. Both the government and RBI were working in unison. Both were focusing on increasing liquidity, increasing I would say the push towards getting consumption as well as capex back on track. World is a lot more peaceful, other than Russia, Ukraine, most of the small conflicts, at least for now, are behind us. And to some extent, we should give some credit to Trump. And even on the Ukraine and Russia thing, I think
looks like
there was a meeting done and maybe some move we might have. I think even US, after the initial uncertainty, I think it looks like going into that rate cut kind of a mode, which normally is again good. So, and tariff also is a question of when rather than whether. Earnings are looking good. I was yesterday also traveling, and wherever I go, I ask around for leads on something. I think consumption has taken off really, really big time. So it's working. The RBI stimulus as well as the government stimulus is working on the ground. I think in India we need earnings growth, which was absent. So hopefully if December and March quarter earnings growth come back and we are seeing now signs of more confidence coming in, then we should be back on track.
Okay. In your portfolio, can you tell us which were the big hits and the big misses of the last 1 year?
I hope there were more hits than misses, but luckily at least because of our cautious nature we don't lose big time. So the portfolios are pretty okay. I won't say that it was the best year. It was an okay year, but I think metals did well for us. Financials did well for us, particularly some niche financials and the non-fund-based financials like some insurance companies, some savings/capital marketplace. They did well for us. There have been some niche stocks.
Can you name them?
Like, the metal pack, Sarda did well, Jindal Stainless did really, really well. NBFCs, I think IFL after a bad year did very, very well. AB Capital was
AB Capital, I was to tell you, yeah.
Some, even on the wealth and asset management side, we have had some good picks. So it's been okay-ish here, but as I said, we did not lose too much in any of the stocks, and that's why even in this challenging year, we are okay.
You also recently purchased an Edelweiss Financial.
So it's the same theme.
Same
See,
theme.
How do you make alpha? You can make alpha by being a little ahead or buying something where there is still a little bit of an apprehension. And, obviously you have to work hard. So I think some of these stocks where we believe that, maybe the worst is behind, upside might be a little bit away, but we don't mind waiting for it. But there is a big apprehension, and if you go right, the alpha can be huge. I think some calls we'll have to take.
Two pockets, Sunil, I want to take your view on. One is on the IPO market. A big frenzy, a lot of IPOs have come, but not everybody has made money in the IPO market. So that's one space. And second, which you normally don't talk about and where expertise like you come in, is the SME market, where you identify some good winners in the SME market as well. First on the IPOs, which leg are we? Are you now saying bad companies, bad valuation, or you're still saying good companies with bad valuations?
I think both. I would say bad company, bad valuations, maybe more on the smaller company side. On the larger company side, it's maybe decent companies, but with very bad valuation, not even bad valuation.
Sure.
But at the same time, there are pockets where, promoters are good, valuations are decent, business potential is good. So I would not say you write off every IPO.
What's your trademark for buying into an IPO? I mean, any red flags or any
Actually, Nimish, you know us, we are so cautious.
Yeah.
We मधु के language में ना रुपए में 4 अट्ठन्नी नहीं 6 अट्ठन्नी चाहिए और IPO में 2 अट्ठन्नी मिलती है और 2 चवन्नी मिलती है. Whatever मधु is good in all this. So I think even now the expectations of valuations are high, and the more important thing, Nimish, is that in listed space you have a track record, you have history, you know what can happen. In IPOs, you just have to believe on what promoters say. And whoever or whichever promoter comes to sell the IPO, their growth rates are 3 times the economy growth rates, So you believe in them, and you have to then take a call. I would say that this is also a time when one has to learn to say no.
Yeah, so exactly. So one should not have the FOMO of missing out on an IPO.
Yeah. And too much of effort and not too much of allocation if it's a good company. So better spend time more constructively.
Sure.
Sunil, you said you've been traveling and getting a sense that consumption is picking up. Which segments are you seeing this?
So it is very interesting. Yesterday I was in Chennai and I visited some investors, and they run a huge mall also. And footfalls have gone up like crazy. So Saturday, Sunday, there is no room to even stand. But interestingly, what they said, that conversion has increased. So earlier it was not that everyone was coming in to buy.
Not just window
Conversion has increased. Yeah. Food courts are a super hit because even those who don't want to buy, they have. And the other interesting thing was that the traditional anchor tenants are seeing some growth, but some new age brands which are predominantly focused to Gen Z segment, they are growing much faster.
Okay.
So maybe this fast fashion kind of stuff, and fast even personal care. There you are seeing more sort of growth on the absolute consumption side. Electronics is doing very, very well. Obviously, auto numbers we all know, but that is not a mall related. But even electronics is doing very, very well.
Traditionally we get a lot of feedback about autos, saying that maybe there is a small cars, the entry level segment, two-wheelers, of course. Do you reckon this boost will be, because last month was a strange month because there was Shraddh and then there was pent-up thing which came into with the GST cut, etc. So it's kind of tough to know what was what. But do you think it'll give a durable fillip in autos, and which segments? Is it more two-wheelers, less four-wheelers?
So October has been also a good month because there has been a spillover of demand. Not everyone who wanted to buy was able to get delivery in that 7-8 days. But if you actually see, Prashant, last 8-10 years, the volume growth, both on the four-wheeler and two-wheeler, on the industry level, has been mid-single digits.
Yeah.
So I think structurally, at least we don't see that changing in a big manner. And that is the reason why the OEM autos, we don't have too much of an exposure except one company. We try to play it more through ancillaries and engineering companies, because structurally we are not growing beyond 5-6% if you put the entire auto segment in place. Obviously, this has been a case of GST cut. Even the auto companies passed on more than what they were passing on. There has been some benefit given in terms of lower interest rates also, so your EMIs to that extent come down. And generally, when you get that feel, अरे भाव कम हुआ, तो थोड़ा extra demand, automatically it comes. So in fact, that is another interesting thing which the mall guy was telling us, that every shop has put that earlier the price was this and now it is this. So it attracts. We all love to buy cheap. So I think in auto also that has been a big thing. And if it's a car of 30 lakhs, suddenly you feel, array 26, 27 mein mil raha hai. It's not changing per se, but the mindset becomes a little bit more attuned towards it. But I think structurally this segment cannot grow beyond 5-6% in volume terms. Obviously, if there is an up trading and you buy premiumization or something, then it's fine.
Please. So what else are you buying now? You said over the last 2 or 3 months, after being cautious, you've sort of turned a little more positive, incrementally positive in the market.
So pharma is one space where we think it's a good time to accumulate. I think IT services, we are getting, we are already underweight, but our view is that pharma presents a better risk reward compared to IT services. Maybe there might be a pop-up in IT services once the tariff issue is sorted out and some good comments on H1B or positive comments on H1B comes in. But volume growth guided by the large IT services companies 4-5%. Pharma even now growing at 12-15%. P multiples are similar. Size of opportunity is much larger from these levels for Indian pharma companies. So I think it's a mix of pharma, some domestic, some, obviously.
But generics, the CDMO,
I think you have to basically do stock specific, because every company has bits and pieces of everything. Just because someone is in CDMO, you give 50p multiple, and someone is in some other segment.
So which are the stocks that you have?
That's all in the portfolio, unfortunately.
One of his top bets, I think, is Jubilant Pharma. You guys have been.
Yeah, we have been positive for a long time. Very in the portfolio.
And Indigene is something I think you recently purchased.
Yeah, that's a part. I have colleagues also who manage funds. So,
Sunil, we'll talk about more sectors and all. But one thing I want to ask you, for the benefit of the viewers as well. What has been the most satisfying decision for you this year? I know one could be that you're going to launch the mutual fund now. So congratulations on that. But
thank you.
From a either you've avoided and that worked for you, or you've bought and that worked for you. Something which can be a bit of an interest for the viewer.
No, so mutual fund obviously is satisfying, but it is also sometimes you feel, array, kyun kiya? Because it's going to lead to more work.
More work and more.
But it's fine. We have a lot of investors.
You've always loved to be a public manager,
give us
right?
50 lakh and 1 crore who would like to be it. So let us see. I think
you have that still ambition of doing the same what you did in Reliance Mutual Fund, from say 1 crore to some 100 crore.
Ambition is to manage money and invest till physically and mentally fit in whatever form. So I think this is also a good form.
What's the target for your team?
We don't actually have target. Our target is that if we do well for the investors, then every target will be surpassed. So when I started Abacus in 2018, not in the wildest dream we thought we would be $1 billion.
Yeah.
Now we are almost 5 billion. So targets are a function of the love and support you get, and love and support you get
only because of
by being good, fine.
Yeah,
but
absolutely.
Also,
absolutely.
So I think in terms of satisfaction, by nature, unfortunately, we are not very easily satisfied. So you always keep on figuring out why we missed. Like capital market plays, we could have had significant higher exposure. I'm just giving you a perspective. I think new age companies, I would say at the back of the mind, you feel that you could have done more, because the view was quite positive. Unfortunately, or whatever, our philosophy is that we don't invest in loss-making companies and we stick to it.
Okay.
But somewhere our spendings are changing. So, I always tell that, what we were spending on 10 years back, what we were spending on 5 years back, what we are spending today, and what we will be spending on 5-10 years back is an indication of how the economy is moving and which companies and stocks will do well. So we've started doing a lot of work. I think a little bit of conservativeness helps, but in some cases, conservativeness also leads to misses
out. Yeah.
You know, so it's fine. You know, I think.
Just stay on. We need to slip into a mandatory break, but it's been a fascinating conversation. We'll come back for more.
Okay, welcome back. You're with us here on Editors Roundtable. We're in conversation with Sunil Singhania of Abacus. Sunil, thanks for waiting.
Thank you.
We're talking, I mean, it's a rich conversation with so much, sectoral views, what you like, what you don't like, hits, misses, etc. A lot of the focus now is on these new age kind of themes, and it's all obviously coming from the US and what's happening there, which is AI, and one allied kind of thing is the physical infrastructure, which is data centers,
right,
etc., etc. I mean, just wanted your thoughts first, and then are there any plays that you like, or how to approach it?
No, so I think, Prashant, obviously things evolve. Human beings evolve, and we have evolved. So many things which we did not even think about 10, 20 years back, I think they have become a way of life for us. And there is nothing to take away. And I would say that all these themes have strong legs to go. Unfortunately, in India right now, other than these platform companies which we have, which are more services oriented, we don't have too many direct plays. Obviously, some companies on the data center infrastructure side and all are trying, and they're doing also well, but these are still smaller companies or ancillary companies.
Right.
But it will evolve. On the AI space, I don't see any clear opportunity. Now, we can all say even I use AI for my research, but I am not an AI-focused AMC. I'm just giving you a perspective. So every company will use AI. It will evolve. I think right now one should not just jump into anything just because it seems to be an AI play. But I think on the new age technology companies, as I said, we are very conservative, so we don't invest in loss-making companies. But the good thing is that most entrepreneurs are now clear that ultimately they have to build businesses to make profits, not only look at market cap. Because if there are no profits at market cap, it's transient, it might just disappear. And good thing is that many companies now have positive unit economics. What it means is that they don't need capital to survive. If they get capital, they will grow. But for survival, capital is not needed. So the chances of them going belly up have reduced quite significantly. And our habits have also increased. I was just reading the number of parcels which have been delivered in this 1 week, 10 days, and the number of orders which this Amazon sale or some Flipkart sale has generated, or even, the number of transactions which Paytm processes or UPI does or something. I think they are all crazy and they're only going to increase. I would say a lot of these capital market plays are also technically platform companies.
Absolutely.
So that segment right now has, I would say, more clearer opportunities. Maybe data center, hardware side, there are some opportunities. AI space is still nascent, at least on the listed space.
And on the capital markets, which segment do you think, is it, or you have a bit of, the way to do it is to have a...
Unfortunately, we were very early investor in the listed exchange, and we got out early because we made a lot of money and we never thought it will grow. But see, every segment has niches. So exchanges, there is an entry barrier, obviously. Depository, there is an entry barrier. There are only 2 depository. RTAs, there are only 2 significant RTAs. So there is an entry barrier. I think wealth management companies, more are coming. But those who already have created asset bases, asset management companies, those who have already created asset bases, phenomenal runway. You know, we are ourselves an asset management company, and you can see it. Particularly, you know, this is the only business. बोलते हैं ना, double engine का growth है. Your assets go up because of fresh flows and also because of appreciation of the existing assets. So without, you know, this is the only sector which visibly can grow 20-25% for the next 10 years.
Yeah.
Without any fresh need of capital.
Yeah. And non-linear. I mean, the same assets can grow, but the team has to. I mean, there's no real.
It might be a little bit volatile. Like last year, the asset growth might be slower because on this returns growth has not contributed as much. But I think this is a great.
And you're comfortable with the valuations for the companies
so some
right now?
companies, there is still potential. But see, valuations, actually, most of these companies have doubled last 6-8 months.
Yeah.
So the market gave us an opportunity. It's not that it didn't give us an opportunity. Maybe it might give some opportunity again. So either there might be some time correction or the growth rates might surprise us on the upside. So if markets start to do well and you start to see 12-15% returns, then that growth will automatically increase because you'll have more flows also coming in and this also adding. I would say this is a good allocation sector which will not give you stress. And it can surprise on the upside.
Cyril, what about real estate? Because this year was a bit tough. You know, I could see even something like Godrej Properties is down 30% from the peak this year. Most of the real estate names are down 20, 30, 40%. Generally, you're comfortable with that space, given that there is RERA now, given there is the balance sheets are quite strong now?
Actually, we have very small exposure to that space.
Okay.
And that also is, frankly, trying to just play on the luxury consumption side, I'll be very honest. Because none of the real estate companies or most of them don't qualify in our ROC framework.
Yeah.
But what has happened, Nimesh, is that obviously real estate had a great run. But now we have reached a point where price appreciation looks very tough. And obviously a lot of these companies had older land bank or developmental rights. So the margin on that was significant.
Yeah.
Because you had old raw material and you're selling at current price.
Yeah.
Now you're buying at current raw material prices and you're selling at the current price. And prices don't seem to be going up. The other thing is supply is increased dramatically. Because every building in Mumbai wants to redevelop.
Redevelop, yeah.
Every, small, big, large, Malad, Kandivali, Andheri, Bandra, Malabar Hill, Walkeshwar, everyone wants to.
And there will be a big supply from Dharavi as well, right? As in when Dharavi gets developed.
So I think in the very near term, ready apartments, there is still a problem. But in the next 2-3 years, when some of these projects start to see the light of the day and get constructed, I think you will have, I personally believe, 3-4 years of not too much of value growth. And I think the markets are maybe, taking that into consideration.
All right. We'll leave the conversation here. Thank you once again for joining us here in the studio. And season's greetings.
Happy Diwali to you and all the viewers
and the
of
Abacus family
CNBC-TV18.
also.
Thank you.
Thank you.
Well, thank you very much for watching this show. Wish you guys a very happy Dhanteras. We'll join you on Monday morning.
Special partner, Novama. Let's do it right. Presented by Standard Chartered.
Hello, welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Festive cheer on Dalal Street. Sensex and Nifty clocked the biggest weekly gains in 4 months, hitting their highest level in a year. Nifty Bank hits a record high even as mid-caps underperform. Gold prices on course for the biggest weekly gain since 2008. International prices crossed the $4,300 mark. Silver prices also rise as demand remains robust in India on the eve of Dhanteras. Analysts expect Reliance Industries to post a healthy second quarter growth, likely to be led by the oils to chemicals business, with Jio and retail chipping in. Commerce Minister Piyush Goyal rules out free trade agreements at any cost, saying those days are gone. Also calls out Indian industries for resisting minor import competition and terms it a weakness. U.S. Chamber of Commerce sues the Trump administration over the $100,000 fee imposed on H-1B visas. Industry body argues the fee violates immigration laws. Indian nationals account for 70% of H-1B visas. Hours before a scheduled meet with the Ukrainian president at the White House, Trump agrees to meet Putin in Hungary. Trump calls the phone call a productive one. Zelensky is likely to make the case for more missiles at the White House later today. Supreme Court refuses to restrain Natco Pharma from selling the generic version of Roche's muscular atrophy medicine. Dismisses the Swiss drug maker's plea. Natco Pharma can sell the medicine for below 16,000 rupees compared to Roche's imported price of 6 lakh rupees. India's food safety regulator bans the marketing of sugar-rich food products and beverages as oral rehydration solutions. Dr. Sivarajani Santosh breaks down on camera after winning an 8-year legal battle, resulting in the major regulatory change. Japan's Sumitomo has no plans to increase its stake in Yes Bank beyond the current 25% holding. Shares of Yes Bank decline after Reuters reports Sumitomo is focused on contributing to the bank without taking up an executive role. The Tejas light combat fighter jet manufactured by Hindustan Aeronautics in Nasik takes to the skies on its maiden flight. The aircraft will enter service after integration of weapons, radar and fire control systems. All right, let's start with the day's market action. Sensex and Nifty have hit one-year highs, with Nifty Bank also hitting record high. Sensex crossed the 84,000 mark intraday. Mid-cap index relatively underperformed. For the week, Dalal Street rose for the third straight week, with Sensex and Nifty rising nearly 2% each. Realty and FMCG gained the most amongst all sectors, with both indices up 3% each. Prashant Nair brings us all the market action.
Well, it was a week in which at least one of the two frontline indices hit a new all-time high. I'm talking about, of course, the Nifty Bank. The Nifty is not very far behind, a couple of percentage points. Week on week, the Nifty was up about 1.7%. The Nifty Bank was up about 2%. Mid-cap index ending about 1/3% higher, and the small-cap index was down about 0.75%. As far as winners are concerned, I'll get straight to stocks, and this is all, of course, weekly numbers. Nestle was the top gainer. Actually, FMCG came into its own towards the end. Nestle, Asian Paints, of course, consumer name, but that was another one. Mahindra & Mahindra, Adani Ports, Bajaj Finance were some of the winners that we had. On the downside, tech had a decent week the week before, but of course, this week sold off. Infosys, Wipro, TCS were the three big cuts that we had. Big, relatively speaking, but the three top losers as far as Nifty goes. In the broader markets, lots of names, and I'll of course start with what was up. Whirlpool, big gains on Friday, and for the week it tallied about 19%. Adani Power was up 11% for the week. MapMy India was up about 9%. Angel One ending about 8.5% higher. There was Naveen Fluorine 8%, Persistent 7.5%, ICICI Lombard, of course, it was a one-day wonder after the results, 7.5% there. MCX continues its sort of fantastic journey, 7%. Godrej Properties was up about 7% as well. On the downside, I mean, some stocks which sold off. Anantraj was down 11, but it's had a fabulous move. Chennai Petro sold off 10%. SW Solar was down 9%. There was Reliance Power, even after Friday's move higher, it was down about 8.5% for the week. Jindal Saw, Reddington, I mean, those are in the 6 to 7% loss zone. All in all, not a bad week. I mean, I think as we trade through this festive period, the big expectation, of course, is, and I think justly so, that some kind of cooling off will happen with regards to the tiff with the US in terms of trade. And I guess, I mean, that's the last thing which is remaining after all the tax cuts, rate cuts, and everything else which has been done. So will we see something on that front over the next couple of days? I think that remains the big news, big story. If it does happen, will be a perfect Diwali gift. Back to you.
Right. Thank you, Prashant, for that. Well, the bull run for precious metals continues heading into the Diwali week. Gold prices hit yet another all-time high, soaring past the $4,300 mark. The yellow metal is headed for its biggest weekly gain since December 2008. Silver also followed suit to hit a record high of $54. The metal has gained nearly 90% so far in 2025. Commerce Minister Piyush Goyal has ruled out free trade agreements made at any cost. While speaking at ASSOCHAM, Goyal said that the days of desperate FTAs that would put India at a disadvantage are long gone. He added that India will not negotiate from a position of weakness. He also expressed disappointment at some Indian industries for resisting global competition. When quizzed by business leaders, Goyal declined to discuss ongoing trade negotiations between India and the US.
Gone are the days when India would, for example, since you mentioned free trade agreements, negotiate from a position of weakness. Gone are the days where we would land up doing imbalanced free trade agreements, not really recognizing our own strength, but being in a desperation to do an agreement at any cost, often giving up or ceding more than we get in return.
Right, so this is the latest. Let's talk about more international news coming in. Russian Defense Ministry has said that its forces have carried out a massive overnight strike on Ukrainian gas infrastructure. This infrastructure, which supports Kiev's military. Ukrainian President Zelensky claimed that Russia also launched a barrage of more than 300 drones and 37 missiles in that attack. Ukraine retaliated and struck Russia's Saratov oil refinery overnight. And speaking of President Zelensky, the Ukrainian president will visit the White House today for a crucial meeting with US President Donald Trump. The two leaders are expected to talk about the possible supply of Tomahawk cruise missiles to Ukraine. And speaking of Trump, the US president has said that he plans to meet Russian President Putin in Budapest. This decision was taken after both leaders had a very productive call. In a post on Truth Social, Trump said, and I quote, "President Putin and I will then meet in an agreed-upon location, Budapest, Hungary, to see if we can bring this inglorious war between Russia and Ukraine to an end." End of quote. This comes after Trump said he was disappointed in Putin just a few days earlier. The U.S. Chamber of Commerce is suing the Trump administration for imposing a $100,000 one-time fee on new H-1B visa applications. Now, the chamber has claimed that this fee is unlawful and will cause significant harm to U.S. businesses. In the lawsuit, the chamber also sought a declaration that President Donald Trump overstepped executive powers by ordering the new fee. The complaint also asked the court to block federal agencies from enforcing the order. The White House responded to the suit by calling the fee lawful and a necessary initial incremental step towards necessary reforms. Indian IT companies have said that the H-1B visa hike will cause minimal disruption. Shares of Oracle rose 3% after the company's optimistic growth outlook and a confirmed cloud deal with Meta. Oracle sees its total revenue growing to $225 billion by 2030, $166 billion from its cloud infrastructure business alone. The tech giant has also forecast revenue from artificial intelligence-powered database to jump eightfold to $20 billion in 5 years. Shares of Yes Bank fell sharply in trade. This after a Reuters report suggested that Sumitomo Mitsui Banking Corporation said that it has no immediate plans to raise its stake in Yes Bank beyond 24.99%. The company's India head said that Japanese lender plans to scale up its India non-bank finance company's business. Now, shares of Hyderabad-based Natco Pharma surged in trade today. This after Supreme Court rejected a plea filed by Swiss pharma giant Roche, which challenged Delhi High Court order on rollout of the generic version of this particular medicine that we are talking about. The drug is used, we're talking about the generic version of Risdiplam. The drug is used to treat spinal muscular atrophy. Ashmit Kumar is here with more on this. Ashmit.
Well, big win coming in for Natco Pharma. The Supreme Court allowing Natco to continue with production and sale of generic version of Risdiplam and dismissing Roche's application against them. Now, here are the facts of the case. The two companies, Roche and Natco, have been locked in a bitter dispute before the Delhi High Court on the patent of this drug, Risdiplam. Roche's version costs 6 lakh rupees a bottle. Natco's generic version costs only 16,000 rupees a bottle. That is what is at the core of this entire dispute. The Delhi High Court had granted an interim order allowing Natco for production and sale, and that is what was challenged by Roche before the Supreme Court. The Supreme Court, however, today, brief hearing after that, clarifying that it sees no reason to interfere with the Delhi High Court order. It will not come in the way of Natco going ahead with production and sale of Risdiplam. Also going on to say that it will not even restrict exports. So at this point, no restriction, no injunction on Natco Pharma on production and sale and exports of Risdiplam, and this coming as a setback. But the case is not over. This is only on the limited issue of the interim prayer, of the interim relief that has been granted to Natco Pharma. The broader dispute goes back to the Delhi High Court. The two companies will be arguing it out. The Supreme Court has called for expeditious hearing in this matter and an expeditious decision in this case. For now, relief coming in for Natco Pharma.
Right, thank you, Ashmit, for that. India's food safety regulator has banned the marketing of sugar-rich food products and beverages as oral rehydration solutions. Longtime activist of the cause, Dr. Shivranjani Santosh, broke down on camera after winning the 8-year legal battle resulting in the major regulatory change. Shilpa Ranipeta is here with more details. Shilpa.
Well, you know, if you've been buying ORS from a pharmacy when you're dehydrated or down with diarrhea, the FSSAI's latest directive is an important one. Now, India's food regulator has now banned the use of the term ORS on any food or beverage label, even if it is a part of just the brand name or a trademark. Now, this because several Tetra Paks sold over the counter as ORS or ORSL don't actually meet the WHO formulation standards. Now, in its order, FSSAI says that using ORS on a fruit-based, non-carbonated or even ready-to-drink beverage, even with a prefix or suffix, violates the Food Safety and Standards Act, and such labeling, it says, is false, deceptive and misleading to consumers. Now, the regulator has also withdrawn its earlier 2024 order that had allowed companies to use the word ORS in its trademark if they added a disclaimer saying that the product was not WHO recommended. Now, this move follows an 8-year legal battle launched by Hyderabad-based pediatrician Dr. Shivranjani Santosh, who in 2022 had filed a PIL before the Telangana High Court, and she had challenged the sale of beverages branded as ORS but not meeting the WHO formulation standards, warning that such drinks could worsen dehydration instead of actually treating it. Now, the World Health Organization's formula for oral rehydration solutions is very precise. It specifies the exact amounts of sodium, potassium chloride, citrate, glucose needed to rehydrate the body effectively. But many so-called ORS or electrolyte drinks in India that are sold over the counter don't actually match this composition. Now, in India currently, brands that sell ORS or ORS labeled packs include Electrol, Cipla Health, ORSL, all of these. Now, in response to CNBC-TV18's query, a Cipla Health spokesperson clarified that Prolite ORS, which is their brand, is a WHO recommended solution, and it also welcomed FSSAI's move, saying that it will bring greater transparency to the market. Now, with the new directive in force, companies will have to relabel or rename all the products unless they meet the WHO standards. But for us consumers, it is important that we looked for the WHO-approved ORS seal before buying any such product over the counter. Now, this was the reaction from the doctor who led the 8-year-long battle. Listen in.
We have won it.
The newspaper reported the 1410 order. That wasn't clear, and it said ORS can be used, but they've given a clarification today, and we have on it. They can not only not use ORS, they cannot sell it from today, right now from today. No misleading label with ORS can be sold. We have won the battle.
All right, on that note, time for a short break. Coming up next, a Tejas light combat fighter jet manufactured by Hindustan Aeronautics in Nasik takes to the skies on its maiden flight. More details when we return. Welcome back. Here's a CNBC-TV18 exclusive. The race to acquire stake in Axis Capital is heating up. Sources have told CNBC-TV18 that Kedara Capital and Blackstone have submitted bids to acquire 20% stake in the company. Rachna Dhanrajani joins us now with the details. Rachna, what are your sources telling you?
Well, it is actually Axis Finance, Archana, and sources tell us that CNBC-TV18 that Kedara Capital and Blackstone have submitted bids to acquire 20% stake in Axis Finance, the non-banking finance arm of Axis Bank. There's a strategic player also said to be in the race. Now, the proposed transaction has been scaled down from an earlier plan of selling up to 50% for $800 million to $1 billion to now about 20% for roughly $350 to $400 million. Now, Axis Finance has been drawing strong investor interest thanks to its performance. The company operates across 5 key segments: corporate loans, real estate funding, collateralized lending, MSME and retail finance. As of March 2025, Axis Finance reported a profit after tax of 76 crore rupees, that is up 11% year on year, with assets under finance of close to 40,000 crore rupees. overall contributing 38% to Axis Bank's total subsidiary earnings. Its AUM also grew by 22%. The loan book expanded at 31% CAGR between FY22 and FY25, and asset quality remained healthy at net NPAs with a 0.37%. Now, we saw Axis Bank's earnings day before yesterday. So in the earnings call, the management said Axis Finance could be classified as an upper layer NBFC under the RBI's scale-based regulatory framework in the future. So Axis Bank also reiterated that any decision on a stake sale or IPO of Axis Finance will be guided by its capital requirements and subject to RBI's final decision. In the meantime, we did write to Blackstone, Kedara and Axis, but haven't received a response yet.
All right, thank you, Rachna, for that update. Shifting focus now, Bajaj Auto's Managing Director Rajiv Bajaj said the company expects the final approval for the takeover of KTM AG next month. Speaking exclusively to CNBC-TV18, Bajaj also described how years of operational and strategic missteps led to KTM's financial troubles.
We are waiting now for the key approval of the Takeover Commission. We understand that this may be forthcoming in November. We were all taken by surprise, I must say. I think most of the industry was quite shocked at how rapidly, this thing developed. And my mind goes back almost 30 years to what my first management guru, Dr. John Wallace, told me, which was simply this, that the single biggest reason for corporate demise is corporate greed. And I have really witnessed this play out at KTM, unfortunately, over the last 12 months in particular.
The indigenous Tejas Mk1A fighter jet took to the skies for the first time today at HAL's Nasik facility. Defence Minister Rajnath Singh, who was present for the maiden flight, also unveiled HAL's newly established third production line for the indigenous fighter jets Mark 1A variant. My colleague Madiha Mujawar gets us more on the latest addition in India's defence arsenal.
A proud moment for Hindustan Aeronautics Limited. I'm at the Ozar Airport in Nashik, and next to me is the Tejas Mark 1A light combat aircraft. This is the first jet produced from HAL's Nashik facility. Remember, HAL has 3 production lines for the Tejas Mark 1A, 2 in Bengaluru and 1 in Nashik. So this Tejas Mark 1A LCA is the first jet produced in the Nashik facility, and earlier in the day it took off to the skies for a spectacular maiden flight today. It was escorted by the Sukhoi 30 and HTT 40 trainer aircraft. It had some spectacular, impressive maneuvers showcasing its power, its agility and cutting-edge technology in the presence of Defence Minister Rajnath Singh, top HAL officials and hundreds of employees in the audience witnessing the proud milestone in India's indigenous aviation journey. We have with us Group Captain Venu, who flew the Tejas Mark 1A a while back. Captain, thank you very much for speaking to CNBC TV18. How did you feel? How was your experience up there?
It's good. Very happy for the third line to come, start functioning. And this aeroplane is the first production out of Nasik. So with this coming on, we should be able to meet the numbers. That's why it is good. Like I told earlier, the Mark 1A is capable, more capable than the Mark 1. It brings new systems, new sensors and new weapons, apart from, obsolescence and other things being managed. So it's a very important milestone. Good, because you can see the aeroplane carries a IAF tail number. So practically it is, aircraft has already entered IAF, but we have to go through the formalities of completion of certification, their acceptance and those kind. Fly it is a pilot's dream. To operate it is also a pilot's dream. It's a beautiful machine, very capable systems and weapons. Yes, Rafale is in a different class altogether. We can't compare. It's a different aeroplane. But in terms of sensors, systems and capabilities, this is at par with anything else.
Indian Air Force currently has over 500 jets in its combat capability, in its combat fleet. This includes the Su-30, Rafale, the Mirage, MiG-29, Jaguar and the Mark 1. The MiG-29 fleet, after serving for 6 decades, was retired from the Indian Air Force just few days back. So the Indian Air Force is now looking to replenish its combat capabilities and is looking forward to induct the Mark 1A Tejas light combat aircraft. And it all depends on how soon HAL is able to fast track the deliveries. The CMD told CNBC-TV18 that they are expecting to deliver, they're expecting to hand over 10 Tejas Mark 1A light combat aircraft to the Indian Air Force in 2025. We will only have to see whether that timeline is met in 2025. In Nashik with cameraman Prashant Ghuge, this is Madiha Mujawar for CNBC TV18.
And with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC TV18.
Presented by Standard Chartered. Special partner, Novama. Let's do it right.
Hello and welcome. It's that time of the year again when lights, optimism and the spirit of renewal takes center stage. As investors look behind the candles and crackers to the year ahead, we are here to decode what lies beneath the sparkle of markets this Diwali. Joining us today are two of India's most respected market voices. Manish Chukani is a veteran investor, needs no introduction. Actually, both don't need any introduction. As I like to say, he's of course director at Enam Holdings. Madhu Khela is with us, veteran fund manager Of course, founder of MK Ventures. Again, needs little by way of an introduction. Together, we'll take stock of the year gone by, explore what the next somewhat could hold, and ask the question every investor, I think, is thinking about. Is this the time to stay the course, take profits if there are profits, and of course, or double down? Manish and Madhu, great to have both of you here. Thank you very much.
Thank you, Prashant. And a very happy Diwali to you, the entire team at CNBC and all your viewers.
Happy Diwali to you, Madhubhai. Happy Diwali to you.
Happy Diwali.
You know, I want to start not with stocks, but the hard stuff. Gold and silver is, I think, top of mind. Every day we are sort of seeing this dizzying move. It has been dizzying. Gold, $2,000 in 2020, almost $4,200. Silver has taken out this $50 mark, and it's been a dizzying rally. Manish, you've been talking about this move to hard assets, the dollar debasement kind of trade. But take stock of it from where we are, because what you do depends on what you've already done. So in that sense, what's your take?
So let me take 2 minutes to just give the background to how it plays out. That the world's always looked for something which is a store of value and a medium of exchange. And that's typically then centered around the US dollar ever since they broke what was the gold standard. What that has done is it's given the US the freedom to print money and effectively debase all other currencies and all other asset prices, leading to US now becoming 70% of global market cap. And they were at peak, I think, also 65-70% of global currency reserves. But every decade, this excess money printing has led to bubbles. So in the 70s, you had the Nifty 50 in the US, which then culminated in the rise of gold, silver, and oil in 1980. In the 80s, it went to Japan and Taiwan. Their markets went up 12 times. In the 90s, it went to NASDAQ. In 2000-2010 period, it was back to commodities and emerging markets, of which China was the center. 2010 to 20 went back to technology. And it got extended by the excess money printing which happened around COVID. And that led to also this money going into AI and stuff, which really has 10-15 year gestation. Great technology, but otherwise you would not have had that kind of money to pour into it. On that, when they started seizing the assets of the Russians and cut them off swift, I think the world woke up that we need an alternative to the dollar. And
they went back to the oldest.
And they went back to what they knew best. And remember, 2020 to 30 was also meant to be the changeover from tech to hard assets. So you got both the themes coming together and this rise of gold, silver, uranium, hard assets. So when you get parabolic rises, typically the market pauses for breath, like a stock market. Last year we were very high. The market went sideways. We paused for breath. It cannot go up continuously. And as Buffett says, gold is a fear trade. It's an insurance. It's not a dividend-paying cash flow asset. Equities is your hope trade. So the world is clearly divided. The equities is going with the AI boom, which at some point will climax out.
So for now,
but this hard asset theme is here to stay.
But pause. I mean,
yeah, I mean, when you see parabolic rises in 1 or 2 months, like silver has just gone parabolic, it has to pause, maybe correct a bit, but this bull market by no means
gold, by the way, going back in history, has corrected 30-40% at times. It has. By the way, I spoke with...
But just pause that thought, because people argue this in dollar terms. But because the rupee keeps collapsing, the Indians have never seen down years in gold.
Correct, obviously.
So that's why gold and real estate have been such favored assets for the average Indian.
William Buter, who was the global economist at Citi, the interview will air tomorrow. He wrote an article in the FT saying that central banks must sell all their gold now.
Great.
He thinks, well,
buy what?
He says the reserves should be a diversified set of things. It cannot be 25% in gold, which is where it is now.
How much is it?
It's just a controversial view. I'm just taking the opposite side for the sake of it.
Bring him on.
So you're saying a pause, maybe a bit of a correction.
Pullback will always happen, but it's a long-term bull market.
Adu.
So traditionally, I've been more positive, always been in equity, and that fundamental view has not changed. You can tactically use gold and silver as an asset allocation call, but I don't think someone like me can invest heavily and significant portion of my portfolio in gold and silver for a long run. And my premise is based on very fundamental thing that all the noise about this gold and silver price is all technical in nature. There's nothing fundamental about it, right? There's no real fundamental usage of gold or silver which can justify these prices. We are all talking these central banks are buying, dollar debasing, and I agree with Manish's point. But when I buy good companies, they their earning could go up. Like if I buy really good companies, their earning could double in 4 years, quadruple in 8 years. So effectively, I'm buying those companies much, much cheaper 8 years down the line. The same is not true for gold and silver. That is point number one. And point number two, right now, the rise looks, as a market participant, it looks very euphoric to me. अभी टैक्सी वाला, पान वाला सब gold, silver लेने का advice कर रहे हैं. So I would suggest, if you are buying incremental gold, unless you are buying it for usage, for saving, that you should refrain.
Actually, we've spoken to gold companies. They said that volumes are down 20%.
Yeah.
Value is up 20% because of...
And I'll make one important point here. Why are we feeling so good about all this, Prashant? COVID low, our market cap had fallen to 1.2 trillion. Today it is $5.5 trillion. Gold has literally tripled from COVID lows. More than tripled, right? And analysts used to expect our gold reserves are $1.5 trillion 5 years back. So but just by definition, it should be close to $4 to $5 trillion, including all the gold, which is
the temples and everything.
Yeah, a temple, hidden, not hidden, right? Correct. Just imagine the wealth effect which India is going through. That is the bigger point. That's the bigger picture everyone is missing. Let's say $3 trillion in gold and $4 trillion in stock market. 85% of all stock market gains are domestic. Only 15% owned by foreigners.
Correct.
100% of all gains in gold are domestic. But that
gain, it is, wealth effect is very powerful effect, but you can't monetize that wealth effect in that sense.
Prashant, you are feeling good. That's why you're buying a 700 crore apartment, right?
Maybe not
700 crore. Well done, Madhu.
No, I'm just saying the people are buying. This all over the place. I'm just saying this wealth effect
that's
is
a powerful one.
Is a very powerful one in an economy which is 4 trillion. So literally created $7 trillion of incremental wealth in last 5 years.
100%. Let me segue from that point. You say it's a fear trade. Maybe the fear now, hopefully the fear goes down as well, right? Which is one of the factors there. From our perspective is this India-US trade thing, which went completely the opposite way than all of us expected. Voices and generally just the tone, tenor, etc. suggest that maybe it's on the mend. Would you agree, Madhu?
I agree. That's what I'm saying. And this is how the markets make kind of a, euphoric rises. That it has to get coupled with this rise. It has to stall somewhere. It has to get corrected with some fundamental thing happening. And this could be the trigger that, the 5 wars have stopped. You have to give credit to Trump. That, literally 5 wars have literally stopped, right? And let's say if US-China trade deal happens and US-India trade deal happens, then a lot of uncertainty will go away. So that fear trade which was going on, at least in gold, specifically the panic buying, I would say, by central banks, that could temporarily stop.
Yeah, maybe along with the Bitcoin as well. That's another story. But
but on the India, all these guys haven't held that physical gold. They've all got in a short squeeze. What he's saying is right. It's all technical squeezes which play out in parabolic rise.
But India-US money, more and more looks like something is going to get done soon.
See, think of India. All the tailwinds now are behind you. Last year we were worried about valuations. We've gone sideways for a year, so we're generally better off. The government's given you tax cuts. They've given you GST cuts.
2.5 lakh crores.
The central bank
budget and GST. 2.5 lakh crores.
Then central bank's given you interest rate cuts, and the regulators actually encouraging banks to go out and give more credit. So you couldn't have better conditions for business to take risks. The government's encouraging you with PLIs or what can we do to help you. So the conditions are actually good this year, unlike last year.
One thing that still remains a bit of a, that's what I hear from...
When you said it, even last time, I remember we said our exports were 80 billion, 40 billion were excluded from it. 40 billion largely came down to textiles and aquaculture and so on.
Correct.
So the sentimental effect is great. But the way the erratic policies keep coming and going, if you're an industrialist, do you take a 10-year bet saying I put up a plant? Because if it's beyond this term, then you take a bet. But at the end of this term, what if the next guy comes and says, I want to overturn it? So that animal spirit, as the RBI governor has also said, has been a bit missing. Because these policy uncertainties are what keeping us behind.
Do you think it'll come back with this thing happening
It will be much better. But we couldn't say when the deal didn't happen that we are not so affected and now suddenly say, wow, it's fantastic. It is a positive, but this market anyway is going to take a lot of these positives and start climbing.
The perception, I think what the market was actually worried about, including me, if the perception that India
Can
and
get
US
worse.
are not getting along, and then things could get much worse. 40% of all FI flows have come from the US. Let's not forget, right? And it is one thing is this: $40 billion is only goods export. But just imagine the services dependency on. So US is a very important partner.
I'll give you
and
one
we need
more.
to be friendly.
Absolutely, for sure, you want to be friends with everyone. But I'll give you another interesting way to look at it. The US is close to $65-70 trillion market cap, and it's held 30% by foreigners. It's almost $20 trillion of foreign ownership of US markets. Every fund manager now in the world knows that you're near the end of the boom over there. That money has to rotate out. The biggest enemy of US is China. Money went to China. The Chinese market is up 40% because when valuations
money went this year. I mean, actually, last couple of years,
but this is when the war was at the peak with China. So we give too much importance to people can be patriotic and they can be investors and they need not be the same thing.
Under Biden, I remember having conversations with foreign investors saying that, well, when Chinese funds, etc., come to pitch, they've said it on air. We just told them, sorry, boss.
But it changed.
Cannot. But it changed.
It changed. That's what I'm saying.
And it will change big time.
And when you see a profit opportunity, same way 18 months ago, people would say China is uninvestable, it has no terminal value. How come the same chaps have gone and bought it?
Madhu, you have a directional view in terms of if this US-India thing happens, let's just bring it down to the level of sectors where it will show up the most. What's your sense?
So I would say what has proven even in the last year, while I would like to see two things really matter. One, are you able to catch some real long-term theme? Like we discussed 3-4 years back, this energy transition. And you see how much value creation has happened.
On the back of this, where do you think? On the
energy transition thing, right? So I would pick up the larger trend which is there is the usage of AI.
Okay.
And really people working on scale and cost using AI. I think it will make dramatic and very significant impact on companies which are able to adopt this. And on companies which are not able to adopt this, it will be a Kodak moment for them.
True. Wow. That's a perfect Kodak moment to take a break also. Let me just, allow me to take a break. I'll come back and we'll start exactly on this point and we'll look at other sectors as well. So take that break. We continue this very interesting chat with both Madhu and Manish. Stay with us. Welcome back to this Diwali special. We are sitting down with Madhu Kela and Manish Chokani, and we are now, with the next 7 minutes, we're going to talk about where to bet on. I mean, we're not near term, but which are the bigger themes to focus on from here. Before we took that break, Madhu, you said AI.
Yeah. So the AI usage is here. And I would think that this is very early stage of the usage, at least in India. And clearly not reflected anywhere in the market. On a $5.5 trillion, I can't even count $2 billion worth of real AI direct companies. While, in the US, that number could be 15, 20, 25%. Or in China, that number could be similar.
अगर आपको नहीं मिला तो फिर
नहीं ना, listed है नहीं ना.
Listed नहीं, unlisted.
Unlisted में खोज रहे हैं.
We both agree on AI being powerful. And like when the internet came, the beneficiaries were people who used it.
Yeah.
Now, when you think of AI, you want organized data sets for the AI to be unleashed. Who has the most organized data sets? We were the beneficiaries in internet as the BFSI. The same thing applies today in AI. We create analyst reports now in literally 10-15 minutes with use of AI. Imagine what it's doing to the banking sector. Think of productivity gains, which you'll get both in capital marketplace as well as in banking as well as in insurance. It's the biggest play of India, of AI, is actually our financial space. In any case, it's playing into this thematically, that financials is poised to lead this market going forward from here. Like I've given you in our last interaction, that SBI beats Reliance in profits soon. ICICI beats TCS in profits. Axis Bank beats Infosys in profit. It's a seminal change which is going on and people haven't realized. And the capital market theme is a secular structural trend.
So you're saying
and
there is
even for private equity, like we spoke before the show, you have ways to access private equity deals also with some of the best. His nephew runs a fantastic fund.
Right, absolutely. Are there those plays in the private market, Madhu?
There are those plays which are coming up.
Not listed yet, but they are there.
There are those plays which are coming up. But we are more focused on usage of AI.
Which is application layer.
Which is application layer. I think that is where the real money will be made. Prashant, I'll just take 30 seconds. To give you an example, like today, all legal work is still not AI-led. Now tell me, there are hundreds of judgments which would have happened on any subject in last 100 years.
Right.
Just imagine a situation. Someone will create it in 3 years down the line. If there was a layer, how powerful it will be. And the lawyers who are not using it, how
No, it's happening. I
inefficient.
had a conversation about this with Cyril Schroff, and he said, well, they are doing some
If
real
we
work.
put it in the
And I
judiciary,
can tell you, already in America, it is already happening. There is already a company which has been able to do it in America already.
if they legislate this for the judiciary to give you judgments, those 6 million or 60 million cases stuck in the High Court, then you be bullish on India.
One is 10 साल
Because
में
that
हो
is real ease of doing business.
5-10 साल में हो ही गए.
That's where we are stuck.
If not the judgment, but at least judges will start using it to get a proper summary of it.
Absolutely.
जो आप बोल रहे थे 13 मिनट में analyst report. I mean, if you're able to sort of summarize cases which are going
It's
out.
crazy, boss. I'm saying we are seeing the gains of productivity.
The other
already.
one with AI, it's related, is basically the physical infrastructure, which is data centers in India.
Absolutely.
You've invested on the private side, at least, with many of these
Sure,
sort of
absolutely.
things which go into the data center.
Absolutely. Data center and energy both.
Okay.
Because that is what is like an indirect way to play. Because there is so much data that you will definitely need. And according to me, the scale and the size of the growth in all of this will surprise many optimists as well.
Okay.
That's where I can see things going.
On the listed space, there are a bunch of them, but you think
Not too many, not too many. And one or two which are there, direct plays are not the ones
where you think
where
you are kind of at least.
Now I am saying, what has played out for us is you identify a large theme, right? And you start early, even if you have to wait. I'm saying in a fantastic theme, even if you make a mediocre investment, your gains will be phenomenal. If you make an exceptional investment in an industry which is tailwind, I have come out very frustrated investing in best companies.
Where the tailwind is missing.
Where the tailwind is missing. Or rather, there is headwind.
Correct. Manish and Madhu, from the AI is one theme, and I think it's that direction, as you're saying, it's in a way positional chess. I mean, directionally it is going to grow. So you got to find things which you said it's capital markets, financials, which perhaps anyway have a tailwind, and this kind of bolsters the argument. And you spoke about data centers and power, etc., as themes. And of course, on the private side, many application layer companies where you're making,
which are coming up.
What else, as you look ahead into 2026, both of you?
I would
which
say
are these themes where you should look for ideas?
Prashant, I would say, let's say broad market. Last year, people are crying. You yourself gave me data. 30% of the companies out of 500 still made 30% return. Because there are opportunities on bottom-up basis. India is happening, my friend. All this capital market money which is being is raised. People are not going to put in fixed deposit. This is money is being raised for productive purposes. And I am specifically very bullish on some of the smaller companies, even the companies which are getting listed on the SME exchange. 100, 200, 300 crore market cap. These entrepreneurs are coming from tier 3, tier 4, tier 5 cities, exceptionally hungry. They have not seen this kind of capital in their lifetime. So there will be lots of winners from here. So Prashant, it's not about calling the broad market. It is actually betting on India's entrepreneurship on a bottom-up basis. That is the way to make money.
Are you going small in that sense now?
We are objective. It's not we are only looking small. I am saying the opportunity is bottom-up. And as long as the market doesn't fall, if I can make a case that market will fall 20%, then this bottom-up will not work. Then everything else will fall. I am not making that case. I think market remains sideways. The view is more marginally positive on the market than on negative, because Manish already spoke about it. There are a lot of things which were like a headwind has already turned like a tailwind for the market. So earning growth will be higher, liquidity is there, RBI has cut rate, globally things looking like settling down, and predictions for earning growth is maybe at the bottom. Things will improve from here for the market as a whole. Now within that, if you call the market, I am saying you bet on bottom-up ideas rather than betting on Nifty. That's
100%. Both without saying, but my point in terms of themes, as you identified, AI is a theme, energy transition was one. Names like transformers, rectifiers, etc. have made a lot of. I mean, there are many actually. Alcoholic beverages. I mean,
so that I would say I would if you tell me one sector, it will be financial sector, where I think the overall basis stocks have not performed to their fullest potential, and we are already seeing kind of recovery take place. And there is way to, one is you can play in an asset-light mode, which are capital market related plays, and the second you can even play banks.
Capital market and banks, and this can sort of squares with what
I'll
you're
give
saying.
you a most unpopular one.
Yes.
Finance Minister indicated that after all her tax work is done, she wants to turn her attention to public sector.
Okay.
They've already said, for example, they may do consolidation of some of the PSU banks. This bull market started originally with PSUs in defense and railways and all. This bull market by no means is over.
Right.
I think the PSUs took a backseat. If they privatize, for example, or sell big stakes, why are they holding on to NALCO or SAIL and the others? So PSUs generally are beaten down, neglected, other than the defense and all, which are of course doing fantastically well. Maybe also an interesting place to look for an asymmetrical bet.
Just PSU banks.
So it could be banks, it could be some of these metal names, which is again playing into this hard assets theme that, like, I'm just surprised people haven't realized Vedanta will make more than $1 billion on silver, which is a byproduct. So the amount of earnings coming through in metal companies is unbelievable what is happening. The highest rate of change this year in terms of earnings will come in Tata Steel and Jindal, for example. I'm not suggesting the stock, but the thematically, the way it happened in 2000-2010 period, the move into hard assets and the earnings that can come out from there can be very dramatic.
And you have, I mean, you and Inam, the group has been positioned with metals, JSW, etc.
And so, see, like, again, that gold and all is, like he rightly says, it's part of your asset allocation. It's your insurance policy. It's not an asset.
Earnings kicker is
but earnings is fun is from people who make money out of hard assets. It includes manufacturing as well, which is a big theme for India.
If I can give 30 seconds, before we close. I think I see a lot of people are nervous because money is not being made in the last 12 months. You know, on a contrary, developed markets have done well, silver has done well, gold has done well. But markets have proven that people who have stayed invested through last 20-25 years are the ones which are smiling. So I don't think people should deter away from equities just because last 6-12 months performance have been muted.
Manish and Madhu, thank you very much for joining us.
Thank you.
Thank you.
Shubh Deepavali.
Special partner, Novama. Let's do it right. Co-powered by SBI. Best है सबको पता है.
Hello and welcome. I'm Parikshit Luthra. Bajaj Auto is all set to take over Austrian motorcycle brand KTM in November last year after encountering financial troubles. KTM had applied for legal restructuring and self-administration. Bajaj Auto, which owns just under 50% stake in KTM, proposed an 800 million euro rescue plan. Bajaj has already invested 200 million euros and has secured a 566 million euro loan support. European Commission's approval for the KTM deal appears imminent. Joining us now to discuss the road ahead is the Managing Director of Bajaj Auto, Rajiv Bajaj. Rajiv Bajaj, thank you very much for joining us on the program today. Let me begin by asking you about the timeline for permissions and approvals from the European Commission. What are you expecting?
Thank you, Parikshit. So exactly in line with what you said, as you know, our investment went in on 23rd of May, and a series of approvals was required after that. As we stand, all the approvals that are to come on account of mergers and acquisitions are already in. Those that were to come in terms of foreign investment approvals, I believe, are also through. We are waiting now for the key approval of the Takeover Commission. We understand that this may be forthcoming in November. We hope it will be positive, and which means that in that case, after a almost 18-year association, in which Bajaj has been a minority partner, we would become a 76% shareholder in KTM AG, and well, in PMEG actually, and from being an observer, we would take charge.
What, in your view, led to such a sudden and sharp downfall for the KTM brand? This was a pillar of Bajaj Auto's premiumization strategy. What, according to you, led to such severe financial constraints?
Well, you know, Parikshit, yeah, we were all taken by surprise, I must say. I think most of the industry was quite shocked at how rapidly, this thing developed. And my mind goes back almost 30 years to what my first management guru, Dr. John Wallace, told me, which was simply this, that the single biggest reason for corporate demise is corporate greed. You know, and I have really witnessed this play out at KTM, unfortunately, over the last 12 months in particular. I would say broadly three types of greed. First, operational greed, best exemplified by what happened in the last couple of years when KTM Austria kept producing and overproducing, even though the spike of demand that had come about post-COVID had calmed down. And as we all know, with the result that KTM distributors and dealers worldwide were carrying over a year's worth of inventory, which was just preposterous, frankly speaking. And then there was the, I would call it as a strategic greed. Companies often get into businesses that they have no business getting into. In the case of KTM Austria, the best example of that hurt them the most was getting into the bicycle business, specifically the electric bicycle business. When you have no synergy in any of your major operational areas, such as R&D or supply chain, or marketing, sales, and distribution, with such a business that may appear to be adjacent, but actually has no synergy with your core business, then really, it is irresponsible to venture into that space. This was the, second greed, the strategic greed of getting into a new area that was actually not synergistic. And the two factors combined to take KTM to insolvency in a period of months. Now, I know you might say that, but Bajaj was part of it, right. And I would concede that yes, we were also part of what went wrong. But I would only submit that as a minority partner, we could not prevent this, and I can share with you today that we did our best to resist it. So much so that I think it led eventually to the third kind of greed, which, if I may call it, almost a governance greed, where certain decisions like this were either taken, without our knowledge, without our information, and sometimes without even following due process. So we are quite shocked at what has been revealed to us over the last 12 months. That we have got involved in this process. I must clarify, we are not yet in charge. We don't have takeover permission yet, but as an observer, this is what we have come to understand. And if I might summarize it, leaning on the words of my other management guru, Jack Trout, he would say, the stock market can become the temple of greed. And I think this is what happened here. In the pursuit of valuations, some of these options were pursued that should not have been pursued. And when you link, the stock market price to company performance and company performance to the remuneration of top management, this is how things can go horribly wrong.
And you had warned them about this, would you say?
Well, this is something that has happened over years. So from time to time, whenever we were aware of some of these issues, if I were to enumerate all the minor and major issues, we would be speaking for the next hour or two. We took it up. But, as a minority partner, there was only so much that we could do.
Okay. Now, when we speak about restructuring and management restructuring, are we going to see some changes, some major changes in KTM going forward? Would you begin with management restructuring?
Oh, yes, absolutely. This is a problem that is not caused by 98% or 99% of the KTM employees. This is a problem of the top management of KTM, the erstwhile top management of KTM. And that's why, quite frankly, most of them are gone. What we have now in place is a new team, a wonderful new team that I personally feel very confident about. The entire team is already in place, barring just one vacancy that will be filled in the coming months. And it's a very nice combination, I think, of some of the, if I may call them, our older colleagues who are still, very passionate about KTM, very committed to KTM, in areas like the product planning, in the R&D, in the legal department, etc. And then we have some wonderful, outstanding new colleagues led by our CFO, new CHRO, etc. So we have a great team in place, and I must make mention of the manner in which the Bajaj bench out of it. Yeah.
Absolutely. Now, just to ask you for an update on KTM sales in India, the GST impact on the KTM offtake, what are the exports that you're seeing from India right now, and what will be the US tariff impact according to you?
The short story would be that KTM India sales are growing very well. The domestic sale is up like 70% year on year. It is a combination of, I would say, half the credit goes to the excellent GST reduction move of the government, very well timed. And the other half goes to the introduction of the new products, particularly the new Duke 160, which is really flying off the shelves. So domestic sales of what we make in India is really at an all-time high. I think this month we will finish at the highest ever in our 18-year association. Exports also, I'm happy to say, have normalized. And you asked about the US in particular. And I'm happy to say that we believe US sales will continue uninterrupted in volume terms of the products that we supply out of India. Yes, we are hit by a 50% tariff, but that's the power of the Indian supply chain. Believe it or not, Parikshit, we have absorbed most of that 50% tariff. Some has been passed on to the consumer, a small percentage of that. And despite that, we will be exporting at an EBITDA that is higher than our blended corporate EBITDA. So that's the power of, the cost competitiveness of the Indian supply chain.
Last time we spoke, you had said that the European manufacturing is dead. Any further developments in terms of re-engineering the KTM supply chain, optimizing costs?
With that one interview, Parikshit, I am told you made me famous in all of Europe. I had so many people from the KTM ecosystem telling me that, in that interview, my counterpart Nick Bloor from Triumph said he's never received as many forwards of an interview link as he has of that one. And I find it very amusing because it was the erstwhile KTM management that has been presenting to us over the last 10 years, about how European manufacturing is dead, how KTM needs to move more and more production to India. and eventually we did move half the volume to India. They said, European work culture is dead. Wages are too high and working hours are too few. They showed us graphs comparing Europe, China, and India to that effect. Similarly, they said European politics is dead. Energy costs are so high, and as a result, all associated inflation is so high. They brought it to our notice that Triumph is now made entirely out of India and Thailand. Ducati now has a second plant in Thailand. BMW is moving to Thailand. So this is what I learned from the previous KTM management, and now when I echo the same sentiment, I was frankly taken a little aback at the kind of feelings it seemed to generate on the other side. But yes, I think restructuring the supply chain, moving more things to lower cost supplies in Europe, outside of Europe, is certainly the way forward.
Right. Mr. Bajaj, also, what is the reduction we're going to see in headcount and also overheads at KTM? Have you set some targets for the company?
Actually, you touched upon what is really low-hanging fruit out there. Again, from the outside, so far, what we observe is that there is an opportunity to reduce the overheads by more than 50%, and the overheads are enormous. And that covers R&D, that covers all marketing areas, including racing. That covers, obviously, all the operational areas, some of which we just touched upon. And of course, if I may call it, the general administration, including IT. So over a 50% reduction, which is a lot of money. In terms of headcount, the erstwhile and the kind of current management that's been there in place since last November has already brought it down from 6,000 to 4,000. People, which in their own estimate is still too much. But what I find in a way amusing again is that in this 4,000, only about 1,000 people are blue collar. 3,000 people are actually white collar. And that's really perplexing because it's actually the blue collar that make the motorcycles. And in that sense, if some more of the volume is moved out from Mattighofen to wherever it makes more sense, whether India or otherwise, the impact actually on the blue collar is going to be relatively benign. The issue is going to be with the white collar headcount, which is very, very expensive, as you know, and it brings back to me Mark Zuckerberg's words when he said, the problem is that we have managers managing managers, managing managers, managing managers, managing managers who manage the people who do the work. So I'm amazed at the kind of overhead, the management overhead of bureaucracy that we found in this otherwise excellent organization.
Right. What is the way forward for brand KTM now? Could you give us a sense of the global sales in 2025 and your outlook for 26?
I would say exactly what I said to you a few months back, Parikshit, that there's two fundamental jobs to be done. One is to reduce cost. And as a result of these things we spoke about, between the supply chain, the overheads, and the headcount, we are seeing the potential to perhaps take, 300 million or more out of the system. And the second big job we have to do is to restore the brand. And restoration of the brand must come with restoring the confidence of all stakeholders, most importantly our customers worldwide, but also our dealers, our suppliers, and of course our bankers and shareholders at large, all of whom have taken a 70% haircut for no fault of theirs. So we have to make good for that in the coming time with our performance. And what this means is basically going forward, we need a very clear alignment of all stakeholders to what we have to do in terms of technology, brand, product, production, marketing, sales, distribution. To paraphrase Tarantino, we will only make a great KTM when we are all making the same KTM. So we have to get on with our two fundamental jobs now great product and great customer experience.
My final question to you, any strategic partnerships likely for KTM? We believe there were some reports about BMW being interested as well.
Well, I can candidly share with you, yes, there were some discussions with BMW and with some others. Basically, everybody's backed off for now, I think, given all the uncertainty that's come in after Mr. Trump has come in. We remain open, of course, to a meaningful partnership. For the moment, I would only say this, that we have a great team in place. All the problems and solutions are quite clear to us. Hopefully, we will have a takeover commission approval next month. I think with that, Bajaj will be ready to race.
Welcome back. You're watching News Center. Indigo is betting big on international expansion. The airline has launched direct flights between Mumbai and Copenhagen in a bid to enter the Scandinavian market. CNBC-TV18's Shivani Bazaz takes stock of Indigo's aim to evolve from a domestic name to a globally connected airline.
Indigo is going the distance literally. After adding new long-haul routes to destinations like Manchester and Amsterdam, the carrier is now taking off for Copenhagen, marking its latest foray into Europe. I'm here at the Mumbai airport where the inaugural flight is just about to take off. This isn't just another launch, it's a big leap for Indigo as it looks to redefine affordable long-haul travel. The big question is, can a low-cost carrier make flying to Europe both comfortable and cost-effective? Let's find out.
With this, Indigo has entered the Scandinavian region. It's a strategic play aimed at eating into the market that has so far been dominated by European carriers.
We felt that the further you go away from India, the lower the market share is from Indian operators. So the opportunity to Europe, where 75% of all the flights are operated by European carriers and only 25% by Indian operators, we thought we should go to Europe and start to offer that proposition for our customers. So we started to Manchester, we started to Amsterdam, we were flying to Istanbul already, and today we have Copenhagen.
The journey will be on board Indigo's Boeing 787-9 Dreamliner on lease from North Atlantic Airways. The aircraft features a dual-class configuration with economy and the new Indigo Stretch, a business-style cabin, which is a major shift from the airline's traditional low-cost image. From hot meals to enhanced legroom to a quieter cabin, it's all about offering value and comfort for the aspirational Indian traveler. It's a strategy that has already been bearing fruit on domestic lines.
The aspirational India has multiple dimensions. We have introduced a premium product on the nation's busiest business routes. We start now to fly more and more international, including a premium product as this. And we see actually from the very first flights, it's resonating extremely well.
Copenhagen is now Indigo's fourth European destination after Istanbul, Manchester and Amsterdam. The decision to link to Copenhagen is not a whim. The route is already underserved and trade ties between Scandinavia and India are growing rapidly.
So many more in Sweden, Norway and others. They wanted to find a direct connection to southern and central part of India, and Bombay and Mumbai provides that gateway. We also know that many Danish companies are actually centered in Maharashtra and Tamil Nadu and Karnataka. So Mumbai provides the best connection to get to that part of India and also from beyond, from India and beyond. So I congratulate all the team of Indigo and the team of Copenhagen Airport.
Indigo says this is just the beginning of its plan for a larger global footprint. It will soon offer direct flights with its premium business class amenities to London and Athens and China as well. Indigo long-haul ambitions are no longer on the runway, they're well and truly airborne. In Copenhagen, Shivani Bajaj.
India plans to deepen its trade ties with the Brazil-led trade bloc. Sources have told CNBC-TV18 that India is looking to expand its existing preferential trade agreement instead of a full-fledged free trade agreement. Abhimanyu Sharma joins us now with the details.
A ministerial delegation from Brazil is currently in New Delhi. They are holding talks with the Indian government for a possible expansion of the trade partnership between both the countries. India already has a preferential trade agreement with the Mercosur trading bloc, which comprises of Brazil, Argentina, Paraguay, Uruguay and Bolivia. Government sources have indicated that deliberations are underway between both the sides to expand the scope of the existing PTA, which currently has 450-odd tariff lines, and both the sides are intending to increase the number of tariff lines under the PTA. However, sources have indicated that the full-fledged expansion of a PTA to an FTA seems unlikely for now, since that will require more consensus building between the Mercosur partner countries. So for now, both the sides are looking for an expansion of tariff lines under the existing PTA itself. India is looking to increase its overall trade with the Brazil-led Mercosur trading bloc, not just to access the South American market, but also to gain access via the transshipment route to the Pacific and Caribbean markets, many of which already enjoy trading access with the South American market. It remains to be seen how early both the sides are going to confirm as well as finalize the scope of the expanded PTA, which is going to increase bilateral trade between India and the Mercosur trading bloc.
All right, that's all the time we had here on News Center. Thank you for watching. Goodbye.
Co-powered by SBI. Best है सबको पता है. Special partner, Novama. Let's do it right.
Invest in silver. Silver is going to be the next gold for the future in the terms of pricing.
Huge premiums that are being charged for the delivery of physical silver, which I think will have a major correction in it.
Unique situation where prices go up, demand should come down, but your prices go up and demand goes up further.
Investment buying is like exorbitant, but the emotional buying is a little down.
This is the highest gold sale ever I have seen in my career from last 32 years.
Hello and welcome to this Dhanteras special. It's that time of the year when bullion counters glitter, jewelers see record footfall, and India reaffirms its timeless love for gold and silver. Since last Dhanteras, gold prices have surged more than 80% on the multi-commodity exchange, crossing 1.3 lakh rupees per 10 grams mark, while silver prices have doubled to hit 1.68 lakh rupees per kilogram. In the global markets, both the precious metals have jumped about 8% in this week. Gold is in track for its strongest weekly gain since March 2020. The rally has been fueled by strong safe haven demand amid global uncertainties like tariff pressures and expectations of another US Fed rate cut in this month. Silver prices have been supported in the meanwhile by tightening global supply. We are now joined by Chirag Mehta, he's CIO at Quantum AMC. Philip Newman is MD of Metal Focus. Varghese Alukas, MD of Joyce Alukas. And we also have Amrinder Mumidi, managing partner at Mumidi Bengaluru Jewelers. We also are joined on the show by Suvankar Sen of Senco Gold. Gentlemen, hi, thank you so much for joining in. Philip, to you first, and what's your sense of the kind of run-up that we have seen in case of gold prices standing at around $4,300 an ounce? Do you see further gains? People who bought gold in last Dhanteras and Diwali absolutely have made clean profits. Do you see more buying this time, and what is your outlook going forward?
Well, first of all, thank you for having me back on your show. From our point of view, even at these record prices and the fact, that gold is, over the past week, as you said, has just continued to march higher. We do think further gains are likely for this year and also into 2026. Whether it's a straight line up, I think that's a difficult one to call. I think you could have a correction, but even if there is a correction in the price, be it for gold or silver, from our point of view, we think that ought to be quickly bought into, and the rally would resume, we feel.
Philip, would you say that the prices can go higher from here? Because almost all banks and brokerages are putting out levels of $5,000 an ounce plus by end of 2026.
Well, it's incredible to look at to think of these prices beginning with a 5, let alone a 4. But of course, the market seems to be getting used to these prices quite quickly. And I think from our point of view, when we look at the factors that are driving gold, have done so far this year, all of those factors remain in place. And we think they will continue to remain in place next year. And yes, at the moment, from Metals Focus, our forecast does, we think that gold could potentially hit $5,000 before the end of 2026.
Very bullish cues coming in there, absolutely. So, Suvankar, how are you looking at the gold prices from currently where we trade? And are you also continuing to be bullish on the space?
Yes, in terms of, what we see with the consumer trends and the macroeconomic factors, there is a bullishness that gold prices will go up in the long run. And in the short term, if I look at the overall demand supply, last 7-10 days, we have seen a lot of consumers. The footfalls have gone up by almost 2.5-3 times. The wedding season is around the corner. So there is this huge interest amongst the consumer in order to buy. But if we look at the volume, then we are seeing that there is a substantial volume decrease, either because of the demand of lightweight jewelry, because the budgets are restricted and not being able to be met up in this high gold prices, or people also looking at diamond jewelry with lower caratage of 914. So there is a 15% approximately dip in terms of volume. So this supply and demand is where we need to look at. And obviously, the price that has gone up in the last 1 month has been going up in a very fast pace, which is a little bit of discomfort for consumers, for us as sellers, and a little bit of a correction will be very good, I think, for the industry, for the markets. And I'm sure consumers will rush in more to buy more gold and diamonds and silver if there is a little correction. But in the long run, we continue to remain bullish.
So, Anka, would you be as brave to put out some numbers there?
What kind of numbers in terms of the
gold prices, gold price outlook?
See, if you look at the 4-5 years, growth of the gold, it has been around 15-20% year after year. So therefore, today we are at about 1,25,000, 1,30,000. So we can surely see in Indian rupees terms 1,50,000, 1,60,000 on the upside. And if you look at the corrections, that is more technical. Something is more of calculations and not really, we don't know what's going to happen. But a 10% correction from here is always something which is healthy for the market and for the commodity cycle. That's how one should look at it.
So wait for some corrections, but the longer term is still very, very bullish. Mr. Bhumidi, what's your sense? How would you look at the gold prices? I want to get that discussion first out of the way. Your sense on gold prices going forward?
Yes, I think just like the rest of the panelists were saying, we also expect the gold price to go higher, where the geopolitical situations are helping it to drive. Normally, it used to be the gold prices from the consumer's end, but now it's the prices of the geopolitical reasons also, plus the consumer end, and then you have the rest of the funds also buying. So I've been reading that some of the funds have been saying 15% allocation of their portfolio should be in gold. So all this is driving the prices higher. But as a consumer, people are confused a little bit. Every time there's a small dip, then people rush in, and then there's a little bit of a hike, again there's a slowdown, and sometimes the reverse happens. When there's a dip, they feel that it's going to come down some more, and then this is a cycle where people need to gain trust that prices of gold will go up.
Chirag, you perhaps are the happiest of the lot because the kind of ETF buying that we've seen in the month of August, and then of course it exploded in September. How is October looking, one? And what is your sense now for the gold prices from here?
Yes, absolutely, Manisha. I think we have seen a great buying in gold ETFs across. Last month was 8,300 crores, and I'll not be surprised if we cross that mark this month. Because even this week or week before, we are seeing flows continue into gold ETFs. So I think at some point in time, at somewhere, we think that there is a demarcation happening where the caratage or the volume of gold bought in jewelry form has been declining. And it's more to do with investors and consumers trying to demarcate why they are purchasing gold. Is it for consumption or is it for investment? And therefore, we are seeing the decline, choosing adaptable ways, more efficient ways to buying gold through gold ETFs and funds.
Chirag, when you look at the overall ETF market, we do understand that the physical is pretty huge, much bigger than what ETF is right now. But with the increasing numbers, would you say that the gold ETF market now is perhaps 4%, 5% of the overall gold demand? Chirag, how much would you say is the gold ETF demand in, or the market share in India? All right, Chirag is not able to connect to that. But Philip, when you look at the Indian markets, we constantly see on how physical clearly is the place to be. While ETF seems to be surging, it still is a very small percentage. In the international markets, it's pretty different in that sense. How do you see your sense in Indian space now?
Well, I think, you touched on a few important points there. The fact that we are seeing in India the investment upside, the strength is across different asset classes. You mentioned the ETF, and that continues to march higher. But also your other guests have spoken about, that from a retail standpoint, in terms of the physical and the bar market, and it's just been quite fascinating. If we just focus on gold, that we've been at record prices for some time in rupees, obviously, but that seems to be attracting buyers, and that hasn't slowed down at all, as far as I can gather. I think the interesting point from a jewelry standpoint, and again, it's also been touched on, that yes, we are seeing weakness from a volume point of view, but if you look at the declines, they're relatively modest, given what gold prices have been doing. And I think that's been absolutely encouraging as well. So you are seeing that the attraction of gold from an investment standpoint, be it ETFs, be it bars, or even jewelry as well. So I think all aspects from that point of view, I think, are quite encouraging. And we see that in other markets, especially in the retail bar space, be it in Europe, parts of East Asia. We've seen queues outside shops in Australia as well. So I think it's been quite fascinating how retail investors, not just in India, other jurisdictions, have been responding, I think, in quite a positive way to the prices that they're seeing as well.
Philip, so given the fact that gold is under-owned as a financial instrument, and with the prices rising as they are right now, with a lot of people perhaps FOMOing out, do you see demand continuing at these current levels as well? I mean, there's a concern that the prices would just go one way, and that's higher.
Well, you're right, and I think we've got to be quite careful, because there's so much media attention, not just on the gold price where we are, and the fact that investors have adjusted or seemingly adjusted to these prices. But of course, we're talking about 4,500. You've already asked about 5,000 as well. I think on the other side of the market, on the recycling, the scrap side, that has also been relatively quiet as well. So you're not seeing that, I guess, downward pressure in the physical market that could potentially help to cap this rally. Now, of course, if, for argument's sake, Manisha, if gold was to hit, say, 4,500, what happens then? Do we see recycling come out in a very big way? Do we see retail investors booking profits? Or do they also adjust very quickly and expect yet higher prices? So I think the dynamics for now are working in favor of higher prices. But of course, especially from an institutional standpoint, which after all is where the real weight of money is, that is helping to push these prices higher.
Philip, if you had to choose between gold and silver, what is it going to be?
Goodness. Well, thankfully, we're not approved to give investment advice. I think, silver is really quite fascinating. The market, we're certainly seeing a bit of a squeeze at the moment. I think there's plenty of silver around. I think it's just a question of, is it in the right location that it can be lent out? And at the moment, that doesn't seem to be the case. So we'll see in the coming weeks if some of that tightness does ease, that may take a little bit of pressure off. But at the flip side, Manisha, if gold is going to continue to march higher, then I think silver is also likely to also strengthen further. We're comfortably above the $50 mark as we record this. And from our point of view, going into next year, if you've got, gold potentially touching 5,000, then I think silver breaking through, say, $60 an ounce is potentially on the cards, I would suggest to you.
All right, so very, very bullish cues coming in case of gold and silver there, 5,000 for gold and $60 for silver. So if you are buying this Dhanteras, be assured, stay assured that your money is going to go much higher from here, as is the norm, as is the culture saying as well, that whatever you buy this Dhanteras and Diwali, it will always give you, multiply your wealth going forward. But gentlemen, with that, we'll go for a very short break. When we come back, we'll talk about on what are the demand trends really right now in case of India, this Dhanteras and Diwali. We'll ask our experts. Welcome back, and we're talking about the Dhanteras special and gold and silver prices at all-time highs ever that you have seen during festivities or in any year for that matter. So, Ankar, the way the prices have been moving, where do you see a better demand coming in for? Is it going to be bullion? Is it going to be jewelry? Is it 22 carats? Is it diamonds? What really are the trends that you are reading?
So see, bullion for us has always been about 5 to 6% of the overall business. But what we see in the last, I would say, 15 days or 25 days, this 5 to 6% share of the sales has gone up to about 9 to 10%. So that's the kind of inquiry and interest in terms of the bullion bars and coins that we are seeing in gold and as well as in silver. But when it comes to the jewelry aspect of it, see, 22 carat gold jewelry has always been about 80 to 85% of the share of the sales. But what we are seeing here is that people are overall looking at jewelry which is within the budget, where a 10-15% reduction in terms of either weight or in certain modern design, trendy designs, people are looking at 18 carat gold jewelry or 14 carat, 9 carat diamond jewelry as something that will fit in the budget for everyday wear, daily wear. So we as jewelers need to be conscious of having the right kind of product within the budget of the consumers. Silver also is something that has picked up not only in terms of utensils and the traditional products, but silver jewelry has also come up in a big way as a gift item and something that people will aspire to buy or gift. And we are seeing a lot of inquiry, but those are smaller ticket size. The bigger aspect that we all need to look at is the wedding jewelry segment. And we have so many weddings around the corner in November, December and January. And I think that is something we are looking at, and we're trying to fulfill the demand of the consumer, fit into their budget. And old gold exchange, that is a big trend. Almost 45 to 50% of the transactions happening on an average is where customers are coming with their old gold and exchanging for it. So that is something that with no deduction and best benefits passed on to the consumer, they are being able to cope up with this high gold price. So this is the overall scenario that we are seeing in the market.
Mr. Mumidi, what's your sense really? I mean, is it pure gold jewelry that people are asking for, or is it studded diamonds? Because those prices have been kind of stable, even a decline from its kind of highs.
Yeah, there's a good demand even for diamond jewelry though. The people who are buying around 2 to 3 lakhs of gold jewelry now feel that the size of the jewelry is much smaller. So they prefer to buy diamond jewelry instead. So diamond jewelry always is an upgrade for anybody who's been always buying gold. So there's this huge mix in what's actually happening right now. People are buying gold or buying diamond. People who are always been a gold consumer are buying a lot more gold. People are also buying silver jewelry. The trust in gold and silver is at all-time high. And Dhanteras is our traditional way of SIP. So every year people buy some amount of gold and silver. This has been for so many years that this is what has been happening. So I think coming back to our tradition, coming back to what our forefathers have been doing and taught us is a great advantage for us. And the market has been very positive. And despite of all the hikes, the demand has gone down only by maybe 10 to 15%. So this is this goes to prove that that the people have confidence in gold and silver.
Oh, yes. And the other thing is that people would buy even if in tokens. So there's so much to opt out from right now. There's gold and silver and platinum, which is gained up by 85%. And then there is diamonds, and lab-grown diamonds seem to have really made a very strong bullish entry as well. So people have a lot to choose from into this sense. But Chirag, ETFs, and coming back to you on that one, gold and silver, what is it going to be this time around? And a question that I was trying to pose to you earlier, how much is the overall ETF as a market share of total buying that India does in sense of gold and silver? Is it 5%, 8%? Is it increasing?
I think it was very, very small until last year. But this year, we are seeing that trend change significantly. Still, it is small in the overall context. We import around 700 tons or 750 tons of gold a year, out of which all ETFs combined today are just about 80 tons so far they have been in existence. So I think that's increasing, which was about half last year, about 40, 50 tons, has now gone to about 80 odd tons. So I think the traction is there and it's building on this year. So if I look at this month, the month of Diwali, to the run up to Diwali, the volumes that we have seen or inflows that we have seen is 2.5 to 3x of what we saw last year. So I think it clearly tells you that, there is a lot of traction happening in gold ETFs overall and gold funds. So we think there is a lot of participation increasing. Like last month, 8,300 crores came on back of 6 lakh new investors coming into gold ETFs alone. Let gold funds be aside. So there is a lot of participation increasing, and we did one study in terms of if one would have invested in gold for last 20 years, every Dhanteras, they would have invested 20 lakh rupees in total, and that number would have become about close to 1.1 crore if that Dhanteras SIP continued. So these elements, plus the fact that when equity markets suffer, gold helps from a diversification standpoint, and that is leading people to increase their allocation to gold through gold ETFs. So what used to be a 2 to 5% allocation to gold now has become a consensus in terms of 10 to 15% allocation. Many of them from that context, or be it even from 2 to 5%, are under allocated, and therefore they are increasing their allocation of the portfolio to gold, and gold ETFs has been the choice of vehicle that they have taken to increase their allocation to gold. So we think that this trend of diversification of reserves at the central bank level and gold in terms of portfolio allocation of investments is going to continue, and we'll see that build up happening this year and next year.
The one thing that I have missed really is platinum. So, Subankar, you want to comment on that? Because that sales also seem to be increasing, is what Platinum Guild of India tells us. Yes, you're correct, because platinum has also increased in terms of price. And the funny thing is that platinum is rarer than gold or silver. And the use of platinum, if you really look at it, if you compare it with silver, the way it is used for aerospace and EVs and the solar power and energy, it is as much as it's silver. It's more rare and more precious. And that was always almost half the price that of gold. And we could see that a lot of men's jewelry that were being in demand for platinum, bracelets and chains. And now it has started gaining traction. It's moved up by 75-80% in the last 1-2 months. And I think that consumers are also looking at that as an option. So a combination of platinum with gold is something that is trending in for men's jewelry or for the everyday wear women's jewelry as well. So that's been, that's exciting space as well. Oh, yes, there's just so much to choose from. And the last 1 year has given stupendous returns to anybody who bought gold, silver, platinum, any of those in the previous year. Gentlemen, thank you so much for joining in. Subankar, Chirag, Mr. Mahmoodi and Philip as well for taking time out today. I'm wishing you a very, very happy Dhanteras and a very prosperous Diwali this time.
Special partner, Novama. Let's do it right. special partner, Novama. Let's do it right.
जान नहीं तू कहीं हार के कांटों पे चल के मिलेंगे साए बहार के
रुक जाना नहीं तू कहीं हार के कांटों पे चल के मिलेंगे साए बहार के ओ राही 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 ओ राही
Markets and music, both of them have a very symbiotic relationship. Both of them have their highs and lows. Eventually, if done well, give a lot of joy as well. And that's our show today as we welcome Samvat 2082, CNBC-TV18's Market and Mehfil. I'm Mangalam Malu, with me Nimesh Shah, but more importantly along with us are market veterans whose investment advice you've heard, but perhaps not as much as their songs. So we have with us Sridhar Sibram, we have Vijay Kedia, whose songs and lyrics you've obviously seen and heard, and we have Jakes Jayakumar as well. Thanks a lot, gentlemen, for joining in.
Thank you for having us over.
Thanks for inviting.
Season's greetings.
Yeah, season's greetings.
And
And
everyone who's watching this show.
Yes. So we all know that this is a musical show, but I just want to introduce all three of you all in something which not many people know, right? I mean, Jakes has been a investment banker for many, many years. Something, he does a lot of deals, but he doesn't come out too much on TV and claims those. Vijay, of course, is an all-rounder, singing, composing, everything.
He's living the life.
He's living his life. And Sridhar, today I'm getting this musical side of you, but I know you're a super photographer as well. You travel a lot and you do a lot of wildlife photography as well. So, it's not only markets, not only music, but all three of have got a fantastic, personalities which not many people know, and maybe through this show, you'll get to know more about all three.
Given the volatile markets, we need to have other passions.
Speaking about the volatile markets, last 1 year from Samvat 2081 to now, Nifty is just barely 4% higher. So much has happened, yet nothing has happened. So, musically speaking, if we had to describe the last 1 year in a song, how would you say?
Actually, you should see it in the context that everybody's been talking about a bull market. Overseas markets, emerging markets are up 25, 30, 35%. We're barely up 2%. So the elusive search for the bull market is on. And put musically, it would go something like this. Jaane jaan, dhoondta phir raha, hu tumhe raat din, main yahan se जाने जा ढूंढता फिर रहा हूँ तुम्हें रात दिन मैं यहाँ से वहाँ मुझको आवाज दो छुप गए हो सनम तुम कहाँ मैं यहाँ तुम कहाँ
Very nicely put. Exactly, this has been the theme of the market, right? And the mood in the market. I mean, for the last 1 year, it's such a struggle to get alpha, to create alpha in this portfolio. So, well put, Jakes.
So the problems of the fund managers, like
Sridhar. So Sridhar, as Jakes put out, it's been a challenging year, right? I mean, how would you describe this market? Are you been easy to get generate alpha?
Yeah, so this has been a very tough year, actually the tough 18 months, I would say. And finding winners have been very difficult given the valuations in the market. And I would roughly put it in a musical way like this. तुम जो मिल गए हो तो ये लगता है कि जहां मिल गया
we've got one or two winners this year, but we've lost also a lot of money, right? And investors have also lost a lot of money. How would you describe last 1 year?
कभी खुद पे कभी हालात पे रोना है. So I would like to put it in one of my songs, which I have written.
Yeah.
जाने कहाँ गए वो दिन कहते थे हम बन जाएंगे वारन अंकल 2 साल में चाहे कोई भी शेयर ले लो कहते थे हम बढ़ जाएंगे बेचेंगे ना 100 साल में जाने कहाँ.
2 years ago, everyone would want to become Warren Buffett and all the names that you've been speaking about. But last 1 year, when you're speaking about volatility and policy making and all, the biggest imponderable was the man from the US and his social media account. I mean, how do you musically describe that? How do you first describe that situation, and how does an investor navigate through that situation?
Especially because things change literally every 24 hours.
Less than 24 hours at times.
Yeah.
Right. So I'm just being sort of polite, if you will.
Yeah.
But if there was a song I could pick out which kind of describes what we need to do to these responses, it would be कुछ ना कहो कुछ भी ना. बस एक मैं हूँ बस एक मैं हूँ.
My favorite line in that is क्या सुनना है क्या कहना है सबको पता है हमको पता है. So obviously you got to separate the wheat from the chaff. But speaking about music and markets and all of that, having a relationship, you have a beautiful relationship with both music and market. But if you had to describe your relationship with the market in a song musically, how would you do that?
कौन सा गाने का?
आप
अरे वाह. हम तेरे बिन अब रह नहीं सकते तेरे बिना क्या वजूद मेरा. तुझसे जुदा अगर हो जाएंगे तो खुद से ही हो जाएंगे जुदा. क्योंकि तुम ही हो अब तुम ही हो जिंदगी अब तुम ही हो चैन भी मेरा दर्द भी मेरी आशिकी अब तुम ही हो.
तुम ही हो.
Vijay, very nicely put. Again, all three have seen so much of markets, and we've learned from all of you all, right? Market is a great leveler. और ये आपने गाने में बता भी दिया कि अल्टीमेटली इट्स अ मार्केट. आई मीन तुम कितने भी बड़े हो कितने भी बड़े इन्वेस्टर हो जो भी हो, अल्टीमेटली मार्केट टीचेस यू ऑन द रॉन्ग साइड, ऑन द अप साइड, ऑन द डाउन साइड. If you want to describe your market journey, and how would you identify your investment styles through market song or any song?
So actually, since they have already spoken about the market, the other asset class that I have been speaking about is gold.
Yes.
And there are a lot of skeptics in the market about gold. In fact, in the last 1 week, I've seen more skepticism on gold than anything else.
Are you really talking about skepticism in the gold? Because we hear, on the other hand, a lot of people actually saying, "Oh my
Can I
God,
buy
gold,
ETF? Can I buy silver
gold?"
So the people, I'm guessing that the people who missed out on the gold rally, they come out with, random data that, how gold has underperformed between 1980 and 2000, how gold is a very volatile asset class. And in most cases, they sort of give out a dollar return number, whereas it is for the Indian investor, it is the rupee dollar, rupee gold that matters. And as I've said many times, that gold actually is a store of value and also is a hedge against currency. People miss the hedge against currency. So if you go back to 1980, the rupee was 9 rupees. Today it is what, 85 rupees. So you've got a compounded return of what, 4 to 5% just on currency. So if I want to put it in a song, I would put it in this way. कोई सोने के दिल वाला, कोई चांदी के दिल वाला, शीशे का है मत वाले तेरा दिल. महफिल ये नहीं तेरी, दीवाने कहीं चल. कोई सोने के दिल वाला, कोई चांदी के दिल वाला, शीशे का है मत वाले तेरा दिल.
Last 1 year, the Nifty has actually gained just about 4%. Gold is 60%.
60%. Silver is, I think, even
also, yes,
much higher than that. So,
हाँ, तो मैं ये श्रीधर भाई को ये बोलना चाहता हूँ भाई कि ठीक है, ये तो गोल्ड मैन है, अपने बोल्ड मैन है. तो मैं इनका बात का जवाब दूंगा कि ना चाहूँ सोना चांदी, ना चाहूँ हीरा मोती, ये मेरे किस काम के. ना मांगू बंगला बाड़ी, ना मांगू घोड़ा गाड़ी, ये तो है बस नाम के. लेता है शेयर ले बदले में सबके, लेता है शेयर ले बदले में सबके. ओरे साहिबा शेयर से सौदा नहीं.
क्या बात.
It's a nice contra to what Sridhar wanted.
how do you foresee the next 1 year when it comes to earnings, when it comes to the macros, when it comes to micros? If I had to ask you to bet on a few themes and a few ideas, what would they be for, say, summer 2083 when we hopefully gather once again for a mehfil?
So I think the way we need to look at this is reversion to mean is a big theme in the world that's happening. Because of mass participation both domestically and overseas, moves are getting amplified, highs are getting exaggerated, returns are getting kind of pretty much front-loaded. And then comes this, policy-making maverick behavior that there exists the world over, which essentially means that things revert pretty quickly. Corrections are short-lived, if you will. So the entire buy and hold strategy is actually undergoing a change in some senses. So before I come to that, you need to look at 4 to 6 quarters, 6 to 8 quarters in order to make a thesis play out and hopefully book your profits and come out. I think this buy and hold at one level is probably the biggest change in our lives that's happened. So I'd like to talk about 2 or 3 sectors. My number one sort of bullish case is for banking. I believe that when any economy reopens up or opens up for foreign capital, banking is the first space that will attract money. So I think NBFC consolidation, money coming into private sector banks, more and more deals like the Yes Bank kind of deals, I think we'll get to see and hear over the course of the next few quarters.
The ones that have fallen so far? Or?
I think it's not a question of follow. I think these are platforms that can't be replicated. Like NBFCs, there are infinite number of NBFCs in a manner of speaking. But there are a finite number of banking licenses, no new licenses to be given. So I think banking sector could attract disproportionate amounts of capital as people, especially foreign banks, come in to take stakes in the Indian context. I think that's going to be a big theme going forward.
You'll be an important player in making those deals happen as well, I suppose.
Well, I think that would be... that's kind of out of the syllabus. I leave that out for the moment. So banking is one space. Pharmaceutical, especially now with the dust having settled on the Biosecure Act and the need for generics, etc. I think generics, CDMO, these are the spaces. And the third space is capital goods, where I think a lot of the new money should come in terms of capital investments, which the private sector has been lacking so far.
Right. And Vijay ji, you?
मेरे को ऐसे लगता है कि I'm bullish on tourism. I think now government is awakening that and bent upon giving all this promoting domestic tourism. So मेरे को लगता है टूरिज्म से रिलेटेड जो भी शेयर्स हैं, चाहे उसमें एयरलाइंस आ गया या टिकटिंग वाले आ गए या होटल्स वगैरह आ गए,
इवन एयरपोर्ट बिजनेस,
हाँ वो भी आ गया और लेकिन सब एक्सपेंसिव है, कोई भी सस्ता नहीं है, लूट का माल नहीं है यहाँ पे, सब ये सब पसीने का पैसा है यहाँ पे। तो लेकिन जब भी मौका मिले तो मेरे को इसमें टूरिज्म में ठीक लगता है और मेरे को हॉस्पिटल इंडस्ट्री मेरे को ठीक लगता है।
हॉस्पिटल एंड हॉस्पिटैलिटी,
हाँ हॉस्पिटल एंड हॉस्पिटैलिटी।
And Sridhar?
I'll put it slightly differently because I followed the emerging markets for many years now, almost 25 years now. And I've seen the ups and downs of India right from 92 when I started. For about 8 to 9 years, India gave no returns. But over the years, if you see on a longer term period, India has been one of the best performing emerging markets. So I think a lot of people are worried that we haven't given returns this year. But I think it's a very short term view. If you look at 5 years, 10 years, 15 years, 20 years, India has done phenomenally well and possibly in the top 2 in terms of dollar returns. So I would say that just bet on the country, just bet on India.
Just bet on the country, just bet on India.
And in fact, if there's something that I could describe in the way things are changing, which is the only constant. And of course, as I said, musically, since that's the theme for the evening, Har Ghadi.
All right, let's do this.
हर घड़ी बदल रही है रूप जिंदगी, छाँव है कभी कभी है धूप जिंदगी, हर पल यहाँ जी भर जियो, जो है समा कल हो न हो. So the time invested in the markets is important.
Yes. Rather than timing the market.
Rather than timing the markets.
Yes.
Perfect. And
तो अच्छा समा कल क्यों न हो? हो सकते हैं.
Vijay ji, I have to ask you this question because everyone has been now getting that FOMO, 3 words, IPO. Everyone has gone crazy. Like, ये लगना चाहिए, ये लगना चाहिए, ये लगेगा तो तुरंत मैं इतना पैसा बन जाएगा. What is happening with the IPO song?
तो IPO को I will put it again in one of my lyrics, one of my songs I have written on this IPO that I'm going to sing.
Can you spell the lyrics out before you sing the song?
So वो ऐसा यार कि जहाँ जहाँ आजकल मैं हाथ रखता हूँ वहीं वहीं डबल ट्रिपल मैं कर लेता हूँ रोज रोज सोचता हूँ क्या नया मैं लूँ कोई भी बता दे कुछ भी जाने नहीं दूँ संभल संभल के यहाँ पे पाँव रख तू सालों की कमाई मिनटों में हो जाती छू.
That is very important that you've said, because you know a lot of times people listen to the song and they forget the words that you've said.
Clap for the song and move on.
And then move on.
And they buy more IPOs.
नहीं बाद में फिर मेरे कोई पूछते हैं सर कौन सा IPO में अप्लाई कहीं मिल गया मेरे को ही पूछेंगे. जहाँ जहाँ आजकल मैं हाथ रखता हूँ वही वही डबल ट्रिपल मैं कर लेता हूँ रोज रोज सोचता हूँ क्या नया मिलूं कोई भी बता दे कुछ भी जाने नहीं दूं संभल संभल के यहाँ पे पाँव रख दूं सालों की कमाई मिनटों में हो जाती छू IPO और YPO से बच के रहना तू पेनी स्टॉक से आ रही है बड़ी बड़ी बू इतनी सी समझ के बात आसमां को छू फिर कभी न कहना विजय टोका नहीं क्यों.
Wow. फिर ना कहना कि विजय टोका नहीं क्यों.
We have to be clear that we need to separate the signal from the noise.
Of course.
Yeah.
Any number of people will say a lot of things, and I know that that's important. You know, my guests here have talked about to be careful about India. But one of the things I would like to say is this participation has resulted in a massive amount of hearsay and people saying, I heard this, ye ho jayega, wo ho jayega.
So I'll ask you to hold on to that thought. So he's speaking about India. You're speaking about a lot of noise. So noise to signal ratio has to be improved. And he often speaks about the long term. He's been speaking about the long term, saying, ye hai long term, ye hai long term, ye hai long term, meri jaan. So let's end with all of y'all giving your investment philosophies through a song. Let's start with you, sir.
कभी मैक्रो कभी माइक्रो कभी स्लो डाउन कभी स्केल कभी यूएस कभी चाइना कभी झगड़ा कभी मेल टेंशन के हैं कई नाम यहाँ जरा हट के जरा बच के शॉर्ट टर्म में मेरी जान है दिल है सिंपल कमाना यहाँ यदि लॉन्ग टर्म बस लॉन्ग टर्म ओनली लॉन्ग टर्म मेरी जान.
And you were saying signal to noise ratio. What is that?
On a somber note, कुछ तो लोग कहेंगे लोगों का काम है कहना छोड़ो बेकार की बातों में कहीं बीत न जाए रहना कुछ तो लोग कहेंगे लोगों का काम है कहना.
All right, so the message is clear. Hold for the long term. ये है long term, ये है long term, ये है long term मेरी जान. And for you, it is avoid all the noise. Just focus on what you have to. कुछ तो लोग कहेंगे, लोगों का काम है कहना. But the third part, believe in the power of India.
ये जो देश है तेरा.
ये जो देश है तेरा. Oh wow. Let's end on that note.
Let's do. ये जो देश है तेरा स्वदेश है तेरा तुझे है पुकारा ये जो बंधन है वो कभी टूट नहीं सकता ये जो देश है तेरा स्वदेश है तेरा तुझे है पुकारा ये जो बंधन है जो कभी टूट नहीं सकता
musical note, ladies and gentlemen, thank you so much for tuning in on CNBC TV18's Market and Mehfil. We wish you a very happy Diwali, a very happy Samvat 2082, and a very prosperous New Year. Believe in the power of investing. Believe in the power of India.
Special partner, Novama. Let's do it right.
Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me as always is Shruti Mishra. These are the top headlines from the startup world. Social media firm ShareChat reports moderate revenue growth in FY25, sees an improvement in its bottom line supported by cost controls and operational efficiency. Revenues at 723 crore rupees was mild improvement over the last year. Losses shrink 72% on a yearly basis. India's B2C e-commerce attracts $57 billion in funding on the back of digital infra growth. According to a report by Traction, Bengaluru and Delhi NCR were the top funded cities in India. The company saw 102 mega deals to date. AI Planet and InfoDrive Analytics announced a JV backed by a $3 million investment to accelerate AI transformation across the Middle East. Will focus on building industry-specific agentic AI solutions. Student co-living platform WhoLive raises 24 crore rupees in a pre-Series A round led by Negan Capital. Investment will focus on expanding WhoLive's presence in non-metro cities through bed acquisitions, brand building initiatives, and further development of its proprietary property management platform.
Well, those were the headlines we are tracking for you this evening on What's Brewing Today. Mumbai-based quick commerce startup Zepto has raised close to $450 million in a mix of primary and secondary transactions, valuing the company at $7 billion. Now, the round marks the entry of California Public Employees Retirement System, one of the world's largest pension funds, alongside existing investors who've doubled down on their investments. To tell us what this fundraise means for Zepto's next phase of expansion, Joining me now is Adit Palicha, the co-founder and CEO of Zepto. Adit, welcome to Startup Street. You've just raised close to $450 million in fresh funding, taking Zepto's valuation to $7 billion. You've doubled your valuation in less than a year, from $3.6 billion in mid-2024 to $7 billion today. Adit, tell us, how significant is it to have a global name like CalPERS join the cap table? And can you break down how much of this funding is primary and secondary?
So firstly, it's wonderful to be here. Thanks for having me. And, it's a show that I enjoy as a viewer as well. So firstly, I think obviously this, financing has been, pretty significant milestone for the company. We're excited to, have all the names that you mentioned in your introduction. And I think from our lens, the focus is, we've been able to grow. The reason why we were able to get this financing done is because we've been able to grow from roughly around 500,000 orders per day in mid-2024, when we closed our last fundraise, to about today 1.6 to 1.7 million orders per day. And even as we've grown the business close to 250% in the past 5 quarters, what we've been able to do, which I think is more important, is we've been able to consistently keep turning stores profitable. We've turned hundreds of stores, incremental stores, profitable even as we expanded. And so those are the foundations for this fundraise. And I think the last question you mentioned is on the amount that's primary or secondary. What I can tell you is that the vast majority of this $450 million is primary. And we're now in a position where we've got close to $1 billion of net cash in bank. So we're more than well capitalized to take the company through the next few years. So that's basically where we are right now.
Well, clearly you've got a lot of cash with you, Adit. But what's the roadmap for this capital? Will it go toward expanding dark stores, strengthening, tech and supply chain, or improving profitability metrics ahead of a potential IPO?
Look, I think the key verticals that we continue to invest in, one, obviously, we're launching a few hundred stores over the next 12 months. So we already have well over 1,000 stores today. We think we're going to add a few hundred more stores. Even though we're seeing pretty substantial growth even in existing cities, and we're going to keep doubling down there, we do plan to add a couple hundred more stores. That's one. The second piece is, we are obviously putting, capital behind acquiring new customers, which we've consistently done. So that we're doing over like a longer period of time. And more importantly, I think the bigger piece of clarity, or at least what we've realized, is that there's a lot of value that we can build technically in our business, right? A lot of intellectual property that we create in, supply chain product, automating financial processes, even on the consumer side with search or our advertising business. So there's a lot of, development work that we do there. So we're putting capital behind that. But at a principal level, Shruti, we're expecting to keep growing the business meaningfully quarter on quarter, and keep improving bottom line quarter on quarter as well. And what we're hoping to do is to show investors, which at least right now seems like we're on a good track to do, to keep showing, bottom line improvement quarter on quarter, even as the business keeps growing.
Adit, we are in the middle of the festive season. What is Zepto's strategy to capture festive demand while keeping, delivery time, service quality, and margins intact?
Yeah, absolutely. So I think we've had a pretty successful festive season. Touch wood so far. I mean, it's been pretty dramatic. I think, for example, like some of the festivals that have already passed by, like Navratri or Ganesh Chaturthi or Raksha Bandhan, yes, right? We've seen growth between 100 to 200% in some of the key festive SKUs that serve as a barometer for this, right? So, for example, Dandiya sticks or Rakhis, or let's say, day after tomorrow, Dhanteras, gold and silver coins, right? We've actually seen pretty ridiculous growth year on year in those categories. And the key, in specifically festive businesses or festive part of our revenue stream, the key there is selection, right? When a customer is buying a Rakhi or a Dandiya stick right before Navratri, for example, she's less sensitive about the price that she's getting. She's more sensitive about, is every demand signal, every type of SKU that she wants available. And you have to do deep data work, looking at search trends, looking at trends on what consumers are browsing through on the app from years prior, to really get a full signal of what potential demand points can we double down on. And so I think the key game in festive is selection. I think we've done a phenomenal job so far. It's reflecting in the growth, all the key festive SKUs. like 100 to 200% up year on year.
And finally, Adil, before I let you go, you've often said that the quick commerce story in India is still in its early innings. So tell us what's next for Zepto, you know, in 2025, 2026, and, you know, is it expansion, new categories, or maybe ringing the bell on Dalal Street? If you could also share what is Zepto's IPO timeline now, and how does this round feed into that roadmap?
Yeah, so we consider this financing a pre-IPO financing. We are, we're not allowed to give exact timelines. There are some restrictions on being able to do that that we have to follow. But what I can tell you is you'll see, you know, very imminent news on next steps on that very soon on, you know, our public listing. So that's happening imminently. But what I can also tell you, I mean, from our perspective, we do think quick commerce is quite early. At least what we're seeing in our metrics is that we're going to have substantial growth. You know, we already have grown from 2024 to 2025, you know, in an explosive way. We think that growth is going to continue to be pretty rapid next year and for the next few years. So I think that, you know, this category is only 4 years old, right? Like 4 years ago, we had, you know, one dark store in Bandra, and we just raised a seed round, right? 4 years later, obviously, you know, this category is massive, and we're all doing billions of dollars of sales. And so from my lens, I think over the next 12 months, you're going to keep seeing that number multiply. And I think over the next 4 or 5 years, you know, we have to take this to a category that does tens of billions of dollars of sales consistently, and I think that's where all of us are heading. So yeah, so that's our point of view. A lot more to come, you know, over the next few years.
Well, we will surely keep a track of all of that on Startup Street. Arid, many thanks for joining us. Wish you the very best for all your growth plans.
Likewise. Thank you so much.
And on the hot seat today, India's new age entertainment startup Rusk Media has raised 103 crore rupees in a Series B round led by Ivy Cap Ventures with participation from LC Nuva, Info Edge Ventures, Woori Venture Partners and others. The funding will power Rusk's global expansion and fuel the creation of new age Gen Z focused entertainment IPs across digital and OTT platforms. Known for hits like Playground, Battleground and School Friends, Rusk has built a full stack content ecosystem combining storytelling, technology and pop culture. With over 1 billion monthly views across platforms and a growing international audience, the company now plans to take its IPs to markets like the US, Europe and the Middle East, while strengthening its owned platforms Rumble and AllRight TV. Joining me now to discuss this further is Mayank Yadav, the co-founder and CEO of Rusk Media. Mayank, thank you so much for joining us here on the show today. You know, let me begin by asking you, Rusk is known for Gen Z entertainment, right? So how do you sort of keep your content formats fresh and relevant for a constantly evolving young audience?
First of all, thank you for having me on the show. Really appreciate it. Over the last few years, we've been kind of focused on using data and insights from what Gen Z, even Gen Alpha is kind of consuming on Instagram, YouTube, everywhere else. So we try and funnel and understand what they're watching. So for example, during COVID, we realized people were watching a lot of gaming. Then we recently realized that, hey, the world has changed and moved to not just aspiring to sing playback, but create original music. So we try and look at white spaces, what this generation is already kind of consuming, and then make IPs out of that. Our strategy has always been that, look, while on TV, you did not have so much consumption data, so much personal data. Right now, because on mobile, you get so much on comments, shares, what people are watching, till where are they watching. So we just try and identify new trends day in, day out and try and create IPs on that.
Sure. You know, you've raised this 103 crore rupees in a Series B round, right? So how will this fresh capital fuel Rusk Media's next phase of growth? Or what's on top of the agenda when it comes to fund allocation?
So we're pretty big in terms of creating IPs in India alone. And the good thing about our IPs, especially reality and unscripted and animation that we're creating from India, is that we can create from India for the world. That's a big part of the allocation that we're going to try and deploy to say that India can create world-class pop culture and entertainment formats and IPs, and that can be consumed globally. That's number one on our agenda. Number two is the rise of just mobile consumption in India. So we would try and go direct to consumer through our own streaming platform called AllRight TV, which will be focused on vertical dramas and micro episodic content.
And, you have this big push to expand globally, right? So what's the strategy behind expanding into the US, Europe and MEA region? And what's the kind of global audience that you're targeting, and how different is it when it comes to, versus India?
So just think of it that way. Indians have always consumed formats like Big Boss, Fear Factor, so on and so forth, which have been conceived outside, not in India, but then are widely consumed in India. Gen Z is a generation which is very similar globally. So whatever formats that work in India can be recreated for global markets. So for example, a format called Battleground, which is about fitness and just living healthy, kind of works well across, I think, 80% of countries across the world. We want to combine the scalability of these formats and the creative talent that exists in India and produce in India for the world. So that will entail people flying in from whichever geography we're producing in, for example, the US or UK, producing in India and then exporting it back. So that's number one. And number two is producing world-class animation that everybody can consume from India for the world. So while the unscripted piece or the reality shows that we are going to produce are going to be created every time specifically for each new geography, animation is something that we are trying to export our culture from. So we're looking at picking up tales from our Indian mythology and presenting it in a way that almost akin to anime on how Japan has exported its culture. We are trying to export our Indian culture for the world.
So exporting our Indian culture for the world. But, if you could sort of tell us what's Rusk Media's revenue run rate currently, and what's the target that you've set for yourself for FY26? And also if you could break up what the revenue mix will look like going into the future.
So over the last 3 years, we've almost grown 100% year on year. Last year, we did about 100 crores. This year, we're on track to do about 200 to 220 odd crores. The one thing that we've realized over our journey is that we want to build sustainably. So while we raise this capital, we are going to be profitable within this year and on track to do about 500 odd crores in FY27. Bulk of our growth is going to come from more number of IPs that we're going to produce in India. That's going to constitute about 60-70% of our revenues this year. 15-20% is already revenue generated in the US, and 10-15% is the new initiative of our vertical drama app. The latter two are going to grow more exponentially over the coming few years, while our existing India business is going to grow almost 50-60% year on year while being extremely profitable.
Sure. So 100% year-on-year growth and profitability within this year. You've also mentioned that AI-enabled production and data-led storytelling is central to, how it functions at Rusk's creative process, right? So can you tell us a little bit about your tech edge that you have going on?
There are two different components. One is, of course, how we use data to kind of create content. So right from ideation to how the scripts need to be made to what production process needs to be done is layered with our data systems, which combine everything from secondary data available across Instagram, Facebook, our own IPs, whatever data we capture on our own systems, and a very thorough primary research process, which kind of sets us apart from just being a creative organization to using data to kind of enable our creative talent to create better and better and better and innovate a lot more. On the AI end, there are two segments. One is, of course, using AI. I think AI has become almost like Microsoft today, right? You've got to use it for anything that you're doing. So right from scripting to post-production to music to BGM, AI is layered across all our content creation process right now. And starting January, we're also going to be producing 60-minute films that would be 100% AI generated as well. So those are two different segments of how we're using technology to kind of improve our product. I think that kind of answers your question.
Sure. And, with IPs like Playground, Battleground, and, School Friends performing strongly, which formats or shows are driving the highest traction for you today?
To be honest, you can't really ask me to pick a best one amongst all our IPs. All of them do really, really well. What we've learned, though, is each of these IPs have a very strong cohort in which they've become extremely popular. Unlike television, where you only have a few slots to air, digital programming is extremely different and it appeals to different cohorts. The one thing that we want to kind of be very proud about is that most of our programming has gone into third, fourth, fifth editions. So our success rate is extremely, extremely high, and that's what's really important at the end of the day for a business like ours.
Sure. So all of them seeing good traction. But what's the long-term vision for Alright TV and your owned platforms? Could they sort of become full-fledged OTT destinations?
If you think about the vertical drama space right now, you would see a lot of players coming in and trying to own certain cohorts. At the end of the day, great IP is going to win in the next few years. What we believe in is that there needs to be a destination for Gen Z and younger female audiences, which are not yet programmed for. So that's the cohort we want to kind of get on our own platform and program and create very good premium content that's not objectionable, that people want to kind of associate with themselves. And that's the long-term vision for Alright TV.
Right. And before I let you go, how do you sort of see Rusk Media shaping the future of India's digital-first entertainment industry over the next 5 years?
To be honest, we are very patriotic as a team, and as personally I am. We really want to see us being the centerfold of India's pop culture revolution over the next 10, 15, 20 years. And not just within India, but taking Indian culture and also exporting it to as many geographies as possible. I see a lot of value, a lot of depth of stories, a lot of depth of creative talent that exists within India that we must use to kind of deploy globally.
All right. All right, Mayank, thank you so much for taking time out and being here with us on Startup Street. We wish you all the best going forward and a very happy Diwali.
Thank you. You too.
On that note, it is time for us to head into a short break. But coming up next, it's been 10 years since Cash-Free entered India's fintech landscape. We check in with the firm's co-founder to discuss its path to profitability and plans to sustain growth. Stay tuned. Welcome back. You're still with us on Startup Street. It's been 10 years since Cash-Free entered India's fintech ecosystem, growing from a small payment startup into a major player in digital payments and API banking. As the company marks this milestone, it faces a challenging financial year, reporting a 14% widening of losses in FY25, alongside a revenue decline of 640 crore rupees, short of its 1,000 crore rupee target. My colleague Ritu Singh caught up with Riju Datta, the co-founder of Cash-Free Payments, on the sidelines of the recently concluded Global FinTech Fest to discuss its path to profitability and how Cash-Free plans to sustain growth in this rapidly changing fintech landscape. Take a look.
The growth, both how the industry has grown in the last 10 years and how we have grown as part of that industry.
Yeah.
Then again, I think the regulation bit, I think we today are a payment aggregator for both domestic, cross-border. We are also a PPI holder. So just being a regulated entity and the governance that comes with it, and at the same time maintaining our DNA of innovation while balancing it out with compliance. I think that has been the journey, and I think as a part of it, we want to support the startups. So we're celebrating it by offering, discounting our pricing. We're now offering.
Oh, really?
Yeah. So we're now offering it at 1.6% for a year.
Okay.
And
to celebrate your 10-year milestone.
Yeah. So we kind of just wanted to gift the founders, the startup founders, because it means a lot. I think it's a few basis points, but it like maybe even if it's 1 lakh rupees or 10,000 rupees, it's a few extra months of runway for a founder. So that's a big deal.
Okay.
So yeah, that's how we're doing it. But largely, I think the growth that has happened, the learnings that come with the growth, and the learnings that come with regulation.
Yeah, well, it's been quite a journey, and congratulations again on completing your 10 years. But let's look at some of the financials, because for every fintech after scaling, the next question investors want to ask is your profitability, and your losses have widened. In your last reported numbers, they were seeing 154 crores. What is the path to turning profitable? How long before you do that?
Yeah, I think it's the idea is to continue to capture market share. I think we have been very focused on growing fast in the last 5 years or so.
Okay.
I think, and the results are showing. I think if you look at segments such as e-commerce, right? If we compare, we had a very good first quarter, right? So if you look at the numbers in e-commerce as compared to last year, the quarter-on-quarter growth is 61%. BFSI is 42%.
Yeah.
Cross-border is really doing well. It is 250%, right? And it is the high-margin segment of the business.
Yeah.
So I think the first half of the year has been pretty good, and I think we are on the path to profitability. And if we keep it up for another 2 quarters or so, I think we'll be pretty
in
close.
2 quarters. Okay. Speaking of high margin business, recently what we saw was that ban on real money gaming. What were your payment volumes there for that part of the business, and what sort of an impact has that ban had for a fintech like you?
Yeah, no, I think, see, we're a regulated entity, right?
Yeah.
And as a part of that, a lot of stringent due diligence has gone in, right? So our focus areas are, I think, e-commerce, cross-border, BFSI, travel and hospitality is pretty big, right? So I think it does not impact us, and I think the growth story remains pretty solid, because we look, as a company, we look to grow around 50-60% in a year, and I think we are on track, to get there.
Incidentally, the last time we spoke with Cash Free, there was this target of getting to 1,000 crores in revenues of FY25. I think now you've come in at about 640 crores, which is a good amount short, of that target. What really happened there, and when do you think you will get to that 1,000 crore mark?
Yeah, I think we're on track, because as of today, we have crossed. If you look at a monthly level, we are above that number. So I think this year, I think we should be able to.
So what will you end the year with now?
Something north of 1,000 is what we can say. I mean, let's look at the second half. I don't want to preempt things, but yeah, a lot of rate cuts have happened. The GST cuts have happened. So things looking up, I would say.
So what are you processing now? 80 billion annually at the moment, $80 billion, 800,000 businesses is what you're working with. At what pace will this grow? I mean, what will this translate into?
So I think, the good part is all the new businesses that start up in India, I think just look at the government data, around 25 to 30% of them sign up with Cash Free as of today. So that's a very good leading indicator of the kind of growth that we are seeing. So I think maybe in the future, in the next 3 or 4 years, we expect to have like a 20 to 25% market share in the market, which would be a very significant growth.
20 to 25 market share?
Yes.
In payments?
In payments, because if you look at the new entities that are coming in, around 25% of them do sign up with Cash Free. So yeah, maybe in the next 3 to 4 years, as these companies all become bigger, right, and those volumes will probably come to us, I think we'll be looking at 20 to 25% share of the market.
Let me quickly also ask you about the recent regulatory change in terms of payment aggregators. The final guidelines have now been released by the RBI. What kind of operational changes, if at all, will you have to make to be compliant?
Yeah. So the good part is it's made more digital and standardized. The key elements are around incorporating CKYC in the flow.
Yeah.
So we were doing similar flow. So it's not a big change, but it is a change, and we have time to comply with it.
By December?
By December end, right? So I think that's something we've already started working on. But to answer your question, CKYC and video KYC, VSIP as it's called, has to be added into the flows.
Okay, let me finally conclude by asking you, you finished 10 years in the business. You said you're going to be profitable shortly you're going to cross that 1,000 crore revenue mark. You seem to be hitting your mark. So is a public listing in the offing, and when would that be?
No, I think we are right now focused on market share, as I said, and I think maintaining that speed of innovation, right? Making sure we're ahead of the curve on payments. We have launched a lot of things at the GFF. So that's the focus, and I think IPO or going public is a matter of timing. I think we just want to be ready and then let the market decide, when the right time is. But focus remains on innovation and market share.
So no IPO plans on the horizon for now. All right, Raju, we'll leave it at that. Thank you so much for your time here today. It was a pleasure speaking with you.
It is Friday and it's time to take stock of all of the week's startup action. According to Venture Intelligence, this week saw 26 deals worth $739 million. Some of the notable deals include quick commerce company Zepto, which raised $450 million from Avenir Growth, Lightspeed Ventures, Gladebrook Capital, Stepstone Group, Nexus Venture Partners and others. Mobile entertainment platform Cuckoo FM got $85 million from GGV Capital, Vertex Crafton, IFC and others. E-bus maker Ika Mobility raised a little over $56 million from NIIF. That's not all. Wealth tech company Deserve raised $40 million from Premji Invest, Accel, Elevation Capital and Z47. And finally, prop tech startup House Easy got nearly $17 million from Axel India, Chirate Ventures and Antler India. According to Venture Intelligence, this year has seen a total of 749 deals worth $7.5 billion. And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
Hello and welcome to this Commodity Champions that we bring to you from NSE. Well, this year has been completely belonging to gold, silver, platinum, and perhaps some other alternate segments as well. Joining us is a very special panel here which will discuss on what the year has been and what is the next Samvat bringing to you in sense of these precious metal prices. Let me introduce you to Firoz Aziz from Anand Rathi, Lakshmi Iyer from Bajaj, and Kunal Shah from Nirmal Bank. I also extend a very warm welcome to all of our Access members who are joining us for this show as well. Well, going back, as I said, gold and silver clearly have been the flavor of this year. Gold is up nearly 60%, silver is up 80%, platinum up 90% in this year. When you look back at the year, it has been about geopolitical tensions, tariff concerns. It also had to do with the weakness in US dollar index. And more lately, it has been about US-China trade escalations. It also has been about the US government shutdown being prolonged as well. So enough and more reasons. And then on top of that, there is investment buying, retail buying, and Indian festival buying as well. Plenty to watch out for. Kunal, let me come to you first. What is your sense on gold now? Because all the targets that were being put out for 2026 have already been achieved, and then we are looking at some more gains from here.
Yeah, so this year was an extraordinary year. I mean, after tracking from last 20 years commodities, I have not seen this kind of returns coming from gold and silver in my 20 years of career. And I think the reasons, like you rightly pointed out, and I'd like to highlight the main reason. I think it's more of a fear concerns. It's the fear that things are not going to do well for the Western economies. Okay. The way the debt has been piling up, and in order to hedge themselves, each and every central banks and followed by that investors have been buying gold like left, right, center, and there's no tomorrow. One after another reason keeps coming, and that is driving. So recently, last $200, $300 rally is mainly because of what is going on with the US shutdown. Okay, so I believe that the rally has discounted most of the positive news, which is supposed to drive gold to a higher prices. Now gold is becoming like a consensus trade. If you ask anyone, what is the outlook on gold, and everyone will tell you the same story. So it can't just keep moving up on the same news. So I believe that gold going forward may likely to enter into consolidation, or may perhaps witness some profit taking. But the fundamental trend of gold is not likely to change, at least for next 2-3 years, till the debt crisis continues to remain over, till this tariff concerns, the inflationary expectation. So I believe that we are likely to enter in a scenario where either gold will consolidate, or it will gradually go down in a shorter term, or may witness some profit taking. But if you ask me from someone's point of view, we are not structurally bearish on gold. Okay. But whatever dips, what we see in next 2 months, 3 months time, due to any reasons, it can go down without any reason also, the way it has gone up. So those will be the time one should again start accumulating, not with the expectation of extraordinary return like we have seen this year. Maybe perhaps I would say 10-12% return. That would make more sense rather than expecting another 40-50% return. Now everyone is talking about $4,500, $5,000. I've seen reports indicating $12,000. So this is generally a time, where you have to be a little cautious about, rather than being very optimistic. So coming on media and explaining.
Stake, that is the profit. It has come in at 18,165 crore rupees. 94 crore rupees on a quarter-on-quarter basis. And if we look at the YOY number, the profit last year was 16,563 crore rupees. But do remember, on a quarter-on-quarter basis, it is looking lower because there was an element of Asian Paints stake sale in the quarter gone by to the tune of 8,924 crore rupees. So adjusting of that, if we look at the numbers, it is an uptick, or I would say a flattish number on a quarter-on-quarter basis, but higher on a YOY basis. We'll be getting the other numbers as well. Revenue have come in at 2.55 lakh crore rupees, which compares with 2.44 lakh crore rupees on a quarter-on-quarter basis. This is largely in line with estimates as well. So this number is higher both on a quarter-on-quarter and on a YOY basis. The EBITDA number, that is the important number to watch out for. The cons EBITDA margin has come in at 18% versus 16.9% on a YOY basis. So this is a number which is higher than what the street was working with, because the operating profit margin poll suggested a number of 17.7%. Here, the number has come in at 18%, which is higher. And if we look at the EBITDA number as well, that should flash for you. It was at 45,885 crore rupees. This is higher than estimates. It has come in at it compares with 44,511 crore rupees. So this number too has come in as a beat on all parameters. So it's a top-down beat as far as the consolidated picture is concerned. Now we'll have to look at the internals, because that would suggest where this beat has come in from. It was expected to come from oil to chemicals business and the retail business. So before I talk about oil to chemicals, Mangalam, tell us about retail business. How did it look this time around?
for so many quarters, the way retail has been beating street expectations, and it's not a small base. You're looking at almost 86,250 crores per quarter as a revenue, and that was the analyst estimate on Reliance Retail. Guess what the company's reported? 90,544 crores. This at a time when, the early onset of festive season, the uptick in consumer sentiment is likely to play out, and that's exactly has played out. And analyst estimates on retail revenue growth were between 13 to 15%. Even the most optimistic estimate was close to 16%. The company's reported an 18.5% growth in their retail revenue. So per quarter, on a quarterly basis, they've done nearly 90,544 crores. About 4 years ago, their annual revenue was 90,000 crores. So that's the kind of growth that we've seen here. And all of this has come at the at the time where they've calibrated some of their stores. Operational matrices have improved as well. So the EBITDA growth has come in at 16% here too. The analyst expectations were that of 14 to 15%. So both on the revenue front as well as the EBITDA front, Reliance Retail has definitely topped analyst expectations. And on just the back of this, we would see some, uptick on the stock, largely because retail is the valuation driver by the company. What we also understand from the internal details right now, grocery and fashion lifestyle, that has grown between 23 and 22% respectively. That's the fastest that we've seen. DMart, for instance, showed about 15.5% sort of growth. So that's a positive. And there was a favorable mix and improvement in store operating metrics. And they've added a fair number of stores right now. The retail store count is just shy of 20,000, stands at 19,821, which is a whopping 77.8 million square feet in terms of total operated retail area. So definitely retail business is the one which has topped estimates of a good performance.
That's the same case for Alto Chemicals business as well. By the way, on the consolidated numbers, it's a 6-quarter high EBITDA, the consolidated numbers that I'm talking about. So big beat coming in there. Retail, one of the reasons why we've seen that. The other reason definitely is Alto Chemicals business, because this time the EBITDA has grown by 21% on a YY basis and 3% on a sequential basis. This is a good number as far as the Alto Chemicals segment is concerned. Product cracks, they are up anywhere between 22 to 37% this time around, which has led to this growth. Polymer margins are up 5 to 8%, which has aided performance this time. And if we talk about the polyester chain delta, that has been lower, but that was something which was expected. They've added 236 outlets in GOBP, and it has taken the total number to 2,057 in terms of outlets. In fact, let's get in some expert opinion coming in. Naveen Kulkarni, Chief Investment Officer at Axis Securities, is joining us now. Naveen, good evening. Thank you so much for joining in. What do you make of the numbers? Consolidated numbers beat. Even retail and Alto Chemicals business have contributed significantly this time.
Yeah, so clearly the numbers are a beat on our expectations. So if I were to look at the O2C business, we were expecting an EBITDA of around 15,000 crores, so that's come in line with expectation. But again, this is a very, very healthy number considering we've seen a 20% YY growth and plus, let's say, around 4 to 5%, 4% around the QOQ growth. Important thing is the retail numbers. Retail, we were expecting around 6,500, 6,600 crores EBITDA. So that's come at around 6,800 crores. So that's clearly a beat of almost around 4 to 5%. So that's a good number to be looking at. The digital services, we are expecting around 19,000 crores. So that's in line with our expectations, 18,888. So that's not materially different. So overall, I would say that these numbers look quite good to me at this juncture. We'll, of course, have to look at the internals, like what is the ARPU for the telecom business, store-level profitability, so on and so forth. But overall, these numbers said to be a reasonable beat on the expectations.
Let's talk about the Alto Chemicals business as well, because here the EBITDA has come in at 5,000 crore rupees, which compares with 4,900 crore rupees. So, of course, it's flattish on a quarter-on-quarter basis, but the expectation was that there'll be a decline. So, that decline, of course, has been arrested. This is something that we were seeing in last couple of quarters. So, the trajectory from here on will be very important to track because volumes, they were higher, but pricing was under pressure. So, that continued to be an issue with the oil and gas business, but that seems to have been arrested this time around. In fact, Gurmeet Chadha is joining us now with his opinion on and expert advice on the earnings as well. Gurmeet, what did you make of the numbers?
Hi, good evening. I think from the first cut, numbers look impressive. I think pretty good to see that even the margins have gone up by more than 100 basis points. EBITDA for the company is almost 40,000 crores. And as you rightly said, even the petrochemical business, which has been a little soft for a couple of quarters, seems to have done well. I would obviously want to see more details on new age businesses, which is Jio and retail. And Reliance is a bellwether company. So between Reliance, HDFC and ICICI, we have 25% Nifty weight in terms of earnings coming in. So numbers coming good are extremely important. So it looks a beat, while the comparison may look a little flawed last year due to the windfall gains which have happened due to the refining. But if you compare and remove that one off, I think the numbers are looking pretty good. Sequential improvement as well as margin improvement.
The stock is about 8 to 10% away from its all-time high, and if that stock were to move higher on these numbers, then it would take the Nifty higher as well. The Nifty hit a fresh 52-week high in today's trading session itself, whereas Reliance, its largest component, is about 8 to 10% away from its 52-week high. Just a word on the retail business once again, at 90,544 crores is the highest ever quarterly revenue that the company has reported in the retail business. The last time they crossed that 90,000 crore mark in terms of retail revenue was in the third quarter of FY25, which was the festive season quarter. And now, as you can see the trend, it's inched higher, and more importantly, the third quarter of this year, which the quarter which we're currently in, looks even stronger on account of two counts. One, there is the GST rate cut which has happened, and as a result of which the sentiment booster would come in. And secondly, in this quarter, in the month of October itself, we have both Dussehra as well as Diwali. So the festive season cheer will continue. And my sense is that maybe, just maybe, in the third quarter itself, the magical number of 1 lakh crore in terms of revenue for the retail business per quarter would be, breached. And that's something we'll most definitely keep an eye out on. Will be a milestone. A couple of years ago, remember, Mukesh Ambani had said that they want Reliance Retail to be among the top 10 retailers of the world. And this would be a step in that direction. Deven Choksi, the MD of DR Choksi Finserv, also with us. Deven, strong numbers coming in, both oil to chemicals as well as the retail business.
Yes, absolutely. And at first glance, I think must say that the recovery in O2C business has definitely played a role, because up till last quarter, due to the volatility, I think the subdued performance was there also on the margin front in O2C, which possibly I think was expected this quarter, that I think it will show the recovery in a better mode. So that is where probably I think one is feeling confident. More importantly, as you were saying about the retail, I believe that I think these two consumer-facing businesses, the Jio platform and the retail business, they are likely to show distinctly higher performance in the third quarter as well as I think in the fourth quarter of the financial year. From whatever numbers I just now at a glance, I feel that I think likely to see significantly larger amount of performance in both these particular verticals.
So some commentary coming in from the management as well. They say fuel margins have recovered over previous years, led by middle distillate cracks, and this is something that we saw in the numbers as well. However, downstream chemicals continue to be impacted by overcapacity, and they say corrective steps by the industry stakeholders will help balance global downstream markets in the medium term. So that is something which will be very important to track as well. Additionally, they say they're happy with the progress they're making in their new growth engines, new energy, media, and consumer brands. Deven, so far we have not been accounting for the additional SOTP that will come in from the new energy business. A lot of it will come on stream in 2025 itself. They spoke about the entire solar value chain, battery chemicals, that giga factory in Jamnagar. Once it does come on stream, what kind of additional SOTP or valuation do you ascribe to that business?
Generally, I think what one sees is, I think, against the capex in this kind of businesses, in the following 2 years, that is in 8 quarters, after this capex program gets over in this new business, that is renewable segment, you could possibly experience the top line of somewhere around 1,25,000 to 1,50,000 crores. And I think going forward, the margins would be significantly higher. Difficult to pinpoint the number at this point of time, because I think we don't have full clarity about which product stream is going live. But on a thumb rule basis, if I have to see, I think this could be, I think, somewhere in the vicinity of around 35 to 40% as margin, because they are capturing the full value chain. So I think you are talking about 50,000-60,000 crore worth of EBITDA contribution eventually, maybe 8 quarters down the line. That's what I think our thumb rule calculation says. at this point of time, we can only add that much, since I think we don't have the program in place as to which product line is going to go first and otherwise.
Okay, on Reliance Jio, that's the telecom business. We don't have the revenue and the EBITDA picture. What they have disclosed is the digital service, which includes the entire wider ecosystem. So that's like, Jio Savan, the TV, etc., all those businesses. We look at Jio, the pure Jio services, which is basically a telecom connectivity on your phone, your broadband services, etc. Now, there are two metrics that are known right now. One is subscriber addition. It's come in at 506.4 million, an increase of 8.3 million on a quarter-on-quarter basis, and about 27 million on a year-on-year basis, largely in line with expectations. Remember, Mukesh Ambani at the AGM had spoken about how the subscriber base had crossed 500 million, as they spoke, and in this quarter at 506.4 million, in line with expectations. The average revenue per user too has inched up by 1.2%. to 211.4, bang in line with expectations. Remember, the ARPU for the company has only been inching up, bit by bit, 1.5%, because there hasn't been a broad tariff increase. What you are seeing is just people moving to a higher value plan, some migration, premiumization. That's been helping, because the entry-level plans have also been increased, or they've been abolished. So these are the two numbers: subscriber and ARPU. Reliance Jio subscribers crossed 500 million for the first time. They've come in at 506.4 million, in line with expectations, and ARPUs have gone up by 1.2%. The big trigger for Reliance Jio will be the IPO. Remember, in the AGM, they spoke about the IPO plan for the first half of 2026. And the question is, before the IPO, will we see one round of tariff increase? The last tariff increase happened in July of last year. So already about 15 months have passed, and there is a case to be made, because 15 months have passed, and plus it would add to the profitability metrics. Any tariff increase is a direct pass-through. Almost 90% of it flows through into the ARPUs and the profitability. So therefore, the street believes that there is a case for a tariff increase either towards the end of the year or early next year.
I'm looking at the retail business once again, and now that we have a little more detail, what's impressive is the scale of operating rationalization that they've done. They've been speaking about recalibrating some of their stores, which is reflecting in their margins, etc. as well. The EBITDA growth of 16%. Between last year and now, the overall store, the store area under retail has come down by 2%. So from 79.4 million square feet, it's come down to about 77.8 million square feet. The same period, the revenues actually increased by 18.6%. So what this basically means is revenue per square feet, which is an important metric for all the retail companies to track their operating performance, has increased by 21%. And that's the highest that we've seen across all the retail companies that have reported their numbers so far, including the likes of some of these value fashion retailers, value retailers, and the likes of DMart, etc. as well. So 21.1% growth in retail revenue per square foot only talks about the operating performance that the company has, reported. And alongside that as well, if you look at some of the premium foods as well, that has seen a 35% like-for-like growth. So if you look at any of those, premium formats, which includes the likes of Fresh Pick, etc., where they sell gourmet products, that's seen a 35% like-for-like growth. Large store formats have seen a 19% growth. Staples and HPC, or home and personal care, grew around 35 and 25% respectively. And we also saw packaged food grow by around 20%. JioMart, which has to, play in the quick commerce place, has operations extending across 5,000 pin codes in over 3,000 stores. How many stores does Blinkit have? 2,100 is their target for December. So obviously, they are scaling up their quick commerce business extremely fast as well. That's seen a 42% jump in deliveries and 200% jump year on year in average daily orders as well. And finally, just looking at the consumer business out there as well, there has been a big jump, almost an 18% jump in consumer electronics.
All right, so that's about the retail business. For the oil and gas business, coming back to it again, it's a smaller part compared to the other businesses, but this has seen a big turnaround in the last couple of quarters. That did see a decline in last 2 quarters because of lower volumes. This time again, the KG D6 volumes were lower, 8% lower on a YOY basis, but the pricing was higher. The company says this is something which would not continue going forward. So watch out for oil and gas business as well, and auto chemicals business, of course. The big earnings driver driver this time around. Let's get back to Naveen. Naveen, what's your take on the stock overall? It's valued at around 21.7 times FY27 earnings. Hasn't done much in last 1 year. Do you think it is waiting for more triggers to move higher? This is a performance which would lead to the up move that some of the investors are waiting for.
Yeah, so there is a possibility, right? So, see, if you look at the overall SOTP valuation for Reliance Industries, the O2C business is, let's say, valued at around 300 rupees. We have the retail business, which is valued at around 600 rupees. Geo platforms is, let's say, 550, and the other businesses, let's say, would be around 150, 200. So that will take up the valuation overall to closer to around 1,600 rupees, right? That's what most of the analysts are looking at, and that's been stable for a while now. The thing is that now we are reaching closer to the aspects where the O2C business has started to move up again. The retail business is starting to deliver a little better performance in terms of expectations. The growth has started to pick up. Last year was a little sluggish. And lastly, we are closer to a tariff hike. So the chances that in the next 12 months, Reliance Industries delivering a return of around 15 to 20% can be possible, in my opinion. So that's what how I will look at it, because most of the triggers that we were expecting are now closer to fruition.
Okay. Devin, what's your take on the stock?
Yes, I think the opportunity-wise, if you look at it, 1, 2, 3 points. I think first point here would be the Geo platform and digital services basically delivering the better performance because of the little improvement in the ARPU, of course, but at the same time, the value-added package in form of the enterprise as well as the home to fiber connections, I think, which is increasing. So that is where probably I think the Geo platform could show better performance. I wouldn't be surprised by the end of the financial year, that is in the fourth quarter, the current ARPU of 211 moves to somewhere in the close vicinity of around 220. So that would be, I think, the first key takeaway that one could see. Second is in the FMCG business, particularly in the retail segment, where their margins seems to be, I think, on a better side, and that's what is getting also reflected into the performance in the margin. So that, again, I think is likely to be a good catalyst because I think their growth is higher. And the third, there could be a tailwind, which would be, I think, your renewable segment. As the progress starts happening for implementation, though in the first phase, I think they are going to be consuming majority of the power that they'll be producing for the captive use. But I would still think that I think that would be the tailwind, and that's where probably I think one could see the higher growth. Having seen the stock not performing, reasonably good chances of, I think, 15 to 20% kind of an upside in the stock price from current levels.
15 to 20% upside. That would take it back to its all-time highs once again. Devin, thanks a lot for that. We also have Gurmeet. Gurmeet, Monday, what happens to the stock?
I think should react positively, but difficult to say in markets like this, Manglam. But as Devin said, near-term trigger is Geo platform listing. India is one unique market where we spend 5 lakh crores on mobile hardware, mobile phones, etc. And services and data services, it's just 2.5 lakh crores. So it's a unique market in the world. We can buy an iPhone for 1 lakh rupees, but are very sensitive about paying 500 rupees, so I think that will change. ARPU will go up, digital services up, value chain will happen. Also, I think retail is due for a big turnaround. This business eventually also will get monetized and see the valuations other retail businesses get. You made a fantastic point on the revenue per square feet. Now, even Avenue Supermart is at 35,000. So this is becoming very competitive now. And third, I think even on the new energy business, Manglam, which is again more medium term, is they're moving into BESS, which is battery energy and storage system. That TAM is also more than $20 billion. And if they start moving all the power consumption captive to, let's say, renewable, that would also entail significant savings. That can add 4, 5, 6,000 crores to the bottom line. So I think multiple triggers in place, some near term and some medium term. And I think Reliance has this typical trend of consolidating and then giving returns in a lumpy way and then again consolidating. I hope that the consolidation period is over.
Okay, well, that is something the investors in the stock would be expecting that as well. Gentlemen, thank you so much for joining us today this evening with your insights on what Reliance's numbers look like and the outlook going forward as well. I wish you all a very happy Diwali and season's greetings as well. All right. We'll wrap on the show with the synopsis of the numbers. Reliance reported good set of numbers. It was led by their auto chemicals and retail business. Overall revenues have come in at 2.55 lakh crore rupees. Consolidated EBITDA is at a 6-quarter high of 45,885 crore rupees. Margins at 18% are in line with estimates. Net profit has come in at 18,165 crore rupees, which is higher on a YY basis, lower sequentially because in the quarter gone by there was an element of stake sale in Asian Paints that accounted to other income of 8,900 crore rupees. Auto chemicals business EBITDA is higher, so is the retail business, which has done well this quarter. With that, we'll take your leave, but stay tuned to CNBC TV18 for more news and updates.
Special partner, Nuvama. Let's do it right.
Hello and welcome to this very special Diwali program. We thought of stepping out of the office and into one of the more newly minted mutual funds here in Mumbai. Well, it's nearly 2 years old, but I don't think you should draw a linear graph to how many years old the mutual fund is and, of course, the assets under management, which has been growing at a much faster rate. I'm in the offices of Helios Mutual Fund, and with me is the man I reckon for now is larger than life, and of course, I think more recognizable than the fund itself. Samir Arora, I think needs no introduction. Samir, great to have you with us here.
Thank you very much.
Happy Diwali.
Thank you. Happy Diwali.
I thought इस बार instead of asking you market क्या लगता है यहाँ से क्या what will the market look like? Let me take you back a little bit.
Okay.
From working in a mutual fund many years ago, many years ago, many moons ago, now to running a mutual fund, founding a mutual fund, how does it feel? How's the journey? How do you reflect?
As I say, nobody knows anything about anything beyond a point. So when I was in Alliance, first of all, how did I join Alliance? I had no idea. I applied for more than maybe 150 jobs at Wharton, and I got a call. And my mom was in US at that time and said that somebody from Alliance called. I said, I don't know which Alliance, who's Alliance. Then I checked in my list that I had applied to them. And then I got a job, and it was in New York. But then India opened up coincidentally around the same month when I started working. And Alliance was interested in setting up asset management companies in emerging markets. I happened to be an Indian guy who had recently joined them in investments. But I had to do a few things. I had to give up aspirations for a green card or live in US, because if I joined their India thing, I had to come back to India. So I did that. And so, yes, it's been
Well, let me take you back before that. You went to IIT Delhi, IIM Calcutta.
Yeah, I went to Wharton to do a PhD. And then I didn't complete it and got a job with Alliance. And so
imagine what a loss it is to students if it was Professor Samir Arora.
And what a loss to me it would have been if I had been a professor.
But why? Why didn't you pursue it?
First of all, PhD is extremely boring. And I did 2.5 years. So that's why I have a master's degree in finance from Wharton, which is like a consolation prize.
You've always been a slight non-conformist, if I can.
In terms of what?
I mean, just in terms of thinking. I mean, it's a.
I'm a Punjabi extrovert. That is all.
No, I mean, but you look at issues, and I found that many times over the many years that we've spoken. You bring some, it's an original line of thinking, and kind of, as someone put it to me, you're a first principles thinker. That's how.
Yeah, maybe. So I don't know. I'm happy if that is the thing. It's not that anybody plans it like that, but some become macro, some become micro. But the good thing is that I have never taken, even the Alliance days, it was not a job. It was life. And for many years, even Helios, I used to call it Alliance by mistake. Actually, when we started Helios, the name that we first thought, maybe jokingly, which would have been maybe even a good name, is Excellence. Ex-Alliance.
Excellent.
So even now, I don't consider it like a job. Of course, it's a job is the first part, but this is life and work and so much fun.
So much fun.
That you're willing to call it.
But does the I'm sorry to use that word for the lack of a better word, you can the non-conformist or non-conformism come in the way of, because if the market is going one way, it's not that necessarily you're going the other way.
No, I'm not going, and I'm
not for the sake of it in any case,
but to be contrarian.
Right.
No, not at all. We don't say that you have to be.
But has it cost you?
No.
Nothing.
You can see our performance.
Has been
No. Broadly, it works because of the rejecting model, which is actually a life model in terms of how you should go about things to narrow down the possibilities of anything.
Any sort of when you started out, while we were here in India earlier before you left, any change in your broad, fundamental thinking about markets, or has it remained kind of? It's evolved, obviously.
Yeah, it has evolved.
It keeps
in terms
evolving.
Of refining how we think and how we present. But the big picture I absorbed early that equity markets over time will beat everything else. So if over time they beat everything else, that means in a bad time, in theory, you should not run away from the market. You can run away from the stock or stocks. You can run away from fund managers, but you don't run away from the market, because if in the end we know that after every fall the market has regained or crossed its previous high, that means if during that fall you had done even a little bit of averaging,
then you don't get that benefit
then
from
you
the
would
market.
get. So in Alliance days, somebody asked me this question, because that time we used to do many more of these public events. So somebody said, I said, if you are angry with us at any time because of a fall, redeem from our fund and put anywhere else.
But don't stay away.
But don't stay away. Now people will feel, oh my God, what a noble fellow. And I immediately said, and if you're angry with other fund managers,
you can do this.
You redeem from them and give to us. So in the end, people will move around within that group, because if a market is really bad. So I went to one like a course kind of thing where there's like a 101 hour these. I think it was organized by CLSA. So it was for traders actually, and they said if you're sitting in a room and everybody's sitting and if you are long gold, and gold goes up, you don't get up and say yes, because now everybody thinks that you are long gold, therefore you are a gold bull. Now if gold corrects after 30 minutes, we're talking about traders, you will not sell.
Correct.
Because you have just
publicly expressed your...
So I see today, good thing is, today one of the bigger mutual fund companies has taken a position. I am bearish. I am on cash. Now market falls 10%. If they buy, people will say, you were bearish only for 10%. So these kind of things I have totally...
So you wisened up to that kind of... I mean,
I
basically...
realize that these positions are not to be taken publicly. You be ruthless and a little bit shameless. And in my room, office in Singapore, I have these Ganesh, and Lakshmi and all. And below that, I have got NAV. In letters, because by the 3 letter people buy their own initials. I bought NAV. NAV is the boss.
NAV is the boss at the end of the day.
As long as you are doing things properly, NAV is the boss.
But your theory
this
of
image, I will look better if I call myself 20-year view, all that I don't care.
But fundamentally, I mean, I think a friend of mine put it well. He said that you can't predict all moves on a chessboard.
Correct.
So you play positional chess. But positionally, the chess, in your mind, the analogy is for the market is that you remain bullish.
Forever,
you have to remain constructive. Otherwise,
there's so much data across the world. Even now, even if you look for US, the US returns for the last 25 years are 8% in dollar terms. So even the US has given you 12% in rupee returns.
Correct.
This is when US is very mature, been around 100 years. India has been giving over this very long term, in rupee terms, maybe 14, 15, and in dollar terms, about 11, 12 in dollar terms. Over 25 years, I'm saying.
But I mean, it puts us right on top in terms of...
No, what I'm saying is, therefore, 25. What I'm saying is, people say, can you make 10, 12% forever? Actually, the thumb rule is, whatever is the debt return or the government security return, I mean, government 10-year bond, you add 5, 6%, 4%, 5%. That is the thumb rule for what return you can get.
Yeah. Should we sit down and continue the conversation? Okay. Come. Samir, we've recounted the journey over the last 30 years. If you're to crystallize your learnings, like for the lack of a better word, 3 mantras that you live by, what would those be?
So I guess we are talking about my mantras in relation to equity markets, because that is my sort of role, job, whatever. So first, as I said, is that over time I have understood that equity markets do better than alternatives that you can have for your money. Mostly it means beating debt, maybe real estate, although these days it's not beating gold, but in general you can say that. And therefore investors or individuals and particularly young retail investors have to understand that equity markets over time do well, even though necessarily those same stocks may not do well. So in a bad phase, you may be angry or upset with the market, with the stocks or with the fund managers, but don't easily leave the market. And if you can, average a little. Why? Because if the markets, we have seen over 100 years that every time there's a fall, after a few years, the market is higher than what it was just before the fall.
Correct.
Because it's an all-time high, that means it has anyway covered all the falls. And therefore, if you could average in between,